is not a big number. Therefore, people are upset. And this was supposed to be the drug that is going to beat, they hoped would beat potentially, or be their main way of competing with tirzepatide or Mounjaro from Eli Lilly. The reality is, it's actually in this trial, it seems about in line with what tirzepatide gave us. So it's not that it's that bad. It's just these guys set themselves up a while ago saying 25% in obese, 20% or so in obese diabetics. Diabetics, for some reason, respond less. And of course, both of those have been lower. We had that one, the first one in the obesity population before Christmas, if you remember, and this one today. So, but is the share price down 10% or nearly 10%? Yeah, 9.7%. Is that fair? Who's to tell? This market is so awful with a sea of red everywhere that it's really difficult to parse out specific company thing or people are just miffed and they're selling.
That's really interesting because it's sea of red indeed. But taking a step back, when it comes to the reintroduction of legislation to modify the Inflation Reduction Act, how does large pharma sit amidst all of those?
Oh, just a small question there, right? No, I mean, look, at the end of the day, a lot of these folks are being told, you're going to have within that context, we've done a lot of analysis on this. Every year, 15 drugs are chosen to be negotiated for price by the Medicare plans. So, and it's possible that Novo's Wegovy is going to be part of one of those for 2026 or 2027. I can't remember exactly. That's what's happening with these guys. But a lot of pharma companies have said, look, we can manage this. It's within our realms to be able to cope. And so I think the market has generally accepted that the IRA isn't that bad for the pharma industry.
Sam, talk to us about kind of these generic weight loss drugs. And I guess I don't know if they're generic or if they're a different term, but
compounded is the phrase you're looking for. Yeah.
How effective are they, and how safe are they?
Well, I mean, look, the companies buy active from somebody, and they make it in the pharmacy, and they sell it to you, right? So it's usually a needle and a syringe, right? A needle and syringe and a vial. How safe are they? Who knows? No one's done trials on them. I think the FDA has to believe, and they do go through rigorous assessment, that the active that they're buying isn't going to kill people. And I don't think that there's been that much issue. But then at the end of the day, it's not the branded drug. It's not the drug that the manufacturers live and die by if there's an issue. So the reality is they should be out of the way anyway, because they can only sell what are essentially on-patent drugs, which they're not supposed to, right? If there's a shortage. And the FDA has said there's no shortage for either of the drugs from Novo or Lilly now. So those folks have to take them off the market.
Going back to this CagriSema, if I'm hoping I don't butcher the pronunciation.
Perfect.
CagriSema. Novo plans to seek regulatory approval in the first quarter of next year. What happens if it gets approved and if it doesn't?
Yeah, so look, these are all drugs that are in the evolution of the pipeline of the company. So Wegovy from Novo is often viewed as less impactful in terms of efficacy than Lilly's Mounjaro. So here comes Novo with something that matches it, with a slightly different mechanism that potentially can help you maintain a little bit more muscle rather than what you get with some of these earlier versions like Wegovy. So that's the idea, but they still have to prove that. And then, of course, there'll be another generation that will come, triple therapy from Lilly. And so basically what they're trying to do is to keep raising the bar, and raising the bar on efficacy and raising the bar on giving you the good weight loss, i.e. less muscle, more fat.
Sam, I think a lot of pharmaceutical observers like myself, we're just focused on this weight loss stuff, but what should we be focused on? I mean, what's the important stuff going on in your world these days?
Yeah, in my world, as you know, Paul, one of the issues that I think the United States is dealing with is a big push against science. Is it explicitly against science? I don't know, but there's cuts to NIH, PhD students are worried, postdocs are worried. And the US has been leading on science, and everyone's been worried about China taking over in a lot of scientific areas. This is not the way to deal if that's the way you want to go, if you want to be still in the lead. So there's that. Then there is the pressure on vaccines and the ups and downs of, do we believe in MMR vaccination for kids, or don't we believe in measles, rubella, and etc. I can't remember the other one, mumps, sorry, vaccinations. And of course, you see that the cases have now reached 222 as of last Friday in the US of measles. These are the things that I think the US needs to grapple with. Is it for science or anti-science, or just in a period of cost cutting, or are we going to be, and are we going to be behind vaccines, which are the best way to protect people and reduce healthcare costs?
20 seconds left, Sam. What are you drinking these days?
Oh, let's see. This weekend, it was whiskey actually this weekend with haggis. I know it's the wrong time of year. I know it's the wrong time of year, but in France it doesn't really matter because they're not Scottish, right?
Right.
So I'm trying to introduce my French friends to haggis and whiskey.
Very good. Sam Fazeli, Director of Research for Global
Good luck
Industry,
with
Senior
that.
Pharmaceuticals
The
Analyst.
French and haggis?
Yes. He lives on this farm in France. I don't know what's going on. I mean, it goes back and forth. It's a whole story. I don't want to get into it. S&P 500 off 2%. NASDAQ off 3.4%. Yields coming in sharply. 10-year Treasury 4.21%. This is Bloomberg. Good morning.
You're listening to Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, we have Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our Bloomberg Interactive Broker Studio. We're streaming live on YouTube, so head over to youtube.com/Bloomberg Podcast Live, and that's where you'll find us. S&P down 2%, but the NASDAQ down 3.6%. So tough time in the world of technology. Speaking of tech, Let's check out with Mandeep Singh, Senior Tech Analyst for Bloomberg Intelligence. He's now over in our London office, Queen Victoria Street in the city of London. Mandeep, let's start with TikTok here. President Trump was out over the weekend saying, I think he's playing investment banker here, M&A banker. There may be 4 bidders in play for TikTok. Don't we have to have something that has to happen with TikTok like sometime in the next month or so?
Yeah, I mean, look, he extended the kind of the ban for the app, and it looks like here he's saying it will be a different sort of structure when it comes to a deal for TikTok. Not an outright sale, but sort of licensing the content, and the companies that are in play range from private equity to even a company like Perplexity, and Alexis Ohanian, the co-founder of Reddit, is also being talked about. So it's not very clear, how a sale would happen, because obviously, the Chinese company wants to keep a stake, and at the same time, pacify the concern they have around the security of the data here in the U.S.
Mandeep, what about the 4 buyers that Trump is said to be negotiating with? How are those going to play out? Are they serious contenders?
Yeah, they are. So that's where I mentioned, Perplexity, Reddit, and there's talks about private equity. And look, I don't think any of the hyperscalers are in play here in terms of buying Reddit. So it's really somebody outside a consortium, whether it's, including private equity or not, it remains to be seen. But any valuation here, I mean, an outright sale would be around 35 to 40 billion. We don't think that's the way things are headed, at least for now. But as I said, there was a licensing arrangement that was talked about as a potential way to, sell part of the assets here for TikTok US.
Mandeep, would there be a equity stake for the U.S. government somehow? Is that something that could happen?
I would be very surprised if that's the case. There have been talks about a sovereign entity here, a fund that's created. But I mean, I would be very surprised if this is the first transaction they end up doing in terms of buying a stake in TikTok.
What about extending a deadline again? Is that a possibility you see playing out?
Possibly, because when something has passed in the Congress, which was the case with the TikTok ban, and the fact that a new administration comes in, kind of buys some time here, and then they don't really have a good deal to say, okay, the concerns have gone away. And to my mind, this is not an easy deal, even though, the administration is actively involved in coming up with a resolution. So the extension of deal could be a very likely scenario here, given the complexity of the deal.
Mandeep, as we like to characterize it, the tech-heavy NASDAQ is down about 13% from its recent high, suggesting that investors are very concerned about the tech sector. But I saw that Taiwan semiconductor sales quickened in the first 2 months of this year, suggesting maybe some good buying out there continued for AI. What are the fundamentals out there in terms of chips and kind of this AI spend cycle?
Yeah, look, this has been consistent with their monthly sales data in the last few months. So you're right. I think what we can extrapolate here is that the AI momentum remains strong, especially for things that were undersupplied like the GPUs. And look, TSMC's top 2 customers are Apple and NVIDIA. So I think this bodes well for NVIDIA. Not so sure still about Apple refresh cycle. And that's where the smartphone demand continues to be something that investors are concerned about in terms of a refresh cycle. But clearly, 40% growth for TSMC looks solid for NVIDIA demand, at least for now.
All right, so you're at the Bloomberg headquarters in London, right, Mandeep?
Yeah.
Okay, after work today, you're going to walk over across the street to the old Watling pub. Mention my name, they'll take care of you.
All right. Will do, Paul.
That's the way you go. They know me over there. Mandeep Singh, Senior Tech Analyst for Bloomberg Intelligence. He's over there. He heads up our global tech franchise there. And we've got analysts based in North America, including Silicon Valley. We've got them over there in London covering the technology scene there, and as well a big group over in Asia covering obviously the key area of the world there in Asia for global technology. Mandeep, he heads that up, so we'll get a few minutes of his time here. It'd be interesting to see TikTok. Are you a TikTok person, Isabel?
I'm not. I'm an old person, old quote unquote person.
Yeah, in this room, you gotta.
Right. I watch my TikTok videos on Instagram.
All right, very good. So, but something's got to happen with TikTok soon, and I can't imagine it would be outright banned here. So we'll stay on top of that. All right, for our listeners in the U.S., a reminder: you can listen to us via satellite radio on Sirius XM channel 121. Access the world's only global audio business network, coast to coast, 24 hours a day. Bloomberg Radio on Sirius XM channel 121 is presented by Oracle. Stay tuned for the latest market news and industry research. We got a lot more coming up here. S&P 500 off 2%. NASDAQ off 3.75%. We are plumbing the session lows here, so no support here yet for the equity markets. Yields come in. 10-year Treasury yields in 10 basis points. We're now at 4.19% here. WTI crude oil for Alex Steele. We're going to touch base with her in just a moment. $66 a barrel. This is Bloomberg.
This is Bloomberg Intelligence with Alex Steele and Paul Sweeney.
The real outperformance has been in U.S. corporate high yield.
Are the companies lean enough? Have they trimmed all the fat?
The semiconductor business is a really cyclical business.
Breaking market headlines and corporate news from across the globe.
Do investors like the M&A that we've seen?
These are two big-time blue-chip companies.
The window between the peak and cut changing super fast.
Bloomberg Intelligence with Alex Steele and Paul Sweeney on Bloomberg Radio.
All right, coming up in this hour, we're going to check in with Alex Steele. She is in Houston, Texas at the CERAWeek Energy Conference. She's going to be interviewing Baker Hughes CEO Lorenzo Simonelli. That'll be in just a couple of minutes, so stay tuned for that. Nathan Dean will also join us, Bloomberg Intelligence Senior Policy Analyst. He's got to help us make sense of what's happening down there in D.C. as we think about tariffs, as we think about a government potential shutdown. Tim Urbanowitz, he's the Chief Investment Strategist at Innovative Capital Management. He's going to join us to give us his thoughts on these markets. Ben Elliott, Bloomberg Intelligence Consumer Finance Analyst, get this rocket to buy real estate broker Redfin for $1.75 billion. Didn't see that coming. But we'll get the latest reporting there. But first, let's go to John Tucker and get a Bloomberg Business Flash.
Lots of red on the screen. Recession fears growing with the trade war heating up. The NASDAQ 100 plunging right now. Actually had to resize my screen to capture this. It was down about 12% from its record high. Right now down 11.8%. So that does fit the definition, our definition of correction. The Mag 7 stocks leading the declines. You have Apple down over 5%, Nvidia down 5.3%, Microsoft down over 3%, Tesla down 8.5% in today's trading. And investors are putting money into the safety of U.S. Treasuries. The 10-year right now is down 9 basis points as they bid up the price. Right now, the yield 4.20%. And Andrew Sheets at Morgan Stanley says the U.S. may now see a slowdown sooner than expected.
We are effectively bringing forward some of the slower growth and stickier inflation that we saw kind of happening later in the year and into 2026. We're bringing that forward in 2025.
And as you mentioned, Paul, deal news, Rocket buying Redfin, all-stock deal with Rocket paying $12.50 per Redfin shares. And right now, Redfin shares are up over 72%. S&P 500 down 2%, a decline of 116 points. 56.54 in the index right now. The Dow Jones Industrial Average is down 340 points. The NASDAQ 100 down 650 points. That is a decline of 3.2%. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
John Tucker, thank you so much. We appreciate that. Isabel Lee sitting in for Alex Steele. I'm Paul Sweeney. We're live here in our New York Interactive Broker Studio, streaming live on YouTube. Let's head down to Houston, Texas right now to our very own Alex Steele. She's going to be speaking with Baker Hughes CEO Lorenzo Simonelli. Alex, what do you have for us?
All right, thank you so much, Paul. It's right, Lorenzo Simonelli is chairman and also president and CEO of Baker Hughes. Lorenzo, it's good to see you. Thanks for joining.
Alex, great to see you as well.
You're one of the premier oil services providers in the entire world. Everyone is worried about a recession today. Are you seeing any signs of slowdown?
There's clearly a lot of volatility happening in the marketplace, and we've seen that last week and also today. At this moment in time, if you look at the macro trends, there are still tailwinds that point to no recession. The consumer's resilient, and from an activity level, as we said at the beginning of the year, we continue to see a positive outlook for Baker Hughes as an energy technology company.
And that has not changed in the last 2 months?
It has not changed, and again, we monitor the situation on a daily basis. I think, again, you've got the macro aspects from an energy perspective that are clear. Energy demand is increasing, also here in the United States. Natural gas is a huge opportunity, and we've got a huge opportunity from an export perspective of LNG. So when you look at a company like Baker Hughes, we see a lot of positive trends that go beyond just 2025, and you'll always have volatility, but again, nothing that we're worried about at this stage.
And there are lots of sections, as you mentioned, right? There's the oil services demand side. You also make LNG export facilities, so you have a lot of different hands in a lot of different things. So there's that part of it too.
Correct. We're less cyclical, for sure.
The issue, though, is the tariff situation, which it would seem like you're very exposed to. If we get aluminum, steel, and copper tariffs, if we get them on Wednesday, 25%, does that affect the pipe you're going to put in the ground?
It really varies, and the tariffs are complicated, and you need to go into the full supply chain and also end-use perspective. We at Baker Hughes have a very diversified supply chain. We're not the original maker of the aluminum or the steel.
Right.
What we're providing is equipment and services, and we're also providing modules. And we have a versatile supply chain that enables us to, both from the US as well as from internationally and from an export and import perspective, be able to be diversified and move things around. So as we look at it today, we anticipate that the tariffs will have negligible impact on Baker Hughes, and we're continuing to assess it on a daily basis.
So basically the supplier might increase prices if they need to, but you can manage it or pass it on?
We can manage it because also we can change supplier. Also, we can work with the end customer with regards to efficiencies and changes. And so through a number of different scenarios, we look to manage that and work collaboratively with the end customer.
The other big macro tailwind, actually, is drill, baby, drill. That has been a cornerstone of the Trump administration. Where you sit, are producers drill, baby, drilling?
What you're seeing from this administration is clearly an energy renaissance in the United States. And when you look at the opportunity ahead, it is for increased production, both on the oil side, the natural gas side. When you look at the aspect of the operators, they're going to continue to be that capital disciplined. They're going to look at the financial returns, and we haven't seen any changes to date in the outlook of that. We do think U.S. production will go up, driven predominantly by efficiencies and technology enhancements that we're providing to the sector. And then we see a big opportunity with natural gas, and also as you look at natural gas pricing remaining to be resilient with the opportunity of the LNG exports coming online.
But you don't see the world where we have 1 million barrels of growth a year like we saw in 2023. Do you see a more muted growth profile for oil in the U.S.?
It's going to go down to the fundamentals of the demand and supply, and also the returns from a shareholder perspective. And I think companies have worked on their capital discipline, so they're going to make sure that that is all in balance, as well as meeting the needs from a societal perspective. So I think it's going to be more muted than 1 million barrels. You are going to see continued production enhancements and efficiencies, and people will look at the price of oil on a regular basis and then decide accordingly what's best for their shareholders.
Yeah, and a tough tape for oil price today, to be sure. So let's get to the other potential tailwind, and that is AI and data center build out. How can Baker Hughes play in that space?
Well, it's a great opportunity for Baker Hughes, and when we think about the grid instability and also the huge increase in demand for power generation, It really fits into off-grid applications where we can provide our industrial gas turbines, we can provide our geothermal technology, we can provide a number of factors to enable the hyperscalers to go and produce the data centers immediately. We've already seen an increase in activity. You'll have seen an announcement we made last week with Frontera with regards to data centers inclusive of CCS. And it's not just a phenomena within the United States. Clearly here it's spoken about every day, but also globally. We're seeing increased activity within other areas such as the Middle East, such as Asia, relative to data center demand. And generative AI, we know, has a huge energy consumption, and that's what we're servicing.
And that also comes from your industrial and energy technology business, hence the diversified part we were talking about earlier, making it a little less cyclical. In terms of that, can you also become a services helper for power demand? Like not just here's my gas turbine, but I'm also going to be a services provider for this data center in terms of power?
We're looking at different commercial models and actually working in consortiums. And I think there's going to be different models that different end users require. In some cases, we will be with a developer, we will be with a financier, and it will be a turnkey solution that's provided to a data center operator. In other cases, they'll just want the equipment and they'll want to have the power turned on. So we are, like in LNG, able to have the different model that's required for the end user. And that's something at Baker Hughes we think is very important. We've got to be able to meet the different requirements with the capabilities we have. So we're looking at a variety of options right now.
I'm glad you brought up LNG again. Do you expect, if there is an end to the war in Ukraine, are you guys at the table thinking about a lot more Russian gas coming into Europe and then displacing flows that we see elsewhere?
I think we're confident that flows have redirected themselves already. And
to account for Russian gas?
Well, yes, because the Russian gas has been flowing elsewhere as well. So there's an aspect of a demand that's increasing, and there's going to be a requirement for incremental natural gas and LNG. As we look out to 2030, we've always said there needs to be an installed base capacity of 800 million tons per annum. That is very much taking place, and we see the incremental build now happening in 25, 26, and 27 with the pause being lifted in the United States. So we don't see the aspect of Russian gas coming back as differing the outlook that we had previously, because it's been there, it's just been elsewhere. And the flows will always change according to what's available.
Would Russia, though, become an opportunity, a business opportunity for you?
Let's wait and see.
Okay.
We'll monitor the situation relative to global sanctions, also the rule of law, and also from a society perspective and values within Baker Hughes. So we'll monitor the situation.
One last question. Oil price weakness, does it persist? And what do you think is actually behind that right now?
We live in a world where on a daily basis there's a lot of different news, and so there is volatility in the marketplace. I think give it some time. We've got to look at the next 6 to 8 weeks, and I think that's when you start to really assess, are there going to be changes going forward. Right now, demand is strong. We know that the outlook for demand is strong, and I think we're just going through some volatile times. And at Baker Hughes, I can tell you, I don't look at the oil price daily. It's really not a consideration relative to the investments we make longer term, and also the way in which we run the business so that we can safeguard the supply and the end product for our customers.
They always say that. They never look at the oil price. All right, Lorenzo, thanks a lot. I really appreciate it. Lorenzo Simonelli, Chairman, President, and CEO of Baker Hughes. Paul, back to you.
All right, Alex, thank you so much. We appreciate that. That's Alex Steele speaking with Baker Hughes CEO Lorenzo Simonelli at CERAWeek. That is where all the energy honchos globally get together in Houston. It's their big conference every year. Looking at WTI crude oil, it's off 50 cents here today, sitting right there, $66.50 per barrel. Let's get to Washington, D.C., get the latest on what's happening there. Almost our daily check-in with Nathan Dean, because he's a senior policy analyst at Bloomberg Intelligence based down there in Houston. Nathan, let's sidestep tariffs for the moment. Let's talk about keeping this government open. Can you give us a guideline? Where are we and what do we need to pay attention to?
Yeah, so over the weekend, we saw House Speaker Mike Johnson and the House Republicans release a 99-page bill. It is a 6-month continuing resolution that would keep the government open until September 30th. There's a little bit of policy writers in this bill. There's a lot of talk about a clean CR, aka just keep the funding going. This is a cleanish CR. There's additional funding in here for immigration and for defense, but a lot of the more policy writers that Republican or Democrats had feared would be in there isn't in there. Now the challenge is that Speaker Johnson wants to have a vote tomorrow night, Tuesday night. He can only afford to lose one. And I wouldn't be surprised if this bill doesn't move forward, just because that's a quick time frame to try and get the entire Republican caucus on board. Now, if this bill doesn't move forward, I look for the Senate to then just call for a 1-month extension, and we'll have this interview sometime next month. If the bill does go forward, well, then it's up to the Senate Democrats, because remember, this isn't going through reconciliation. You need to have 8, most likely 7 or 8 Democrats to go with this to overcome a filibuster. And this is the challenge of, will we get a shutdown or will we not? I don't think we'll get a shutdown. I don't really think there's much appetite for shutdowns on either party at the moment. So either they'll get a deal done, or I think more likely they'll kick the can 1 month, and we'll talk about this in April.
Alike. Seems like most Democrats and Republicans alike have various concerns about the bill. Can you touch on the main points of one party and the other?
Yeah, absolutely. So, on the Republican side, obviously this is a clean-ish bill, which doesn't really give them exactly all they want. I mean, there's additional, the Republicans want lot more funds for the Department of Defense. They want a lot more funds for immigration. This is just a small subset of that. On the Democratic side, well, look, you're not going to be voting for something that actually increases the budget for immigration and for deportation strategies. So the Democrats in particular aren't really, want to go along with regardless. There's a lot of anger on the Democratic Party in terms of DOGE at the moment. And, there is some language in here that gives additional flexibility to the White House in terms of spending, not to the point where it would be controversial, I think, but enough to that the Democrats won't want to get on board. So, but again, the idea here is that shutdowns usually occur when both parties feel that their position is politically advantageous, and I'm just not getting the sense from the Republicans or the Democrats at the moment. If there is a shutdown, remember, the Republican agenda in the House essentially gets delayed until the government reopens. A lot of President Trump's agenda will be delayed, and the Democrats historically have viewed shutdowns as bad for politics. So I think for those folks who want to see if they can go visit the pandas at the zoo this weekend, chances are you're going to be able to do so.
All right. But if there were a shutdown, would the blame go on the Republicans since they control both chambers?
It depends. I mean, obviously, if a shutdown occurs, and look, maybe Congress comes up with a deal, and President Trump at the last moment says, no, I don't want to sign this, therefore there's a shutdown, then I think the Republicans would get some of the blame. If it's a clean-ish CR, and the question is, are you going to pass this, or are you going to shut the government down, the Democrats could potentially get a blame. But here it is, we're in March of 2025, and the election isn't until November of 2026. So even though there could be a political price to pay, there's so much time on the going forward that I'm not sure either party is really going to pay that much of a political price. So we'll see what happens. But again, I'm not exactly sure that now's the time for a shutdown. I think that threat for a shutdown could come later this year or the beginning of next year when both parties shore up their positions.
How much of the anxiety over the shutdown could bleed into the debt ceiling debate, which will take place likely in the summer?
That's a great question because, from the market impact, government shutdowns really don't have all that much impact. If you go back to the 35-day shutdown that occurred under the Trump administration, the first one, you saw the markets dip and then subsequently rose above to where they even began the shutdown. But there's a lot of angst, though, when it comes to shutdowns because can this bleed into the debt ceiling debate that's going to come probably in June or July? And the answer is obviously, because if government can't pass a funding bill, how are they going to pass something like the debt ceiling? Now, we have an 80% chance the debt ceiling debate is resolved. We don't think either party wants to see a debt ceiling crisis take place this summer, but you still have to ask the question because the way this works is there's a lot of negative headlines, a lot of headline risk that leads up to a solution, then the solution breaks down. Again, a lot of negative headlines, but ultimately a resolution. And I think a lot of the angst with shutdowns bleeds into this debt ceiling debate that we're going to see this summer.
Nathan, thank you so much. Always appreciate getting a few minutes of your time as we try to figure out what's going on down in Washington, D.C. Lots happening on a daily basis. Nathan Dean, Senior Policy Analyst for Bloomberg Intelligence. He's down there in Washington, D.C., and such value to our Bloomberg clients to figure out what's going on in D.C. and how it impacts their investments. A lot more coming up. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker, the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Oracle. Attention growing businesses, Oracle is offering to cut your current cloud bill in half if you move to Oracle Cloud Infrastructure. This is for new U.S. customers with minimum financial commitment. The offer ends March 31st. See if your company qualifies at oracle.com/Bloomberg. Well, worries about the economy and the Trump administration tariffs sending stocks farther from their records set just last month. More economists expressing recession fears. You also had a widely followed collection of real-time indicators. These are compiled by the Federal Reserve Bank of Atlanta. That suggests the economy may already be shrinking. Some of the individual shares, NVIDIA, that is falling another 5%. So this brings its loss for the year so far to 20%. Tesla's first quarter and 2025 delivery estimates, as well as its price target, all being lowered by analysts at UBS. They say they see about a 30% downside to the company's consensus earnings expectations for the year. Right now, you have shares of Tesla. They are down 8.5%, adding to the sell-off in the NASDAQ 100. It is down from its peak right now close to 12%, so that is correction territory. The share of households expecting a worse financial situation 1 year from now rising to 27.4%. That is the highest level since November 2023. This is according to the New York Fed survey of consumer expectations. We did get that one just this morning. And as we look at the major indexes, the S&P 500 down 114 points. That's down 2%. The Dow down 357 points. The NASDAQ 100, this is a 3% slide in today's trading, down 614 points. Somebody asked me about Bitcoin. Bitcoin down right now 3.5%, right around 80,000. But since its peak, Bitcoin down 25%. It's lost a quarter of its value since its peak. We check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
John, so Tesla's down 40%, 40% just this year. Do you think Elon cares?
No.
Yeah.
Well, let me put it this way. I haven't seen any indication from him that
I haven't
it's
either.
a major concern.
I haven't either. Very interesting here. That's real money there. And again, so got a lot of volatility is the name of the game here in marketplaces, and we know that markets do not like volatility. So we see that in the price action here. Let's see what the pros are doing here. Tim Urbanowitz, Chief Investment Strategist at Innovator Capital Management. He's somewhere out there in Chicago, one of my favorite towns, absolutely. Hey, Tim, talk to us about these markets here. You talk to your clients. How do you, is it hand-holding? What are the conversations these days?
Well, Paul, there's a lot of jitters out there, and every conversation that we are having right now all comes back to the question of what's going to be the net impact of all these different policies from the Trump administration. And, right now, I think there's this mindset shift that, everybody was really excited about the pro-business policies of the Trump administration. Now, I think it's becoming pretty clear that Trump realizes he needs to slow this economy down if he wants to get interest rates and inflation under control. And there's really two ways that he's going to be able to do that. One is pulling back in government spending, and I think you're seeing that through Doge, and then also with the tariffs. Tariffs, we view that as really a tax on the consumer that is going to put additional pressure on consumers that are already under stress. And I think what he's going for here is long-term gain with the fact that we know there's going to be continued short-term pain, and he's okay with that. You're not going to get the approval of the everyday American if the stock market's going up. He touted that the first time constantly. That's not the case this time. He's not talking about it at all. And I think it really comes back to that realization that if we are going to get interest rates down, if we are going to get inflation under control, there has to be some pain that comes along with that. And I think that's what you're seeing right now.
In your note, you mentioned that the majority of investors were not taking Trump seriously when it comes to tariffs. So now it seems like he's serious, and the velocity of the shift from excitement to fear has been swift. How are you trading this market? Where do you hedge?
Well, really, and the bulk of what we do is risk management, at all times. And if you look at the flows that we've seen here recently in the ETF market, we've seen a tremendous amount of inflows here to the tune of about $1 billion over the last week and a half into buffered ETF strategies. And really what these do is they give you a known level of downside protection on an index like the S&P 500 ETF or the NASDAQ with known upside exposure. And I think right now we look at all the uncertainty that is out there, the fact that, on the flip of a switch, Trump could come out there, pull back tariffs, and this market could rip higher, or you could continue to see this tit for tat. There's so much uncertainty, and really what these strategies do, and why I think so many investors are gravitating towards these, is that they do help remove a lot of that uncertainty. They keep you invested, which is incredibly important, especially right now, but they also are going to help you really hedge out and mute a lot of this volatility that we're seeing, coming from the Trump administration.
Talk to us about the fixed income market here. We've got big moves today here in the bond market. Treasuries, 10-year Treasury up 20 basis points, kicking the yield down to like 4.22% here. Where's opportunity, if anywhere, in the fixed income market?
Well, Paul, I think we're starting to get a little more bullish here. This has been an area we've been very bearish on for the last couple of years, simply for the fact that, most advisors that we're working with are using these as a risk management tool, right? And we continue to see bond yields and equity prices moving in the same direction. You don't have that diversification that most advisors are going for with that. I think with some of the changes that we've seen here recently, there's starting to become more opportunities. If you look at bond yields and inflation really over the last several years, they've followed this government deficit as a percentage of GDP almost in lockstep with one another. So as we see more and more, hopefully more success from the Department of Government Efficiency, from the Trump administration, being able to pull back that spending, I think that gives us more hope that we can see, interest rates start to work, or that inverse correlation start to work a little bit better, that interest rates can come down. And again, a slowing economy too, that should help us out on the longer end of the yield curve. So I still do think it's a risk with the environment that we're in right now, with core inflation still elevated. But I think for the first time in a couple of years, we're starting to see signs that the long to intermediate duration bond trade could be showing some signs of life here.
When it comes to inflation, we have Mohamed El-Arian in an opinion piece today saying that the Fed's insistence on keeping inflation to 2% may be limiting its flexibility. Where do you stand on that, on your inflation views?
Well, I don't think the Fed is going to move on it. So I think it's a fun thing to debate. I don't necessarily know if it helps investors in the short term. And look, you look back in the history of the U.S., any time that we have seen core inflation starting off north of 5% or above, never before have we had a situation where we've gotten back down to 2% without a recessionary hit to the labor market coming. And, what we've heard for the last several years, even from a lot of our, advisor clients, is that this time is different. And look, I hope it is. I hope this time is different, where we can get back down to that 2% target without a huge hit to the labor market taking place. But we don't want to just go out there and position our portfolios like that's going to be the case, because it would, in fact, be a unicorn event. And I think, a lot of this comes back down to how strong the labor market has been over the last couple of years. Wage growth still running north of, well north of 4%. That's not conducive with a 2% inflation target at all. And, I think what gives me a little bit of hope that we are going to get back down there, within the next year or so now, is if you look at all the layoffs that are taking place within the government. Over the last couple of years, you've had about a quarter of all new jobs that have been created by the government. We're starting to pull that back. You're starting to see a lot of those layoffs, which I've seen recent estimates in the 300 to 500,000 range. Those are going to be jobs that are going to be replaced in the private sector. So there's going to be a lot more supply coming to market, which I'm hopeful that will really soften things up to where we need to be.
Tim, thank you so much for joining us. Tim Urbanowitz, Chief Investment Strategist from Innovator Capital Management. Nice M&A trade on the tape today in the financial services business. Rocket to buy real estate broker Redfin for $1.75 billion. Let's get some details on that. Ben Elliott, Bloomberg Intelligence Consumer Finance Analyst, joins us here. Ben, talk to us about this deal. Do you like this deal? The Redfin shareholders certainly like it.
Yeah, I don't think the Rocket shareholders like it quite as much. I think when you first look at it, you see the headline, 50 million users a month. Sounds like a great way to acquire customers, but if you dive into it, Redfin is doing mostly real estate brokerage as a business, which is earning commissions from buying and selling homes from their agents, and that's not Rocket's core business. So it begs the question, how will they really monetize this, and did they pay too high of a premium?
Does this deal make sense to you? Like, why would Rocket be interested in Redfin?
Yeah, so Rocket is interested in anything that increases the size of their funnel, as they like to say, and drives more people to the mortgage platform. That's really where they're going to make their money off this deal. If they can convert 50 million monthly users into a couple 100,000 mortgage customers, that could end up being a pretty good deal for them. But the question is, what do they do with the brokerage business, which is going to kind of be sort of ancillary to the core mortgage business. And then also, if you look at Redfin, they've been a little distressed lately. They've had some restructurings in 2024. They had a deeper cut in 2025. If you look out at sort of the macroeconomic outlook, is this the right time to be buying a platform like this? I think there are a lot of questions around this, which is why the market's sort of dubious of the deal.
Yeah, Rocket stops off about 14%. Redfin up about 70%, 70 here. Talk to us about valuation there. How's it shake out for you?
Look, so the valuation of a mortgage platform, right? It's inherently a cyclical business. So, historically, M&A to grow the mortgage platform has not made a lot of sense. Rocket can usually get a better ROI by investing in its own tech platform, trying to drive the business that way. But increasingly they're trying to bring AI to bear, and I think the value here at Redfin is going to be the data. They're going to have a huge amount of data on just existing homes, customer behavior, who has an intent to buy, and that I think over the long run is going to enhance the platform and Rocket's ability to convert someone into a Rocket Mortgage customer. And the question is just whether, paying a 63% premium to Redfin's prior close is going to be the right price for the deal.
All right, very good. Appreciate that. Ben Elliott, Bloomberg Intelligence and Consumer Finance Analyst. Again, an M&A trade in the online real estate business. Rocket to buy Redfin for $1.75 billion. Again, Redfin shares up about 70%, 70. Rocket down about 14%. People concerned about that valuation, which is often what we see. But I like them because they give you a good sense of what your house is worth. And you drive by and you see a house, you pump it in there into the Google, and Redfin pops back, this house is worth X.
It's also interesting because Rocket posted its first annual loss as a public company. So I'm curious, maybe this is one of their ways to move past that. But yes, I love looking at homes especially I can't afford, and that's my favorite pastime.
Exactly. All right, we're going to have more coming up here. Looking at this market, sell-off continues here for sure. Coming up, BNEF Antoine Wagner-Jones, BNEF Head of Trade and Supply Chains, on the BNEF theme here. Energy enters choppy waters as trade barriers surge, and he'll be in our studio giving us the latest on the energy space. This is Bloomberg.
Markets, headlines, and breaking news 24 hours a day at Bloomberg.com, Bloomberg Television, and the Bloomberg Business app. This is a Bloomberg Business Flash.
And I'm John Tucker in the Bloomberg Newsroom with this Bloomberg Business Flash. We're being brought to you by Commonwealth, supporting more than 2,000 independent financial advisors with a 2-to-1 advisor-to-staff ratio. Small firm attentiveness, big advisor impact. Go to Commonwealth.com to learn about their consultative support and technology. Well, if today's sell-off holds at current levels, the NASDAQ 100 will be in correction. It is down 11.4% from its recent record. And it's the Mag 7 stocks that are leading declines in terms of the index points. And then it's Tesla that's leading the Mag 7 lower. It is down right now. Tesla shares, they are down, let's see, close to 8% in today's trading. By the way, you asked this before about Elon Musk. Since the start of the year, Tesla stock is down 40%. Elon Musk, by using the Rich Go function on the Bloomberg, he has lost $557 million just today so far on paper, and $103 billion
that's real money
since the start of the year. But he's still number one in our ranking of the world's richest. Meantime, Amy Wu Silverman at RBC Capital Markets says investors are not yet showing signs of panic.
Year on year, obviously, all your volatility stats are higher, not too surprising given the market move. But right now, we're sort of still in this garden variety drawdown. And the big questions I will tell you institutional investors have is, are we going to get to that second tier of fear?
The S&P 500, 114 points lower, down 2%. The Dow Jones Industrial Average down 443 points. The NASDAQ 100 down close to 600 points. That is a decline of 3%. Money's going into the safety, the perceived safety of treasuries. The 2-year is down 8 basis points at 392 as we bid the price higher. The 10-year yield right now down 8 basis points. That is at 421. And consumers growing more pessimistic about their finances. 27.4 expecting their year-ahead financial situation to be somewhat or much worse off. That's the highest level in 15 months. This is from the monthly survey from the Federal Reserve Bank of New York that we got today. So we check the markets for you all day long right here on Bloomberg Radio. I'm John Tucker, and that is your Bloomberg Business Flash. Isabel and Paul.
And John, you mentioned Musk at $329 billion, down $100 billion. But tied for number 2, it's not even close, John, are Zuckerberg and Bezos at $220 billion. So, I mean, Musk has still got a
big gap.
That's a big gap there. So he's still comfortably ahead there. John Tucker, thank you so much. We appreciate it. Isabel Lee, Paul Sweeney, live here in our Bloomberg Interactive Broker studio. We're streaming live on YouTube. Head over to youtube.com and search Bloomberg Podcast Live. And that's where you'll find us. We talk every week to our good friends at Bloomberg New Energy Finance, BNEF. Now we got to talk about tariffs and what that means for green sectors from energy to biofuels. Today we do that with Antoine Vagnon-Jones, Head of Trade and Supply Chains for BNEF. Antoine, thanks for being in our studio here. Tariffs cannot be good for the evolution into green energy. How do you guys think about the risks that are being introduced into that?
Yeah, there's at a time where everything is whipsawing and we're seeing a lot of differences in terms of policy approaches, what's really interesting is to see areas of continuity. Trump is very much on board with manufacturing in the US. That was something that was very much a part of the Biden administration. The way in which that's happening is very different, however. Essential planks of Biden's approach was to be, okay, we're going to onshore semiconductors, we're going to onshore clean energy manufacturing. And what we've seen now is attack on the Inflation Reduction Act, rhetorically a version that's starting to build on the CHIPS Act, these big sources of finance for a lot of these projects that are happening in the US. At a time when tariffs are starting to be stepped up as a response, and this is building on a lot of tariffs that we saw on the Biden administration front, that has to be twinned with support for some of these different sectors. When that's being pulled out, then it starts to become very uncertain. And when you're seeing the levels of volatility around tariffs being announced, being pulled back, being re-announced, when things are really unclear in terms of what's going to happen, that's not great for businesses that need to make decisions on investment that has quite a long payback period. And we're not quite seeing the upsurge in manufacturing investment that we're expecting to see over the first few months as a result. So it's an interesting time. There's a lot in flux. It's bad news for green energy, as you can expect. But it's also not necessarily great news for some of the objectives that are a central part of Trump's agenda, whether that's building out data centers. You need a lot of grid equipment. A lot of that comes from Mexico. That suddenly becomes a lot more expensive if you need all the transformers that you need. And the examples along that line of thinking just are never ending. So it's a lot of uncertainty and not a great outlook when it comes to this idea that tariffs equals manufacturing, but actually the path to getting there is a lot more is a lot more fraught than I think is appreciated.
I was just going to ask, will we see a shift into EM? Are they starting to ramp up imports of clean tech products? I mean, maybe they could stand to benefit?
Yeah, it's we generally speaking, yes, we could start to see a rise from that perspective. But again, I think a lot of the constraining factors there are on grid investment rather than the cost of clean energy. And that's where we're starting to see some real pain points when already there's some big shortages of large power transformers, for example. And that's something that is repeatedly a huge concern and something that is made materially more difficult to integrate that sort of clean energy if you're making building out the grid a lot harder. So there's a lot of recurring themes that keep popping up, and that's one of them.
How about nearshoring? We thought about North America as nearshoring, Canada, Mexico, but that may not be enough because now we're talking putting tariffs on those folks as well. So it sounds like if you want to manufacture anything, it's got to be almost entirely United States based.
And that's what's fascinating. So over the last few years, we've seen all these different buzzwords: onshoring, reshoring, nearshoring, this idea, which was promoted by the Biden administration, that will have certain incentives for manufacturing, will extend those incentives for manufacturing parts of EVs, for example, to our North American neighbors, Canada and Mexico. Now, when you're starting to impose tariffs on those same neighbors, then you're flying in the face of that trend, and it really seems like that's sort of dead in the water. I don't think we're going to see the death of integrated value chains for the automotive sector over the next few weeks. That's going to remain in North America, across North America, because of the inertia in the system, the efforts that are being made by lots of the big three automakers, for example. But at the same time, I don't think we're going to see the step up in investment in Mexican manufacturing that was due to serve the US market through this trend of nearshoring, which now I really don't see as a political priority at all.
Interesting. All right, Antoine, thank you so much for joining us. Antoine Vagnon-Jones, Head of Trade and Supply Chains for BNF, joining us here on our Bloomberg Interactive Brokers studio. Earlier today, Joe Dominguez, CEO of Constellation Energy, spoke with Bloomberg Intelligence co-host Alex Steele about the impact of tariffs on energy investments at CERAWeek in Houston. Joe was first asked about the recession and slowing growth, and he was asked if he's noticing any of that at Constellation. Let's take a listen.
We don't see an end in sight right now. We're starting to see it get rationalized. And by that, I mean, we're not seeing the same requests for data centers popping up in 5 or 6 utilities. So I think the hyperscalers are beginning to figure out where they want to go. And it's not the frenzy of activity. But in terms of the deal pace, it continues the same way we saw it last year.
And how are the deals? Like, how is it to get them done? Is it hard? Is it coming up with the structure, the money? Like, what is it?
It's not hard, but they're complicated because they're multi-billion-dollar deals, right? So we're talking about 20-year deals for power that sometimes could cost $5 or $10 billion. So like any commercial deal of that scale, it's going to take a long time to negotiate. And each time you need to do that with a new party, you have to go through all the terms and conditions again. But I think we're going to get some deals done this year.
Can you give me some hints, like in maybe areas, what kind of deals, like what kind of power?
Well, I think nuclear continues to be very attractive for the hyperscalers because it operates 24/7. It's clean, so it meets their environmental goals, and it matches up really well from a reliability standpoint.
So let's go to money then for a second.
Sure.
So coming up with the deals is very interesting, particularly the one you did with Microsoft to restart 3 Mile Island. Are your costs going up right now?
A little bit, but it's really labor inflation that we mostly see. Now, remember, we have existing nuclear plants that are already built. So a lot of the cost of the raw materials that you're seeing, potentially impacted by tariffs in the long run, but in escalation through inflation, we're not seeing much of that. Tiny bit on uranium pricing, but most of what we're seeing is labor contracting.
So are you planning for a tariff increase that we should be seeing on steel and aluminum on Wednesday, right? you would have that would have limited impact? How do you see that?
Pretty limited impact on us. It would impact replacement parts and that sort of thing, but it's going to be a de minimis impact on our budget.
And if you wind up seeing an increase, right, even in labor, how does that change then your contracts? Like, if you already said it, do you have to go back to them and say, hey, listen, we got to renegotiate, my costs are going up?
No, there's no reopeners up or down for those sorts of inflation.
So you're really taking on that risk then?
Sure, yeah, and we're taking it on for over a 20-year period. And that's the importance of being able to do this with nuclear, right? We know exactly what our cost structure is going to be within a range for 10 and 20 years. Harder to do with our natural gas assets, where we don't know what the price of natural gas is going to be 10 years out, or whether we're going to have a carbon tax, or what the changes in environmental regulations are going to be.
So how do you manage that risk?
Well, I think what's really difficult to do that in the case of natural gas. I think what you're doing is something that looks more like an index product that is indexed to either inflation or natural gas prices.
When you talk about the different parts of your business, how much of the CapEx that you're spending is going to new stuff, beefing up old stuff, or just replacing and making sure everything stays on track?
Yeah, so for us, Alex, we face a critical decision as to whether to relicense the nuclear plants for another 20 years. And we're facing that across the fleet. So when you say new, if we don't do this, it's going to be retired, very much like 3 Mile Island was retired. So the distinction between keeping existing open and something that's truly new is immaterial, right? If it's gone, it's gone. It's the same as if it were never built. So we are investing all of our monies to secure that fleet for the future. And we're also doing upgrades and restarts and other things like that. In terms of a percentage, to your question, I would say 90% of our spend is in the existing assets and getting them ready to run for decades to come.
So when we talk about power demand booming and increasing by multiple digits, right? I mean, 10%, 7% would be huge. How do you play that? Like, if it's not new, is it just expanding?
Well, it is expanding. A lot of our clients are interested in uprating. That's increasing the output of existing nuclear plants, and we're doing that in a number of different regions. Obviously, the restart is more limited. You had one plant there that you could turn on, and I think there might be another in the nation. And then the rest of that is going to be probably spent on renewables, storage, and natural gas for the time being, and in the fullness of time, new nuclear.
M&A for that? I know you just bought Calpine, so that really beefs up your natural gas. Nuclear is now 50% of your portfolio versus, say, 70. That was a big shift. What else is in your pipeline for that?
Well, we've got a lot on our plate. We've got a lot of food to eat. Yeah, and so this year we're going to spend making sure that we're ready to integrate Calpine and prepared for regulatory approvals at the back end of the year. But as you said, it's a big deal. And I think what we've indicated as a company is M&A is a big part of our strategy.
Yeah, yes. M&A in beefing up nuclear, natural gas, or you want to diversify?
All of the above. All of the above. I think storage is going to increasingly be a part of the story, so we'll look at those opportunities as well.
Everyone now wants to get into power. It is the coolest thing right now in the market. Whether you're looking at integrated utilities, regulated utilities, even energy companies, are you seeing more competition?
I think what people are trying to figure out is whether they too can secure longer-term contracts. I don't see people building spec power plants hoping, the demand will come. So I think there's going to be a lot of interest there, but it's largely going to be fossil. It'll continue to be renewables, but it always has been renewables, and then we'll see whether they could get deals done.
All right, that was Alex Steele, Bloomberg's Alex Steele, speaking with Joe Dominguez, CEO of Constellation Energy, down there in Houston at the CERAWeek conference, talking about the energy biz, particularly on the nuclear energy side, where Constellation has a big play. Just looking at the stock for Constellation Energy Corporation, it's down about 5% today. It's down 10% year to date, but it's up about 18% over the last year. It's got a market cap of $63 billion, so one of the larger energy companies out there. Alex Steele interviewing the CEO. Let's switch gears. Let's go to our Odd Lots podcast. We have Tracy Alloway, Bloomberg Odd Lots co-host here. She joins us here in our Bloomberg Interactive Broker Studio. Tracy, as you can see on the screen, I know you're looking at it like everybody else, tons of volatility out there really over the last couple of months as the market tries to discount and understand the economic policies from President Trump. How do you guys deal with that on your Odd Lots?
Oh man,
podcast?
It's been hard. We've been rushing out a bunch of emergency episodes, and by the time we run the episodes, sometimes Trump will have reversed his position completely, and they become rather irrelevant. But then the good news is 2 days later he reverses again, and we could just rerun the episode encourage everyone to listen to it.
I was going to say that I love your lots more because I think that was the purpose of that, like to explain real time and to tap guests that are really knowledgeable. Not that the others in Odd Lots aren't, but they're more like friends, I think.
That's exactly it. It's friends of the podcast. It's a little bit more casual, and it's a little bit more on the news, so stuff that has actually happened that week. So that's been a really good venue to cover some of this volatility.
Andrew Ferguson, the new Federal Trade Commission chair for the Trump administration. What do we know about him?
Oh, that's right. So Joe and I are heading to Washington. We are holding a live event on Wednesday at the Miracle Theater from 7 p.m. You can find tickets on Bloomberg.com/oddlots. And our headliner is Andrew Ferguson, the new FTC chair. And I'm very excited about it because, we've interviewed Lena Khan. We've done a lot of episodes on hipster antitrust and the way they were approaching that idea. And I'm really curious if there's any through line between the Biden administration's view of antitrust and the Trump administration. Obviously, there's some overlap on big tech, but we really want to understand exactly what the new FTC is interested in, what they might be looking at. And so, we're going to get Andrew live on stage.
So what do we know about him? What do we think? I think everybody around the election was really positive about the Trump administration and what it would mean for growth in the economy, financial markets, M&A maybe with maybe a looser restriction. That narrative has changed almost 180 degrees due to all the tariff talks. But what do we know about how Trump thinks about the FTC, the Department of Justice, that kind of thing?
You're exactly right. And going back to market volatility, I think there was this perception that this was going to be an immensely pro-business administration. Maybe that's not the case, or certainly not to the extent that a lot of people thought. And that's one reason we're seeing stocks sell off today. So I think there's that same question over the FTC. Are they actually going to be looser in terms of some of the restrictions, antitrust on businesses, or could we see something that might have negative consequences for the stock, at least when it comes to big tech? That seems a particular sector where you might see pressure exerted from the Trump administration.
And I'm looking at the rundown, and it seems like there's some singing after. Can you share with us that one? And also, how is it like recording a live podcast? Do you feel more energized with a live guest? What's it like?
It's fun. You never know what's going to happen. There's a degree of audience engagement and interaction, and sometimes the audience gets rowdy at our events, but that's always fun. It's a challenge for our producers when there's background noise, but it's fun for us. And singing, yes. Listeners, attendees of the event will get the chance to listen to the dulcet tones of Joe Weisenthal. He's going to be playing the guitar and singing, I think, at least 2 of his songs. So that's always fun.
What's the name of his band again?
Light Sweet Crude.
Light Sweet Crude. So he is a kind of professional, right? He does this stuff in New York?
He has done paid gigs.
Tracy and I watched together.
Yeah, that's right.
Okay.
I think Chelsea.
All right, Odd Lots had some great stuff. Tracy Alloway, co-host of Odd Lots. Again, check that out. It's a great podcast. And if you're in the D.C. area on Wednesday, go check them out there as well. Looking at this market, it's tough morning for the markets across the board. The S&P 500 off 2.1%. The Dow's off 1.1%. That's 500 points even. The Nasdaq's really where the pain is. It's off about 625 points. That's 3.4% there. So some major sell-offs here today. Continuing the pain. Again, the S&P is off about 13% from its recent high. So some issues there. In the yield market, the Treasury market, 10-year Treasury yields in about 8 basis points. And so the 10-year yielding about 4.21% there. So some major movements there, Isabel, in the marketplace.
Definitely. And you see the S&P closing below its 200 moving day average. So that's the first time we're seeing that since November 2023. So it could mean more pain ahead.
Yep, absolutely. In the crypto space, they're not escaping it either. Bitcoin off 3.7%. Just below $80,000, or right around $80,000 per token. We're going to have more coming up. That's it for Bloomberg Intelligence. Balance of Power with Joe Matthew is next after this global news update.
Thank you. Thank you, Paul. That was fun. Thank you. Yes. Thank you. I'll see you. Now you can go home.
This is CBS News on the Hour, sponsored by Progressive Insurance.
I'm Steve Kathan. Investors have the jitters as a sell-off hits the major financial exchanges. Crossmark Global strategist Bob Dahl says there's good reason.
Markets hate uncertainty, and the uncertainties around the economic trajectory, tariffs, tax cuts, the job market, inflation.
Ontario has slapped a 25% surcharge on energy exports to the U.S. Chinese tariffs targeting American farm products are in place now, too. Glenn Muller heads up the South Dakota Pork Producers Council.
We're concerned about the long-term impact of the tariffs and what they might have on our industry.
CBS's Nancy Cordes.
The Chinese know that Americans rely on Chinese goods far more than the Chinese rely on U.S. goods. And they also know the last time we went through this during the first Trump term, U.S. farmers in particular felt the squeeze. So China is in no hurry to go to the table.
Correspondent Scott McFarland tells us the Justice Department is now investigating what's behind the high price of eggs.
It's unclear, though, if this is going to be a large-scale Department of Justice investigation or whether this is just a response to the Farm Action Group's complaint. We do know, though, Farm Action Organization requested the Biden administration do its own investigation as early as January 2023, when it was viewed then as an egg price that was too high.
The U.S. Supreme Court's agreed to decide whether state and local governments can enforce laws banning conversion therapy for LGBTQ plus children. Legal analyst Lori Levinson.
There are legal issues ranging from the First Amendment to due process and to whether people have the right to make these changes in their lives.
Overseas, officials say all 37 people aboard 2 ships have been brought safely to shore after a U.S. oil tanker and cargo ship collided in the North Sea off the English coast. Secretary of State Rubio is heading to Saudi Arabia ahead of tomorrow's talks between U.S. and Ukrainian officials on the war in Ukraine. Steven Stastanovic is an ambassador-at-large, a former one, to the former Soviet Union.
President Zelensky has said he understands NATO membership is not for now, not for the foreseeable future, but he wants to know what other kinds of security guarantees the United States would offer so that Ukraine does not have to worry about a resumption of attacks.
1995 American League MVP Mo Vaughn tells The Athletic he used human growth hormone, that is, to extend his career. It comes 18 years after the Mitchell report. Dow's down 460. This is CBS News. Labor unrest in the Golden State.
Instead of light rail trains, commuters are hearing the sound of picketing at train stations across Santa Clara County as some 1,500 transit workers go on strike. Karina Medina is with the Amalgamated Transit Union, Local 265.
Our hope is that this doesn't last forever.
The union is asking for an 18% raise over 3 years. Valley Transportation Authority General Manager Greg Richardson says a pay hike that high will result in service cuts.
Understand that we are doing everything we can to find a solution.
Matt Bigler for CBS News, San Jose, California.
Labor woes have crippled airports in Germany as a one-day strike by workers at 13 of them has caused most flights to be canceled. It's estimated to be affecting more than 500,000 travelers today. Pay is the major issue. Steve Kathan, CBS News.
Do you owe $10,000?
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
Republican leaders in the House craft a plan to avoid a government shutdown on Friday, though President Trump says it could happen. Welcome to the fastest show in politics as we count down to the funding deadline on Friday, coming up with the help of Jack Fitzpatrick, Bloomberg government. He'll join us live from Capitol Hill. As the titans of tech meet today at the White House, we'll name names, get a live report from the North Lawn, and discuss with Bloomberg's Mike Shepard coming up this hour. How have we traded talk of animal spirits for a recession? We'll ask our signature panel. They're both with us today, Rick Davis and Jeannie Shanzano, for the duration. And we start right now on Wall Street with another downdraft and the help of Charlie Pellet. He's got the update on the markets live from world headquarters in New York. Charlie?
And good day from New York, Joe Matthew. It has been described as the falling knife that nobody wants to catch. We have got the Dow, the S&P, NASDAQ, very much in the red right now. In fact, we're making a run for the worst level of the day on the S&P 500 index. Right now, the S&P is down 125. That is a drop of 2.2%. We have got the Dow Jones Industrial Average down 493 points, now down 1.1%, while the NASDAQ Composite Index is down 3.5%. The NASDAQ 100 Index, full of those big tech names, down 3.3%, being led lower by Tesla, which is now down by 10.1%. The NASDAQ 100 Index is now lower by 3.2%. We have got the 10-year at 4.21%, the 2-year 3.91%. Gold is down 0.1%, $29.05 the ounce. West Texas Intermediate crude 66.61 a barrel, down 0.6%. And a rout for Bitcoin back below 80,000, 79,400 on Bitcoin right now. It is down by 4%. So the Dow, the S&P, NASDAQ all in the red. As for the market backdrop, Neil Dutta is head of U.S. economic research at Renaissance Macro Research.
To me, the big story is government spending was already getting worse, particularly state and locals. Housing has been locked up. Labor markets have been locked up. What Trump's doing isn't helping. But those are much bigger considerations, I think, than policy uncertainty.
Neil Dutta of Renaissance Macro Research. Rocket, deal news. Rocket pushing deeper into the property market with a deal to buy Redfin that values the real estate listing firm at $1.75 billion. Rocket down 14% on the news. Redfin, though, surging 69%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. Balance of Power continues. Back we go to Washington. Once again, your host here is Joe Matthew.
All right, Charlie, thank you so much. And it's only Monday. I hope you had a great weekend, and thanks for joining us here. The Monday edition of Balance of Power on Bloomberg Radio, on the satellite radio, channel 121 is your friend, and of course, YouTube, where you can find us at any moment in our live stream by searching Bloomberg Business News Live. We always keep the light lit for you here in the studio. This market is tough. We'll be back with Charlie, of course, as we are every day throughout the broadcast, to get a sense of just how ugly this might get. Michael Wilson, Morgan Stanley, pointing to 5,500 on the S&P, which means we are not even close right now. The S&P 500, 5642, down over 2%. The NASDAQ, as you heard from Charlie, down 4%. And this must be the period of transition we're talking about, right? Did you see the Donald Trump interview with Sunday Morning Futures? Aren't we clever with the show names? Quote, I hate to predict things like that when asked about whether he was expecting a recession by Maria Bartiromo. There is a period of transition because what we're doing is very big, unquote. Sounds a lot like Scott Bessent last week. We're going to what? Detox the economy, to wean ourselves off of government spending, whatever you want to call it. It's not working for Wall Street. And we're going to keep tabs, of course, on markets for you as we cover the political news here in Washington, with the idea of a government shutdown also hanging over the market here. No one seems to think it's going to happen, and that has a lot to do with some progress that took place over the course of the weekend. They got a deal. I don't think we can call it a clean CR, but it would keep the lights lit through the rest of the year, and we could see a vote as soon as tomorrow. Donald Trump, ahead of this bill's arrival in the Rules Committee, no dissent, says the Post on Truth Social. The House and Senate have put together, he writes, under the circumstances, a very good funding bill. CR in parentheses. All Republicans should vote, please, he says in parentheses. Yes, next week. Great things are coming to America. Skip down a pretty long post here. He says Democrats will do anything they can to shut down our government, and we can't let that happen. We have to remain united, all caps. No dissent, all caps. Fight for another day when the timing is right. And he's got his eyes on reconciliation, of course, as well. Yeah, producer James, I don't know if Tom Massey read the Post. Does anyone think Tom Massey ever votes for any of this stuff? How come he's the one lawmaker who gets away with it? He doesn't get a phone call, right? Maybe he will this week. They need all they can get because apparently Democrats will not take part in this exercise, at least on the House side. The Senate might be different. John Thune needs 8 Democrats. And I'll bet you Jack Fitzpatrick is counting the votes already. He covers appropriations for us. Of course, he's our budget expert at Bloomberg Government. He's already up on the Hill. He's been up there since lawmakers started trickling back into town, and it's great to see you, Jack, with us live now on Balance of Power. What's going to happen in the Rules Committee? Does it sail through, and will it actually pass the House tomorrow?
It doesn't look bad in the Rules Committee. They've gotten the conservative members of the Rules Committee to kind of be team players on the House Republican front. I think tomorrow's vote, assuming the vote does end up being tomorrow, looks close because it's the House of Representatives, and right now everything's close in the House. But again, the conservatives, the kind of firebrand members, Chip Roy even was just tweeting positive things about it. They've largely followed House Republican leadership's vision on how to fund the government. So it doesn't look like you see a lot of defectors from House Republicans. You may pick up some Democrats. And ultimately, if they can get a majority in the House, that puts the pressure on the Senate, in particular Senate Democrats, because they know if you vote against a House-passed funding bill just before a deadline, you're basically voting to shut the government down. So there's a close whip count here, but if they can get it through the House, that puts a lot of leverage in Republicans' hands.
Okay. I mentioned Massey. Jack, you've also got Representatives Tony Gonzalez, Corey Mills, and Brian Fitzpatrick, no relation to Jack. Are these phone calls the president needs to make, or do they kind of one by one fall in line as we get through rules and on our way to the floor?
Those may be the relevant people to keep in mind. I'll be honest with Thomas Massey, when we get ahead of these very close votes, the last time I asked him if he was getting calls from House leadership or the president or something like that, he's made some quips in the past saying, they don't call me, they know it's not worth debating. Massey's a tough get for things he doesn't believe in, but a lot of the Freedom Caucus members, I mentioned Chip Roy, Andy Harris, the chairman of the Freedom Caucus, has been very positive about this plan to avoid a shutdown. They see this as an attempt to take leverage away from Senate Democrats. So that's why you're hearing a lot of members, sans Thomas Massey, kind of play nice on a CR, which is unusual for them.
Yeah, it is. And well, let's talk about what's inside here. Because we heard a lot of talk about a clean CR, Jack, and I don't know that we can call it that. It cuts non-defense discretionary spending by $13 billion from 2024's level, almost 2%. It boosts defense spending by $6 billion. It boosts spending on border enforcement. How would you describe it?
I would describe it as a stopgap measure that runs through the end of the year. And look, Democrats are not going to say it's clean because they don't like it. They don't like the idea of a full year CR anyway. Keep in mind, it's very rare to see a full year CR. In fact, the Department of Defense has never operated on a full-year CR. So they made some exceptions and said, you know, we'll take away one of the restrictions that you usually see in a stopgap measure and allow you to start new projects, which is actually very important for the Department of Defense. So it's an unusual set of circumstances. It's not similar to when you hear us reporting about a month-long kick-the-can stopgap. When you take this through the end of the fiscal year, it's very difficult to operate the government on a stopgap measure. So there are some unusual exceptions. However, this is a 99-page bill. If it were a real funding deal, it'd probably be 1,500 pages. So it's relatively clean compared to if they actually had a funding deal. So keep in mind, it's bad for agencies. There are some exceptions. There are some things for Democrats to complain about. But ultimately, this would leave the government kind of running on autopilot through September 30th.
Yeah, that's right, autopilot. Although, is the $6 billion in extra spending for defense enough to quiet the Pentagon hawks? Because that was going to be one of the major hurdles this thing had to clear.
Largely, they seem okay with this, and I think that's based on discussions about just continuing actual appropriations talks. You can enact a full-year continuing resolution, just keeping everything running on the previous year's budget, and then keep negotiating and say, notwithstanding that CR, we now can enact a defense appropriations bill with the necessary increases. That's not easy to get that momentum going when you've taken away the deadline, but it doesn't sound like there's a revolt from the defense hawks, from the appropriations committee's members, because at least they can continue those conversations. Whether it's realistic that they get a full deal, I don't know, but they're not revolting.
Well, I'll tell you what, for our viewers and listeners here in Washington, those on 99.1 hearing right now, there's apparently a memo out from the mayor of D.C. talking about draconian cuts. Muriel Bowser warning of devastating impacts to critical services, potential layoffs and furloughs of teachers, police officers, and other frontline workers, as this basically cancels the city's budget, cuts it by $1 billion, Jack. Does she have any recourse?
She doesn't have much recourse, and she doesn't have a lot of friendly ears in Congress right now because congressional Republicans, especially in the House, have just been very negative towards the government of the District of Columbia. It is certainly fair for her to point out that if you keep things running on autopilot, agencies that need an increase are either going to have to furlough workers or come up with something to address the shortcoming one way or another. That is one of many examples of government organizations, including many federal agencies, that would face very difficult decisions if the government is funded on a stopgap measure through September 30th.
Right. Yeah, this is a pretty dramatic escalation of federal power over the city here, canceling a $21 billion budget. Jack, great work, and thank you so much for stopping down for us today as he makes the rounds on Capitol Hill. We're counting down to midnight Friday, and we'll see if we can get this done. Rules Committee today, looks like House floor tomorrow if the Speaker gets his wishes, then it moves on to the Senate. I'm Joe Matthew in Washington. Thanks for being with us here. Mike Shepard's on the way in as the Titans of Tech gather at the White House. This is Bloomberg.
It's 12:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got a tech-led sell-off. Stocks are declining with the Dow, the S&P, NASDAQ very much in the red right now. Right to the numbers here with the S&P trading lower by 130 points, 56.39 where we stand, down 2.3%. Dow Industrials down 550 now, down 1.3%. NASDAQ down 652, a decline of 3.6%. 10-year 4.21%, the 2-year 3.91%. Gold down $5 the ounce, $29.03, down 0.2%. West Texas Intermediate crude down 1%, $66.35 a barrel. And Bitcoin now at 79,475. Bitcoin down by 4.3%. BioNTech expects sales to fall again this year as the German biotech continues to work to bring its experimental cancer drugs to market. The drug maker, you recall, shot to fame during the COVID-19 crisis when it developed a vaccine with Pfizer. Also making news, Novo Nordisk. It is plunging the most since December after another disappointment for the drug maker's next generation weight loss shot, Acrosema. Right now, we have got shares of Novo Nordisk down by 8.3%. BioNTech, by the way, down 2.7%. For on-demand news, 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues now. Back we go to Washington. Once again, your host, here he is, Joe Matthew.
All right, Charlie, thank you so much. A brutal market today. We'll see where we end the week here. Of course, everybody's upset about the idea of a possible recession after President Trump was asked about this over the weekend. Didn't rule it out. Also didn't rule out a government shutdown, which I think, as we just established with Jack Fitzpatrick, is pretty unlikely to happen on Friday. They seem to have a plan to keep the lights on. Nothing guaranteed, of course. But the question surrounding tariffs and exactly what will be the policy of this White House continues to dog the market, even as the White House embraces tech again today. If you look at the guidance from 1600 Pennsylvania Avenue, 2 p.m. Eastern Time, about 90 from now, the president holds a roundtable with Technology CEO Council. It's going to be in the Roosevelt Room. I think legacy tech, trying to be fair and kind here. Jensen Huang won't be among them. I don't think Sam Altman will either. We've got CEOs. We'll let Tyler tell us, but this is Intel, Hewlett-Packard, IBM. Okay? They're going to be talking about trade policy, tariffs. What are the impact of tariffs potentially, and moving manufacturing here to the U.S. Bloomberg's Tyler Kendall has been on the North Lawn of the White House since before the sun came up this morning. Tyler, I look back on a day when ending daylight savings time was the most controversial position of the Doge. Things have changed so much since then. Bring us inside the tent and what we're doing with tech today at the White House, Tyler Kendall.
Yeah, hey, Joe. Well, you named it there. Our reporting indicating that executives from companies like Intel, HP, Qualcomm, and IBM will be here at the White House for that 2 p.m. Eastern meeting when President Trump convenes his Technology CEO Council. Now, according to a statement obtained by Bloomberg News, HP previewed that tariffs and trade policy, as well as boosting U.S. domestic manufacturing, will be top of the agenda list. And that's because many of these companies are seeking clarity when it comes to potential tightening in export controls, for example, as well as what tariffs will mean for their industries more broadly, and whether or not carve-outs could be on the table here. Because, Joe, it comes against this backdrop that the White House is really taking more of a stick versus a carrot approach when it comes to tech companies and chip makers in recent weeks. Just look at last week, for example. As you're about to hear, President Trump called on Congress to repeal funding under the CHIPS and Science Act, saying that tariffs would be a better way to fuel investment in the U.S. instead of the subsidies and the incentives that the CHIPS and Science Act has so far provided.
Your CHIPS Act is a horrible thing. We give hundreds of billions of dollars, and it doesn't mean a thing. They take our money and they don't spend it. All that meant to them, we're giving them no money. All that was important to them was they didn't want to pay the tariffs, so they came and they're building, and many other companies are coming. We don't have to give them money.
Well, our reporting indicates, Joe, that Republicans aren't necessarily on board with this idea, or at least not on board with it yet. Remember, of course, the CHIPS and Science Act, a $53 billion plan that had 17 Senate Republicans vote in favor of it, considered to have very widespread bipartisan support. Many Republicans in Congress saying that they were caught off guard by President Trump's announcement last week during his address to a joint session of Congress. So for now, it appears that the funding is likely safe, as Congress has this whole other slew of agenda items that they'd like to get to first.
You said it. Just quickly, Tyler, do we expect to hear from these executives? Do you have the stakeout microphone set up in the driveway, or are they going to sneak out the side door on us?
Well, I'm hoping to try to get them as they come in through the visitors' entrance, so we'll have to see, although I don't know if me previewing right now might mean that they're a little more on guard ahead of time. But we'll be trying to ask them today big questions about what they have spoken about with this administration when it potentially comes to carve-outs, but also specifics when it comes to their U.S. manufacturing plans. They want to up jobs in the U.S. President Trump wants to see those tangible numbers put forward. But when it comes to these four companies, at least, we're still waiting for a little more clarity on what their plans will be going forward and whether it will be enough for this White House.
They're all huddled around YouTube watching you right now, Tyler. They'll never know what hit them.
So.
Thank you, as always. Tyler Kendall on the north lawn of the White House. It's beautiful out today in Washington. Before you know it, there'll be cherry blossoms behind Tyler as we speak. Mike Shepard was writing about this last week, by the way. If you were on the terminal, if you were on the website, you knew that these techs were coming to, these tech executives, I should say, were coming to town. As I mentioned, Intel, IBM, Qualcomm, too, I might not have mentioned, and a great opportunity to spend some time with Bloomberg's senior editor for technology and strategic industries. Great to see Shep always on Balance of Power. So, interesting collection. Why these guys? We're so used to Larry Ellison, Jensen Huang, Sam Altman. This is kind of like the 90s are calling.
In a way, you don't want to make it seem like the other guys when you think about the other major technology CEOs who've really made themselves part of Trump's orbit, starting, of course, with the Elon Musk, but then there's Jeff Bezos and Mark Zuckerberg, and you mentioned Larry Ellison from Oracle, and then Masayoshi Son from SoftBank, who has, shown up at the White House and also at Mar-a-Lago to talk about investment plans. But we haven't heard as much from the likes of HP and Qualcomm and Intel about what their intentions are. And it's not even clear that this meeting today is framed as sort of an investment announcement. It may be more just a chance for the president to check the pulse of this industry and different members of this industry too. More of the hardware makers, more of the companies that are out there trying to produce stuff here and elsewhere and trying to navigate those tariffs that Tyler was just talking about.
The president said last week in his address to Congress, CHIPS Act is dead. I suspect they have some questions about that.
They may have some questions, especially Intel, because Intel was the largest recipient of grants and other support through the CHIPS Act. It reached a significant agreement with the prior administration on what it would receive. It's a signed contract. The money has not all been dispersed pending Intel's ability to meet certain benchmarks. It's unclear right now whether the new Commerce Secretary, Howard Lutnick, will be completely aboard with how the progress is going. I will say that, based on our reporting last week that Tyler mentioned, lawmakers are really not aboard at all with this idea of repealing the CHIPS Act. They like money going out to their states and districts, and there are a number of Republican locales that are getting money via the CHIPS Act for projects and plants and research and development in their states. And yet, we are not exactly seeing all the benefits from the CHIPS Act for companies like Intel, which, as you've been following along with me, has struggled over the past year, especially since September. They have yet to show true progress, even with some of the support that has been promised to it, struggling to come up with customers. And they've also put in mothballs for now construction on that big plant in Ohio.
That's why you wonder what's going to happen to that Ohio contract, right?
Right.
I have to ask you, we mentioned Larry Ellison, and of course his Oracle is going to be reporting quarterly results after the bell. Will there be insights into Stargate, into this new alliance with the White House and with OpenAI when we hear this conference call later?
Well, that's a great question, Joe, and I think people are looking for more signals about where the administration is going with its policy on AI. They are about halfway through this 120-day period that Trump gave his top advisor on AI, David Sachs, to come up with plans for not only AI, but also crypto, but especially in this front, which direction will they go? And they're signaling, though, that it will be very different from the preceding administration, and that is fewer regulations, hit the gas on construction of data centers, and trying to forge a new path that will promote AI and ensure U.S. dominance. But there are some challenges out there, the likes of DeepSeek and others from China, namely. And there are also questions about whether all this spending is bearing fruit in terms of a game-changing application.
Well, realizing the markets are lower already, there does seem to be some skepticism. Oracle shares are down 4% right now and back below $150. It's a tough day for the market here. Everyone's keying off of every word the president says, the Commerce Secretary, the Treasury Secretary, and that goes for TikTok as well. We actually heard about the bidding and 4 parties apparently in line for TikTok. What do you hear?
Apparently, well, it is unclear which 4 parties the president was talking about when he spoke about it yesterday aboard Air Force One. And does he mean the handful that we're sort of aware of? Project Liberty, that features real estate investor Frank McCourt, and Shark Tank's Kevin O'Leary. They have one offer that they say has been on the table. There is another one purportedly coming from Mr. Beast and other investors. But what are some of these other
Is Mnuchin still part of this at all?
Unclear. Unclear. And, you know, when he's talking about 4 offers, how serious are they? And what does the offer exactly entail? Does it mean a full-on sale, full stop, disconnection from ByteDance, American owner of U.S. operations of TikTok? Remember, ByteDance has said, no way. We are not selling. TikTok is too lucrative, and also the Chinese government gets a say in this too, because there is the algorithm as well that's also involved in this. And TikTok doesn't work that well without the algorithm, and recreating it will be a big challenge for any buyer that doesn't come away without it.
Wow. What's the timeline on this? Does he have all the time he needs, or will there be another extension while this is working?
It's about another month, but then the question comes up, will they need more time? This will be a complex deal requiring a lot of approvals, not only here, and it does sound like we will see some sort of extension. Trump floated that last week on Thursday as a possibility, but it is unclear what's going on behind closed doors at the White House. But then among all these investors too, how are they going to package something that manages to satisfy all these conditions?
And as we keep laying on more tariffs, I don't think Beijing is feeling better about selling this than it was before,
definitely not. It becomes sort of that bargaining chip between the world's 2 largest economies. And really, as you brought up tariffs, that is the other thing that is weighing on the markets and will no doubt be a topic of the conversation when those tech CEOs
Could that unlock a deal? Hey, we'll lift the tariffs if you sell us TikTok. Mike Shepard, is that our next story here?
That would be a big trade-off, maybe too big for Donald Trump to make right now.
Boy, I don't think you're really going to write that story, but keep us honest on this, because it's the story that's never going to go away. Thanks to Michael Shepard, we have a sense of what's going on here. I'm Joe Matthew in Washington. Thank you, Mike. We'll have much more ahead with our signature panel. Jeannie Shanzano and Rick Davis start the week early with us. We've got a lot to talk about coming off the weekend. The meeting of tech CEOs today and a stock market that can't seem to drop fast enough. Much more on that right here on the fastest show in politics. This is Balance of Power, only on Bloomberg.
It's 12:40 on Wall Street. We do check markets all day long here at Bloomberg. We have got the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 index, all very much in the red right now. S&P 500 index just about lows of the session, right to the numbers, with the S&P down 132 now, down 2.3%. Dow Industrials down 541 on the Dow, a decline right now of 1.3%. NASDAQ lower by 3.6%. Tech being hit especially hard today. The NASDAQ 100 index down 3.4%, and the Russell 2000 index of small cap shares down 1.6%. We've got the 10-year currently yielding 4.22%, with a 2-year 3.92%. Spot gold down $7 the ounce, holding above 2,900, 29.02 right now, down 0.2%. And Bitcoin at 79,250 on Bitcoin, down by 4.6%. Inflation data topped this week's U.S. economic calendar, and with a look ahead, here's Bloomberg's Vinny Del Giudice.
The U.S. Consumer Price Index is due Wednesday and the Producer Price Index Thursday. Economists don't see much relief. Inflation remains stubborn and tariffs won't help. And grocery prices, eggs in particular. America's flock of hens is down as avian influenza rages, the fewest egg-laying birds in almost a decade. At the diner, they're even charging extra for eggs. Time to eat more grits. Vinny Del Giudice, Bloomberg Radio.
Apple shares now down by 5.6%, all part of a broader tech sell-off. The iPhone maker seeing its biggest intraday drop in more than a month. Company recently said it was delaying an AI-related update to the Siri digital assistant for the foreseeable future. Again, Apple shares right now down 5.7%. S&P just about the lows of the session, recapping down now by 2.3% for on-demand news 24 hours a day. Subscribe to Bloomberg News now wherever you get your podcasts. Back we go to Washington. Once again, your host. Here he is, Joe Matthew.
All right, Charlie. Boy, the bearer of bad news today. The great Charlie Pellet, the voice of Wall Street, and incidentally, the New York subway, live in New York. And we'll get back to Charlie top of the hour and see what the heck's going on. The VIX up 15% today. That's how we're feeling. Look at Bitcoin. Even Bitcoin is getting crushed. Now we're below $80,000 here. Look at this. 5% loss for Bitcoin. As I mentioned, what is up? The VIX. And of course, all of this has to do with tariffs and rhetoric. Go back to Saturday, Scott Bessent talking about the detoxing the economy. We heard about short-term pain, right, at the not State of the Union address last week, the address to a joint session of Congress. But then there was the big one, the big doozy with Maria Bartiromo. President Trump is asked straight out, because we've traded our animal spirits here for talk of recession. What do you think, Mr. President? Are you expecting a recession this year? Here's what he said.
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time.
You couldn't say no? We assemble our panel now, our signature panel with us on this Monday. Jeannie Shanzano is here, our Democratic analyst, Bloomberg Politics contributor, of course, senior democracy fellow with the Center for the Study of the Presidency and Congress. And there's Republican strategist Rick Davis, Bloomberg Politics contributor and partner at Stone Court Capital. Rick, was that Donald Trump being off-brand there? Howard Lutnick had to go on TV later on and say, absolutely not, we're not going to have a recession. What happened to talking up the economy? Which Donald Trump was that?
Yeah, that was the dark Donald Trump. You remember Dark Brandon? Well, we're going to have a new nickname for Dark Trump. His eyes turned a little bit red and glowed when he said that. And I thought, wow, here's an administration that doesn't mind leaning into a recession. I mean, Joe Biden was excoriated for denying that there could be a recession or that there was inflation. And here we got an administration that, is kind of predicting a downfall in the economy. And I must admit, I didn't hear it from Kevin Hassett, chief economic advisor. I didn't hear it from Howard Lutnick. Yep. Didn't hear it from Scott Bessent. So maybe Donald Trump is on the wrong page. I hope so, because certainly a recession is not what we bought into when we elected Donald Trump president.
Well, no, boy, things have changed awfully quick here, Jeannie. The market is back to where it was before the election, and we're talking about whether we're going to have a recession or not. There's something called talking down the economy, right? Is Donald Trump going to make it worse with rhetoric like that?
Today is probably suggests that he is making it a little worse, but it's hard to tell. I think my read of this is Donald Trump is doing something we've seen all modern presidents do, is they try to walk back the inflated expectations that got them into office. And so with Donald Trump, it was make America affordable again. Now, all of a sudden, as the numbers, it's just been 7 weeks, have shown that may not be coming quite as quickly as he promised. He wants to lower those expectations. And so when he talks to Maria Bartoloma or anybody else, he says, to your point, at the State of the Union even, there might be some pain here. You might experience pain, but there is something great waiting in the aftermath. We don't quite know what that is. We hope it's a good economy, a strong economy, jobs, manufacturing. But this is, I think, part and parcel of the way we have laid out the modern presidency. To win, you have to overpromise. And when you get into office, delivering on those promises is difficult. You let supporters down. And of course, many of his supporters are in the stock market. They wanted a lot more from this president, and he promised it quickly. And that is not something that Washington can deliver, even under Donald Trump.
Well, as we mentioned, grabbing the fire hose, running towards the smoke. Commerce Secretary Howard Lutnick on Meet the Press yesterday morning. Are we going to have a recession, Mr. Secretary?
There's going to be no recession in America. What there's going to be is global tariffs are going to come down because President Trump has said, you want to charge us 100%? We're going to charge you 100%. And you know what they say? They say, no, don't charge us 100%. We'll bring ours down. So Donald Trump is bringing growth to America. I would never bet on recession. No chance.
Well, Rick Davis, it looks like Wall Street kind of is. I don't know if we can go that far, but we're looking at a pronounced sell-off here again today. The NASDAQ, even as tech CEOs arrive at the White House, is down over 3%, over 3.5%. You've got Mike Wilson at Morgan Stanley calling the bottom 5,500, he says, for the S&P 500. How do we rationalize all of this?
Yeah, well, I hope Howard Lutnick is right, but like maybe what he's missing is while our stock markets are going down the floorboards and giving back every gain that we had prior to Donald Trump being president, the rest of the world seems to be enjoying an uplift in the economy. I mean, Donald Trump should be the savior of Europe. I mean, you mentioned the VIX being up today. I mean, like, all of a sudden, Europe's the place to invest, not because they're doing that much better. It's because we're doing that much worse. We do have to remember, Donald Trump inherited a robust economy. I heard some of his people on the weekend shows talking about what a horrible economy they got. They didn't get a horrible economy. They got a great economy. We had people on this show saying this might be the best economy we've had in our current lifetime. And I would agree. No economist, but from what I could tell, every indicator in the economy was up at the end of this last year. And now they're looking at a totally different scenario. Donald Trump was kind of, talking about that in his own comments, but nobody else in his administration will echo that. So I don't know. I mean, I think the rest of the world has ought to send a gift to the White House thanking Donald Trump for starting a tariff war that is actually helping them, not hurting the rest of the world like Lutnick is saying.
He also helped to save Justin Trudeau's party and may well in the coming elections here with our new prime minister over the weekend. Jeannie, I'll get hit for saying this, but I've got to ask it. How long until we see the first billboard with Joe Biden's face on it saying, "Miss me yet"?
I'm thinking that may be a little while, but we'll have to wait and see. If we don't see if we don't get out of the red pretty soon, it might come sooner than I think. But, another really interesting thing that Donald Trump said over the weekend was he compared how China operates to how the U.S. operates in terms of planning. And he is right on this. They work on 100-year cycles. We go quarter to quarter. This speaks to an enormous structural problem in the way we plan and the way Washington, D.C. operates. So when somebody like Donald Trump is elected to do something very revolutionary and to do it in a way that most economists see as not being particularly friendly by way of inflation in terms of using tariffs, that's a long investment that you have to make. And he knows that, which is why he is now saying what he needs is time. Unfortunately for Donald Trump, he can't get it in the way our political and economic system works in the U.S. And that is a source of real frustration, not just for him, but for all presidents. So in a lot of ways, this story is much, much bigger than anything about Donald Trump or Joe Biden. He simply does not have the time, and he is a lame duck president to do the big things he wants to do. So now it is a waiting game to see when he decides he's going to cut and run from his promises and try to just make sure he can hand over an economy in good condition. And that is a sad reality that his fervent supporters are going to have to accept. All of those big promises, very difficult for a president to deliver on, and he knows that, and that's why he's trying to ask for time.
Well, it's another down day for the markets here. It's another sharply lower day, Rick, for Goldman Sachs, down 5% right now. Again, round tripping to where we were before the election. Goldman Sachs is at $532. It topped out above $670 following the election and the inauguration. Rick, we talked about animal spirits. It was going to be M&A time. The party was back on. Now that we're seeing the market reaction that we are seeing, and to the extent that you're involved in the private equity space, what are you hearing? And could this maybe actually help private equity at some point when so many people are trying to get out of the public markets?
Yeah, look, I mean, it's too soon to tell. You're right. I think everybody was excited about this idea that we're going to reduce the regulation coming out of the Justice Department and out of the SEC, and it would unleash deal making to the scale that we haven't seen in a long time. Public issuances would be way up. And I would say part of what is being informed in investment right now is just the lack of certainty. When you deploy capital, you want some certainty in the economic situation, both here and abroad, depending upon what kind of investment you make. And we have anything but that. The on again, off again tariff regimes, the tax code that is going to be redone. And, are we going to get just the tax cuts that Donald Trump put into effect in 2017, or are there going to be a slew of these new things? What's that going to do with the budget? Are we going to increase the debt? I'd say that it's been head spinning in this administration. If they had come out and just said, here's what we're going to do, here's the regime, we're going to do these reciprocal tariffs, and as they come down, everybody will create some growth. But it's been anything but that. It's been tariffs on today, we're going to give exemptions. Who knows what's going to happen today in the tech meeting? You'd love to be able to invest with the knowledge that tech's going to be supported by the government like it was in the previous administration, but now we're going to get rid of the CHIPS Act. Half that $50 billion is already deployed. So what are we really talking about cutting? I mean, the conflicting messages in this administration puts a pall on investment.
Boy, Rick just said a lot. Jeannie, do Democrats need to start talking about the stock market more after Joe Biden distanced himself from it for 4 years?
I think they absolutely should. And I think that is something that has been missing from the Democrats' messaging and from their ability to speak to people where they live. There is a sort of positive way to look at what's happening. And I would just raise this. When we saw Goldman Sachs talk about the recession chances raised from 15 to 20% the other day, that's not a huge jump. And part of the reason is probably that this is a self-inflicted wound, that the president could abort this mission, if you will, and he could change the policy. It is his policy that is driving this concern and the whiplash that Rick was just rightly discussing. So if the White House could pull that back to a certain extent, if Donald Trump was willing to, maybe consider or reconsider, if you will, his commitment to tariffs and the whiplash tariff policies we've been feeling, then that may allow people to feel that certainty, and that may have a positive impact. So that's both the positive aspect and the frustrating aspect of this. It is a self-inflicted wound based on the 7 weeks we have experienced that may change.
Yeah. Ginny Shanzano and Rick Davis looking at politics through the prism of Wall Street today on the fastest show in politics. They'll be with us in hour 2 as we welcome our global television audience. We'll also welcome Congressman Chuck Fleischman, the Republican from Tennessee, will join alongside Don Beyer, the Democrat from Virginia. It's all coming.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
They have 4 days to figure it out. Welcome to the fastest show in politics as Republican leaders in the House craft a plan to avoid a government shutdown on Friday. But they don't have the votes yet. I'm Joe Matthew alongside Kaylee Lyons in Washington. Thanks for joining us on the early edition of Balance of Power on this Monday. A new week at hand. Donald Trump, Kaylee, is calling for no dissent.
Yes.
But he still has some minds to change, I think.
Well, yeah, certainly you need to be able to convince everybody, barring one vote, maybe two Republicans in the House Republican Conference. And then you have to convince a bunch of Senate Democrats to pass this thing in the upper chamber, assuming that it can get through the House. Add on to all of that, the risk of a shutdown, usually largely not paid attention to by financial markets, perhaps one that is going to be heightened, given the volatility we are seeing and that markets do seem to be feeling incredibly pessimistic at the moment. We're down at the lows of the session right now in both the S&P 500, the NASDAQ 100 down almost 3.5%.
Pretty remarkable. The VIX is up 14%. Crypto is not doing well either. I don't know about Bitcoin as a safe haven. It's now below $79,000. Mike Wilson, you see at Morgan Stanley, says 5,500 on the S&P 500. If that's true, if he's right this time, we got a lot more way to go.
Yeah, as there's concern out there about tariffs and growth, and the president not necessarily putting those growth concerns to bed with not directly answering a question about a recession on Sunday morning television, instead talking about the economy in transition.
Wouldn't rule out a recession or a government shutdown in that same conversation. Pretty interesting.
Indeed. So we're going to get the latest from Capitol Hill in just a moment, but we have to begin with this market action because it really is incredible today. Charlie Pellet has the latest from New York. Charlie?
Thank you very much, Kaylee Lyons. Indeed, the selling continues from last week. Last week, you recall, the S&P 500 index on the week down 3.1%. Right now, we have got the Dow, the S&P, NASDAQ very much in the red, with the S&P at 5,600, down 134 points now, down 2.3%. Dow Jones Industrial Average slumping 570, down 1.3%. But the real damage among tech stocks, with NASDAQ down 668 now. For NASDAQ, a decline of 3.7%. The NASDAQ 100 index down 3.4%. Certainly big tech weighing heavily on trading amid a rotation into defensive shares. Speculation is also intensifying that President Trump is willing to tolerate hardship in the economy and markets in pursuit of long-term goals involving tariffs and smaller government. The 10-year 4.23%, with a 2-year that's currently yielding 3.92%. Gold is down 0.5%, $28.94 the ounce, and West Texas Intermediate crude down 1%, $67.38 on WTI. Bitcoin, as Joe mentioned, now trading below 79,000, 78,980 on Bitcoin, down now by almost 5%. Corporate news, Rocket is pushing deeper into the property market with a deal to buy Redfin that values the real estate listing site at $1.75 billion. Right now, we have got Rocket down 17.6%, but Redfin shares, they're surging 63%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. And Balance of Power continues right now. Back we go to Washington. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet in New York, thank you so much. We'll be checking in with Charlie throughout the hour here on Bloomberg TV and radio as we keep tabs on the dramatic action he just ran us through in financial markets. Again, a brutal day for equities, a bid into the bond market as concern is out there about growth, specifically the impact of this administration's policies and what that could ultimately mean for the economic outlook. Of course, with a lot of uncertainty out there around those policies, and uncertainty, too, about another factor, which is whether or not the federal government is going to be able to stay open beyond midnight Friday. Over the weekend, House Republicans finally released the text of a spending bill that would seek to avoid a shutdown, keep the government funded through the end of September. That's the end of the fiscal year. The problem is, Joe, with an incredibly tight majority in the House and the necessity of getting Democratic votes in the Senate, it's an uphill climb to actually get this thing passed.
They technically don't have the votes, so they'll have a much better sense of what happens after it goes through the Rules Committee today, assuming that does happen. Kaylee, Speaker wants to see a floor vote tomorrow, which is pretty aggressive considering the fact this just came together over the weekend. Lowers non-defense discretionary spending by $13 billion from the year earlier, about 2%. Boosting defense spending by about $6 billion. It has more money for the border as well. So he's trying to make a lot of parties happy here with one bill.
But that makes it not necessarily a clean continuing resolution, as some
That's what we thought we were going to need to get everyone to vote yes. Of course, Donald Trump is on board endorsing this with a no dissent post on Truth Social. The president acknowledging that a shutdown could happen in conversation on Sunday, but taking to Truth Social to apply Republican members saying we have to remain united. Kaylee, no dissent, fight for another day when the timing is right. Mike Dorning has been through a couple of these. This would be our first shutdown since 2019. Is that correct? Did I read that? It's actually, considering how many close calls we've had, it's been a pretty long time, and I don't think anyone really sees a shutdown taking place this time either. The question is, will there have to be an even shorter term stopgap to pass the stopgap for the rest of the year?
Exactly. There's very low chance. I was speaking with one of our congressional reporters, and he put it at 5% chance of an actual shutdown that lasts more than a few hours this weekend. They'll either pass this or they'll come up with a way to punt it down the road. And the reason why we think that is because neither side really wants a shutdown. They may be unable to agree on this solution, on this funding level, but neither one is really gunning to shut down the government.
Well, and that includes Democrats in the Senate, right? They face potentially the most difficult decision of all this week, because if the House does vote and pass this tomorrow, it's going to put them in quite a jam if the House gets out of town and leaves them no option to revise this thing.
Well, if the Senate passes a temporary measure and the House won't come back, that might look bad for the House. So it's possible that even if they get on their planes and go home on Tuesday, they might have to come back on Friday. But you can see, for instance, Senator Fetterman from Pennsylvania last Friday was saying, hey, we don't want to shut down the government. So there's a reasonable number of Democratic senators who just don't want the government to shut down. That makes you think that there's going to be some way of avoiding the shutdown. Whether this will fly, where they've basically given the Democrats nothing at all, cut domestic spending, and they only have like 2 Republicans they can lose on the Republican side. Whether that will fly or not totally clear.
Fascinating. We know that Tom Massey is a no and probably stays a no. He seems to have his own orbit where everyone understands that he's never going to vote for a continuing resolution. But then there's Tony Gonzalez, Brian Fitzpatrick, Corey Mills. Are these phone calls that Donald Trump makes, or do they just fall in line over the course
of... Well, last time, when it was up against it, Massey was the only one who would stand up to Trump and say, no, I'm not going to do it. So you get a sense that Trump can lean on these people. He's already said no dissent from Republicans on this. You can get on the phone with people and maybe ratchet up the pressure on them some more. So that's something we'll see, but the track record is whenever Trump tells Republicans no dissent, they're pretty much fall into line.
So assuming this can get done and the can effectively gets kicked to the end of the fiscal year, September 30th, it becomes a question around the next year's funding and budget reconciliation and that whole song and dance. How quickly will they be able to move on to that actual work of getting budget reconciliation done if they can do that this week? Do they start writing that bill next week?
They could start working on it. Now all the individual, the way they've structured this is all the individual committee chairs have to figure out what to cut. That's not likely to happen overnight, but they're already thinking about that, and they can start focusing on it more once this is passed. And whether it's this continuing resolution or they kick it down the can down the road a week and come up with something slightly different, you can pretty much figure this will get resolved soon.
All right. One bridge crossed at a time, I suppose. Mike Dorning, who helps lead our congressional coverage on our Capitol Influence team here in Washington. Thank you so much. And it is to Capitol Hill that we go next. I'm pleased to say joining us here on Balance of Power is Republican Congressman Chuck Fleischmann of Tennessee, representing the 3rd District. Welcome back to Bloomberg TV and Radio, Congressman. Appreciate your patience today. Obviously, a big week for you and your colleagues. As President Trump is saying no dissent on this package, do you expect we will see some dissent in the Republican conference?
Very little, maybe one. I'm an appropriator. I'm very, very pleased with the final work product. Obviously, I would have preferred a budget. I've worked on a budget on the energy and water bill now for months. We've had 2 continuing resolutions, but I think we'll see very little dissent. There's no appetite out there, and there should never be appetite to shut the federal government down. It costs more money to reopen, it hurts people, it puts our nation at risk. So I sincerely believe that we will pass this CR and that the Senate will take it up and pass it as well.
Congressman, it's good to see you, and welcome back to Bloomberg. I know you're sensitive to the financial markets, and we're watching Wall Street tumble here once again today. Following the president's remarks over the weekend, he would not rule out a recession. He also would not rule out a government shutdown when asked about that on Air Force One. And there are great concerns about what the administration's tariff policy is going to mean for financial markets. The losses cannot be ignored. We're back to where we were before the election, Congressman. Does Wall Street have this wrong, or does the president need to say something to stabilize markets?
The president is stabilizing the country, and as part of that, we do need to stabilize markets. But let's face it, Wall Street reacts, and I'm very cognizant of what Wall Street looks at every day. But the financial health, short-term and long-term, of this country will be infinitely better with Donald Trump at the helm. I think Wall Street gets that, but there are daily ups and downs, and we're sensitive to that. We want to make sure that we keep inflation low, that we keep unemployment low, that we keep the country moving forward. But the reality is there are so many things that have accumulated over the years, bad trade deals, other things that are just baked in, that we have got to ferret out and fix for the long-term health. Donald Trump's the best person to do that. I think he's one of a kind. Ultimately, the country will do well and Wall Street will respond.
And if recession is the price to pay for a reset of the economy, Congressman, is that justified?
Well, I don't necessarily concede that we're going to have a recession. There are always ebbs and flows. The administration has a role, Congress has a role, the Federal Reserve has a role. And let's face it, it's an international global economy. No one factor would predominate in causing a recession or curing a recession. I do think strong fiscal policies, keeping tax rates low, keeping regulations low are going to, and of course, what I do, keeping energy abundant in America. I'm the energy congressperson. I chair Energy and Water in the House. Once we put all these pieces together, I think we're going to see an unprecedented growth in America like we've never seen before. So sit tight, hold tight for the midterm and the long run, and we're going to be in great shape.
Crude oil prices are lower today as well. Congressman, West Texas crude is trading around $66 a barrel here. You start talking about recession, and you know that energy prices are going to start dropping, not to be confused with drill, baby, drill. How does this administration compel energy producers to continue producing in the face of lower prices?
Well, the best part about it is the United States, under President Trump the first time, I actually voted for it, became an exporter of oil for the first time in decades. We can export natural gas. Biden's artificial constraints on that he really didn't realize that he did when asked by the Speaker of the House. What we've got to do in this country is realize we have abundant natural resources, oil, natural gas, minerals, and the like. We take that abundance, that wealth, that resource, use it internally and export it as well. It will help create better trade relations and the like. Let's face it, it's supply and demand. You're right. If there is a recession, slight or otherwise, demand for energy will go down, but ultimately it always bounces back. What I look at is the big picture. I know this, America's demand and the world's demand for energy is booming. We cannot stay static, so we need our fossil fuels, oil and gas. I occupy the nuclear sector. I'm so glad that our new Secretary of Energy is pro-nuclear. We're going to work on that. But I want to see abundant American energy. I chair the American Dominance and Energy Caucus. So let's get supply out there, and demand will take care of itself.
On the subject of energy, Congressman, effective today, Ontario, the province in Canada, has announced a 25% surcharge on electricity exports to 3 U.S. states. This is part of retaliation for the tariffs on Canada that President Trump has, of course, put into place and pulled back a few times now. Should energy be exempt from whatever trade or tariff-oriented negotiations over fentanyl and the border this administration is having with what will be the Mark Carney government now that he's been tapped as the next prime minister? Do you worry about the role energy is playing in this fight, not just when it comes to U.S. and Canada, but you could look at retaliatory tariffs China has placed on U.S. LNG as well?
Well, I'm going to leave that to the administration to decide. And I trust them as they implement tariffs, they will use them. Many countries have backed off already. Other countries want to negotiate. Canada is our friend, but we've had disadvantageous trade agreements with them for quite some time. That needs to be resolved, just like it does in Mexico. The arrangement with Mexico is maybe not as amicable as it is with our friends in the north, but we have got to make sure, whether it's Canada, Mexico, or any other country, including China, that we don't continue to get beat at the table. Because when we continue to lose, we have to have an equalizer. Donald Trump is not only an equalizer, he's a winner at this game. So it's a process that has started. It's a process that's long overdue. And I think it's a process that ultimately Donald Trump and the American people will win.
Looking at the stock market and specifically the S&P 500 in real time as we speak, Congressman, we're going back to October. We may be back in September by the time the day is done here. I know that you're deferring to the administration when it comes to tariff policy and a number of other issues, including energy, that we're talking about. But is there a line in which we need to reconsider the way this is being communicated to the markets? Is there a point at which the S&P 500 will fall and the communications department at the White House and maybe lawmakers on Capitol Hill need to start addressing this in a different way?
Well, I hearken back to the wonderful days of Ronald Reagan, and I remember voting for Reagan in 1980. In 1982, naysayers were saying, oh my gosh, the sky is falling. They called it the Reagan recession, but he said, hold fast and hold tight, better days will come. And we literally had decades of great growth in this country, in our economy. The middle class boomed, people came out of poverty. It was a great time for America. I think we're going to see something very
Ronald
similar.
Reagan also had a real allergy to tariffs, Congressman.
Yeah, yes, he did, but he was not one who would shy away from the fight when the fight had to happen. When we had a situation that we do now, Donald Trump had to look at the entire world taking advantage of the United States, where some people in the United States, including some in my party, said, well, we prefer the cheap goods. The cheap goods were at the benefit of the American nation, and right now we've got to equalize that. I fervently believe that Donald Trump will see this through. He will not only macromanage this, he will micromanage this, and he will use that to gain other benefits, fentanyl, and better international relations with our good trade partners. I think the day of taking advantage of the United States is over, and I think Donald Trump is in the best position to preside over that. To answer your question, ultimately, Wall Street will be fine because Main Street America will be fine, and we're going to see abundant growth. Lower regulations, we're going to see less deficits, we're going to see a situation where we get those tax cuts back in place. The things that are going to drive our great economy will be done better under this administration and with Republicans in control.
Congressman Chuck Fleischman, the Republican from Tennessee's 3rd District. Congressman, thank you for the insights as we watch Wall Street today with our eyes on politics here in Washington. He's back in town for a vote as soon as tomorrow on the CR we've been talking about. Our panel's up next here on Bloomberg.
121 on Wall Street. We do check markets all day long here at Bloomberg. Just about the worst level of the day right now. We are looking at a 640-point drop on the Dow Jones Industrial Average, down 1.5%. S&P 500 index now falling by 136 points. That is a decline of 2.4%. We've got the NASDAQ Composite Index down 686 points on NASDAQ, down 3.8%. NASDAQ 100 Index down 3.5%. And our Mike Regan will have a whole lot more on the equity market coming up in just a moment. I ought to ask about Bitcoin, because right now we got Bitcoin down by 4.8%, just above 79,070 right now on Bitcoin. Your 10-year 4.22% with a 2-year 3.92%. Spot gold down $16 the ounce. The precious metal down 0.6%, $28.92. And West Texas Intermediate crude 66.17 a barrel. WTI down 1.3%. Got to keep it locked into Bloomberg radio and television for the very latest on these declining markets. BioNTech expects sales to fall again this year as the German biotech continues to work to bring its experimental cancer drugs to market. BioNTech shares, they are lower right now by 2.5%. Recapping, S&P down 2.3%. Balance of power continues. Back we go to Washington once again. Joe Matthew, Kaylee Lyons.
All right, Charlie Pellet with the latest on the markets from New York. Thank you so much. We're following closely from down here in Washington as well, as we consider the policy emanating from Washington and the Trump administration specifically, and how it is influencing the market activity that we're seeing. Clearly, Joe, the market is spooked by the idea of tariffs, the growth impact potentially they could have, the layoffs in the federal government as well. My question is, other than President Trump not ruling out a recession in an interview that aired yesterday, talking about a transition period for the economy, we haven't gotten the announcement of new threatened tariffs.
Correct.
There hasn't necessarily been a firm new catalyst for today's selling pressure. It just seems to be a continuation of what was increasingly a risk-off feel in financial
that's for sure.
markets.
Got a lot of broken charts out there. And to your point, the president had two opportunities to suggest, number one, we're not going to have a recession. Two, not going to have a government shutdown. He allowed for both possibilities. We have retaliatory tariffs that we're talking about now, and it's not even April 2nd yet, Kaylee. That's when the tariffs are supposed to get real. So you look at this market and wonder how much further we could go, and that's why we wanted to spend some time with Mike Regan. Bloomberg senior editor joins us now from world headquarters in New York. Mike, how are you reading this? I found it interesting that Mike Wilson at Morgan Stanley put a call out today, 5,500. Be the new bottom for the S&P 500? Is that what we're in for?
Well, hard to say, Joe, but I do think people are really sort of erasing their targets for the year end and really trying to figure out exactly what you're saying, how low it can go. 5,500 wouldn't be too much more painful from here. But I think, today the real story is just Wall Street is waking up to this idea that if you think back to the first Trump administration, it seemed like the stock market would sort of be a limit on how aggressive he wanted to get with trade policies. And if there would be sort of a real dislocation in the stock market, it would possibly make him rethink how aggressive he wanted to get. I think the interviews and the comments this weekend where he said basically, there could be a period of transition and he wouldn't rule out the possibility of a recession really has everyone across Wall Street sort of second guessing how much the stock market, at least in these early innings of the presidency, matters to President Trump. It seems like he's willing to sacrifice some near-term losses in the market to get what he wants, to get these tariffs in place and to get sort of the measures he wants in place to reduce these trade deficits. So I think, it's sort of a big rethinking going on of exactly what Trump is willing to tolerate as far as economic and market pain, Joe, in the near term here.
Well, Mike, even if he may not care as much about the stock market as previously thought, both he and others in the administration have been very vocal about the bond market and specifically where rates are and wanting to get borrowing costs down. At the very least, all of these growth concerns have driven a flight into the perceived safety of treasuries, or rather, the growth risk is driving treasury yields lower, perhaps. Is he at least getting some of what he wants to see from the market here?
Yeah, I mean, if you look at the 10-year yield especially, which the administration has clearly used that as sort of its benchmark when it comes to the bond market. 2-year yield is down about 4 and less than 4.25 percentage points, down from 4.8% in the middle of January. And you do remember Trump, I think it was last week, mentioned something about a big, beautiful reduction in interest rates. So that is stimulative to the economy. I think what the big question mark for Wall Street is, though, are we potentially looking at both weaker economic growth, even negative growth in the short term, and a pickup in inflation, that sort of stagflation concern, which is really, I think, the nightmare to a lot of investors. You do not want to see an environment where inflation remains high and the economy is weakening or even contracting, because that kind of ties the Fed's hands to some degree. They can't cut interest rates as aggressively as they would like to if that inflation stays high. So I think it's a little bit of that double whammy that Wall Street is really trying to wrap its head around right now. Is it possible that we see elevated inflation remaining for a while longer, even maybe picking up when all these tariffs go into place, and at the same time see negative economic growth, which would really be that stagflation scenario, Kaylee, that I think no one in the investing community would really like to see.
All right. Mike Regan, Bloomberg senior editor, helping us track the markets today. Thank you so much. And of course, if we do get a chime in from the president about the activity we are seeing, we certainly will let you know. There are potentially a few opportunities to hear from him today, as he is meeting within the next hour, scheduled for 2 p.m. Eastern time, with a series of tech executives at the White House, some of the very companies that are feeling the brunt of the losses today. It'll be interesting to see what messaging comes out of that. And he's also scheduled to sign executive orders later. So there is potential for the president to comment on this and other issues.
He's been known to. Remember the old days? To just walk right in the briefing room.
Yeah.
If it was something that he needed to speak to immediately, and this is a market that he might not be able to resist weighing in on here. You're right. It's the CEOs of Intel, IBM, Qualcomm, HP, kind of legacy tech when you consider the Jensen Huangs and Sam Altmans of the world.
Yeah, and that is one of the things that's helping us kick off the week here in Washington. But of course, there is still a lot on the agenda that the president will be paying attention to this week, including, beginning tomorrow, talks in Saudi Arabia between a U.S. delegation inclusive of the Secretary of State, Marco Rubio, and the National Security Advisor, Mike Waltz, with Ukrainian counterparts over ending the war. This is actually something we heard the president speak about over the weekend.
Well, we just about have. I mean, we really just about have. And we want to do anything we can to get Ukraine to be serious about getting something done. You know, I say they don't have the cards. Nobody really has the cards. Russia doesn't have the cards. They don't have. What you have to do is you have to make a deal. And you have to stop the killing. It's a senseless war. And we're going to get it stopped.
Talking about stopping the war over the roaring of Air Force One, answering a question specifically from a journalist about intelligence sharing with Ukraine, and the president suggesting that they are starting to share that intelligence once again after pausing it in the aftermath of that disastrous Oval Office meeting with Vladimir Zelensky at the end of the week before last. So for more on this, we turn to our political panel. Rick Davis is with us, Stonecourt Capital partner and Republican strategist, alongside Democratic analyst Jeannie Shanzano, senior democracy fellow at the Center for the Study of the Presidency and Congress. Rick, we can read into his language here, but I do wonder if you're sensing something of a tone shift on the part of the president as this delegation gets ready to go sit down and talk with the Ukrainians tomorrow.
Yeah, absolutely. I mean, it wasn't that long ago where the focus of the Ukrainians were to try and get into the discussion, right? They'd been completely left out of the early stages. The delegation to Saudi Arabia was Russia and the U.S. and nobody else. And so the fact that now the pendulum has swung to the Ukrainians, I think that you would expect to see Donald Trump starting to, sort of shout out more positively to the Ukrainian side, talking about how tough he's going to be on the Russians, talking about lifting some of the bans that he put on, assisting the Ukrainians in the war effort, add pressure to the Russians. And so I don't know. I mean, it's so hard to tell, but Steve Witkoff, the president's emissary to these talks, has been saying very positive things. Substantial progress is what he's saying is being made. So we can hope, right? Everybody wants to see an end of the conflict. And I think certainly those of us who support Ukraine want to see Ukraine begin the process of reconstruction and return to some level of normalcy. So we can hold our breath and see what happens this week. But right now we got a negotiation going on, and that's a positive.
Is that how you look at it, Jeannie? The difference between this meeting and the first one in Saudi Arabia is that Ukraine actually has a seat at the table. Is that encouraging you?
Listen, any talking is encouraging, but, the whiplash we've been talking about as it pertains to Donald Trump vis-a-vis the tariffs and the economy, you also see that vis-a-vis his foreign policy and Ukraine. On Friday, he's on social media talking about significant sanctions on Russia to move forward the peace deal. Hours later, he goes to the White House and talks to reporters and says he's finding it very difficult to deal with Ukraine. So I think it is very, very tough to know or to feel confident at this point, looking at this from the outside, that Ukraine is in anything of a better position than it was when Zelensky sat down with Donald Trump in the White House, which is the last time these two sides met. And of course, in the immediate aftermath, intelligence sharing pulled away, right? The idea that Ukraine is going to be in an equal position to negotiate the end of this thing. Donald Trump keeps chastising that they don't have the cards, but they don't have the cards because he's taken many of the cards away from them. So I don't know that I feel that confident in Donald Trump's view vis-a-vis Ukraine. And by the way, all of the headlines coming out so far of the meetings, even though they haven't even really begun, are the U.S. asking things from Ukraine. Where is the ask from Russia? We have yet to hear that.
Well, one of those asks from Ukraine specifically, Rick, is, of course, the sharing of the proceeds from minerals and rare earths that are found in Ukrainian soil. A lot of that, though, is in territory currently occupied by Russia. Is that actually a positive signal to you that the Trump administration may advocate for Ukraine getting that territory back because they want access to what's in it?
That's right. Even Donald Trump knows he can't trust the Russians to give him something that they would have agreed to. So, yeah, I think it's a positive. A lot of those rare earth minerals are in the Russian-occupied parts of Ukraine, and it's a tell that maybe there is a opportunity for Ukraine to regain back some of those, not so much through battle, but through peace negotiations. And I think that's a real card for Vladimir Zelensky. Get him out of there, and I'll make sure you can get your rare earths. And I am encouraged that it looks like the rare earth deal is on track. Even Donald Trump's talking about other things like lithium and other rare commodities that the Ukrainians have in their country, and that there is, in exchange for that, a ceasefire. And I think a ceasefire would really benefit the process, because we obviously have seen the up-tempo of attacks from the Russians since the negotiations started. And I think Donald Trump's got to put his foot down with the Russians and say, look, if you're going to increase your attacks on Ukrainians, then it's going to cost you at the negotiating table.
Steve Witkoff telling Fox News we're going over there with an expectation we're going to make substantial progress. We'll keep posted on what progress they make. Big thanks to our panel, Rick Davis, Jeannie Shanzano, our signature panel with us every day here on Balance of Power. I'm Joe Matthew alongside Kaylee Lyons. Congressman Don Byers on the way in next, the Democrat from Virginia, right here on
2:40 on Wall Street. We do check markets all day long here at Bloomberg. Developing story at this hour. Elon Musk says there has been a massive cyber attack against X, formerly known as Twitter. Now, Musk's social media platform X says it experienced intermittent outages with users across the globe saying they could not access the service. X experienced a site-wide disruption that also impacted data pipelines that it offers to its users. More than 40,000 users in the U.S. are reporting having issues at the peak of this outage. This according to the monitoring website Down Detector. Right now, we have got U.S. stocks trading very close to session lows. Right to the numbers here with the S&P now down 152 points, down 2.65%. The S&P at 5617. The Dow is down 775, down 1.8%. NASDAQ, the composite index, down 743, down by 4.1%, while the NASDAQ 100 index is down 3.8%. Mag 7 stocks being led lower by the likes of Tesla. Tesla shares right now are plunging 13.8%. We've got the 10-year 4.21%, the 2-year currently yielding 3.91%. Gold down $21 the ounce, down 0.7%. West Texas Intermediate crude trading at $66.10 a barrel, down 1.4%, and Bitcoin down 5.5% right now at 78,534 on Bitcoin. Again, recapping, stocks lower, S&P down 153 points, down 2.6%. Keep it locked into Bloomberg Television and Radio for the very latest on the market sell-off. For on-demand news 24 hours a day, subscribe to Bloomberg News Now. And back we go to Balance of Power. Once again, your hosts, Joe Matthew and Kaylee Lyons.
All right, Charlie Pellet, keeping track of financial markets that clearly are worried about the potential impact of tariffs. Thank you so much. I'm Kaylee Lyons alongside Joe Matthew in Washington, where there is no sign that President Trump is starting to approach tariffs any differently than before, still threatening to put reciprocal tariffs on U.S. trading partners on April 2nd, threatening, of course, tariffs reciprocal specifically on things like Canadian lumber and dairy. Although, didn't he say that that could come, Joe, as soon as a couple days from now, not waiting until April 2nd? Exactly. We're trying to keep track of all the different narratives here. What we do know, though, is that leading the trade fight on Canada's part is going to be a different character after yesterday's overwhelming result. Mark Carney, who happens to be the former chair of the board of directors of Bloomberg and better known to our audience as the former head of the Bank of Canada and then the Bank of England, is set to be the next prime minister.
That's right.
And he came out with some fighting words yesterday.
We didn't ask for this fight. We didn't ask for this fight. But Canadians are always ready when someone else drops the gloves. So the Americans, they should make no mistake, in trade as in hockey, Canada will win.
Ironic that it is because of Donald Trump and the tariff policies that we've seen Canada's Liberal Party vaulting into a position that it is now in. Very different than where we were even a couple of weeks ago. And we want to talk about it with Brian Platt. He's Bloomberg News Canada government reporter with us live here on Balance of Power. Brian, it's great to see you. Thanks for joining the program today. Is Donald Trump the best thing, actually, that ever happened to the Liberal Party of Canada?
It's completely changed the political environment in Canada. I really think you can't overstate it. And you know, what Americans need to understand is Canadians, I don't think it's an overstatement at this point to say Canadians view themselves as in a state of economic war right now. There's a huge backlash across the country. Canadians are furious, especially about the 51st state talk and the increasingly menacing tone it's taken on. And I would say, if anything, you know, Canada has counter tariffs in place right now. I think, if anything, Canadians want their politicians to go even further in retaliating, and that is the environment that Mark Carney will step into in a few days, most likely as Prime Minister.
Well, so Brian, if this is economic war, how significant is it that the leader of that will be someone who was in some ways a steward of the Canadian economy, leading the Bank of Canada during the financial crisis, then the Bank of England during Brexit? This is not an ordinary politician we're talking about.
Yeah, and you know, like, I was in the room last night when he made that speech. He's not an electrifying speaker, right? He has a finance kind of technocratic way of speaking. He doesn't even the tone of his voice doesn't tend to change that much when he's giving an applause line. But his experience in steering the UK through Brexit, and he was Bank of Canada governor during the global financial crisis in 2008. This is the kind of expertise that the country seems to be wanting right now, if you look at the public opinion polling. And his sort of like more technocratic and geopolitical expertise style of speaking, I think is really, at least if you look at the polls, that's what Canadians are looking for right now.
All right, Bloomberg's Canada government reporter Brian Platt, thank you so much. And I would note on the late edition of Balance of Power, we'll be talking about not just the ascension of Mark Carney, but also the implementation today of retaliatory 25% hikes on energy exports to the U.S. from the province of Ontario. Ontario's Premier Doug Ford will be joining us
I'm
at 5
looking
p.m.
forward
Eastern
to
Time.
this. He's not been mincing words and said he would do it with a smile if it meant cutting off energy to the U.S. So that's 5 p.m. Eastern Time. Please join us for Doug Ford. It'll be something to behold.
Indeed it will. But we also have an important conversation here as we close out the early edition of Balance of Power. Joining us in our Washington, D.C. studio is Democratic Congressman Don Beyer of Virginia. Thank you for being here on Bloomberg TV and radio. We have obviously spent a lot of time today talking about tariffs in particular, and that's actually something you are looking for a legislative answer for. You, together with your colleague, Congresswoman Susan DelBene, have reintroduced the Congressional Trade Authority Act, trying to take some of this power away from the executive. Is there any appetite with your Republican colleagues for this legislation to go through?
Kylie, in the short run, no. Right now, all of them are still very cowed by Donald Trump. As his numbers fall, and we think they will because he's doing nothing to help the American people in terms of their costs, which is the reason I believe he got elected. Hopefully some will move over. Certainly if it were a Democratic president, there'd be a lot of appetite to rein in the president's tariff authority. That's not what the Constitution, it gives the power to the members of Congress, not to the president.
You have a real unique view on all of this stuff from your years in the auto business. We hear about these arrangements in which a vehicle crosses the border 7-8 times over the course of its assembly. Is it time to start rethinking that? Why is that going on to begin with, Congressman?
Well, a lot of it, Joe, is they're trying to build parts and where they have the factories, where they have the people with the skill sets. And that's sort of the genius of free trade. I love to point out that since 1948 and the liberalization of international trade, it's been the greatest period of growth by far in human history. We've lifted billions and billions of people out of poverty because of trade. And so this notion of recklessly throwing 25% tariffs on our two closest friends and neighbors is crazy.
Well, and we've seen them threatened and then pulled back, threatened and pulled back. But if you're an auto business or any other kind of business for that matter, are you concerned about what it's going to do to investment decisions that businesses are making, hiring decisions businesses are making, even if we don't see the full implementation of these levies for an elongated period of time?
Oh, absolutely. Yes, I was a retail car dealer for 46 years. And the whole notion of they always want investment in new facilities and hiring new people. But if you don't know whether the products can be available or sellable in a year or two, I mean, business depends on predictability, on a certain sense of certainty and optimism about the future. When it's different every week, it's pretty crazy.
What's going to happen to the used car market if these tariffs are implemented? We all remember what happened during COVID. Used cars were selling more than new cars in some cases. Are we going to see a phenomenon like that because the cost of a new vehicle will be prohibitively high?
I think you're absolutely right, except for Teslas, which will be very cheap to get on the used car market right now. Because everybody I know with the Tesla is trying to sell it.
What do you make of that reaction? You know the power of a brand. I drive down Route 1. I see Bayer Subaru. I see the dealerships that still carry your name, realizing that's not how you make a living any longer. What if you've got Tesla on the board?
Well, one of the reasons car dealers don't like Musk is he was the first one to say he was going to sell directly to the public. And of course, as a car dealer, I think we take the best care of our customers. It's nice to have my name on the building because if somebody doesn't like it, they're going to see me in church or see me at the school or see me at the Safeway and beat me up.
Say, what about that undercoat?
But on a national brand, it's very different. But I do think, Joe, that we will see a real surge in used car prices once new cars become too expensive to buy. We're following what we've done with housing. With all those tariffs on steel, aluminum, and lumber especially, the cost to buy a house is just out of rates for so many people.
Well, if we're considering the cost of things, the cost of purchasing Tesla stock certainly is going down, as you're alluding to. That stock's down some 13% today. The net worth of Elon Musk is going down with it. And on the subject of Elon Musk, obviously Tesla itself has faced some backlash, in part because of the efforts he's making at the Department of Government Efficiency in concert with President Trump. The cuts to federal workers in particular, knowing that your district is literally just across the river in Northern Virginia, what impact is it having at home? And what are you hearing from your constituents about the manner with which these cuts have been implemented?
Kylie, we did a little economic empowerment fair at a local high school Saturday afternoon. Had 1,000 people show up. And I stood in line for 5 hours just listening to their heartbreak. And it wasn't just people who'd been on the job for 6 months. Many of them been there 15, 20, 25 years. The biggest story I heard, though, is how many of them that are getting fired are veterans. Some of that's because we have a veterans preference in federal hiring, but also that, and this may be just too conspiratorial, but a number of people with veterans with disabilities were being let go now because if there comes to RIFs later, the RIFs they'll get preference under those RIFs. So they're trying to get them out of the way in the short run.
It's pretty remarkable what the impact that it's having on the local economy here. You're dealing with laid-off federal workers in Northern Virginia. The District of Columbia, based on the budget you may or may not want to sign off on, the continuing resolution, has had its budget canceled. $1 billion in cuts. The D.C. mayor says it's time to start firing teachers and police. Is that going to be signed?
It's crazy. Joe, it's amazing that this continuing resolution, which I am going to vote against, actually cuts all cop programs. So it's defunding the police on a national basis. And then, of course, in Washington, D.C., which I love, it basically takes us back to 2004 in terms of what the budget would be, a revision of 20 years ago. We're going to try to fix it next day or two, but hopefully that won't happen. Yeah.
Well, as you are going to be a no vote on this continuing resolution, your leader, Hakeem Jeffries, has suggested the entire Democratic caucus should be voting no on this legislation, though we saw as recently as last week the guidance from leadership isn't always followed in terms of the conduct during the joint address to Congress President Trump gave. Will that guidance be followed this time, or do you think some of your colleagues, especially those who are in swing districts, might be compelled to actually vote to keep the government open?
It might be, and certainly generally we try to give swing district members the right to do what they think is right, to get them reelected. We want them to come back. I think we'll have almost 100% following Hakeem's guidance this time, mostly because, first of all, it cuts veterans benefits, it cuts medical research, and most importantly, you pass a budget where Donald Trump has already said he doesn't have to spend it. This whole impoundment thing, which is unconstitutional, illegal, we're passing a budget that he can just ignore.
Do we shut down, or do we avoid a shutdown here? I realize you don't like it, but even if you vote no, it looks like there might be enough Republicans to say yes.
Maybe. I hate shutdowns. I mean, I'm a Democrat. I believe in good government. But on the other hand, we've got to stop the evil things that Trump and Musk are doing.
So would you want to be in the other chamber right now, a senator who's going to be faced with the decision of either allowing this bill to overcome the filibuster or not? What should they do? What would be the correct decision in your mind?
Well, I'm still very much hoping, unless there are meaningful guardrails to keep Trump from impounding it and keeping the D.C. government going, that we should vote no in the Democrats in the Senate and hopefully some Republicans in the Senate.
As a local, if you will, to the Washington area member of Congress, give us a sense of what communication you're getting from the White House or DOJ directly when it comes to these cuts, knowing how many federal workers live in your district. Are you reading about it like the rest of us?
I was just reading about everything and talking to the people, hearing their personal stories, 15 minutes to clear out their desk. Yeah, there's no communication whatsoever. You know, I've been in business a long time. This is the exact opposite way that you treat your people.
Fire by voicemail, fire by email.
Exactly, exactly. That, you know, I long ago figured out, even selling cars, all you're really selling are your people. You can buy the same car a bunch of different places. But you want to have the team that works together. The most important job of leadership is culture, and they're destroying the culture in the federal government right now.
All right, Congressman, thank you so much for being here with us in studio. Lovely to see you, Democratic Congressman Don Beyer of Virginia, here with us on this Monday as the House is preparing as soon as tomorrow to vote on this continuing resolution. Meantime, Joe, on this Monday, it is quite a wild day in financial markets. Just off the session lows right now, but the NASDAQ 100 briefly was looking at a loss of more than 4%, with tech leading what is pretty heavy selling today.
Yeah, it looks like we're back down 4%. NASDAQ Composite, the S&P 500 down almost 3%. Kaylee, also lower is Bitcoin. Have you seen this? We're at 78,000 for a token, and the VIX just keeps cranking. Now up 18% to approach 28 on the VIX. Things are not slowing down. They're accelerating, to your point, and we haven't heard much from the White House to change that yet.
No, of course, we are expecting President Trump just minutes from now will be convening at the White House with a series of tech executives. I would imagine this may be a topic of conversation in addition to tariffs, the CHIPS Act money. Presuming there's a lot on the agenda, and we may very well hear from the president himself if he decides to take questions from the press.
Meet us back here at 5 o'clock. We'll have a lot to review from the Tech Summit, as well our conversation with Doug Ford, as we mentioned, right here on the fastest show in politics with Kaylee Lyons. I'm Joe Matthew. This is Bloomberg.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
All right, everybody, it is Monday, March 10th, 2025. Carol Massar, Tim Stanovic, live here at Bloomberg headquarters. We are live on TV, radio, YouTube, Bloomberg Originals. Not so sure I'm going to say a very good afternoon because here we go. Once again, saying in 2025, we've got U.S. stocks headed for their worst day this year.
Hey, maybe if you're short this market, it's a good afternoon and a good day to you. But if you're long this market, it is not pretty. We're going to have more from Charlie in just a minute, but the NASDAQ composite down 4.2% as we speak. The S&P 500 down 2.8%.
Yeah, there's a lot going on. Waning bullish Wall Street views. You've also got a weekend of Trump administration officials and the president also warning that the American economy may be in for a rough patch. So that is certainly front and center for us. So we're going to get into maybe welcome to the new narrative, a U.S. recession. We're going to ask our team about that.
Michael McKee is standing by right here. He's going to answer that question for us. And if that's the case, is American exceptionalism, Carol, a thing of the past?
It's a good question as well on this Monday. Plus, Novo shares are tanking. And then we're going to get into some developments uptown at Columbia University. It has to do with anti-Semitism and the president's executive order. So we're going to get into that over the next 60 minutes.
Plus, Donald Trump Jr.'s big plans to monetize MAGA. All that and more coming up over the next hour right here on Bloomberg Business Week. First up, though, a check on the day's trade and top business stories. Here's Charlie.
Thank you very much. We got you covered on these markets, fast-moving markets to the downside, right to the numbers, because I'm looking at a Dow right now down 815 points. That is a decline of 1.9%. S&P is at 5611, down 158 now, down 2.7%. NASDAQ is down 4.2%, with the NASDAQ Composite Index plunging 766 points. The NASDAQ 100 Index down 3.9%. Big tech being hit hard. Tesla leading the way lower with a plunge now for Tesla of 13.8%. The Dow right now 4,200 even. 10-year currently yielding 4.22%. The 2-year 3.91%. Gold down $25 the ounce, 28.84. Drop there of 0.9%. West Texas Intermediate crude down 1.5%. WTI just above $66 a barrel. And Bitcoin, major story as well. Bitcoin plunging 5.7% right now, 78,380 on Bitcoin. Oil, as I mentioned, down 1.5%. Oil slipping as signs of economic weakness in the world's two biggest crude consumers, the U.S. and China. Fan concerns that tariffs will sap global energy demand. But interestingly, we've got a number of major oil companies advancing today. Case in point, ExxonMobil up 2.1%. ADRs of BP up 0.4%. Chevron up by 1%. Again, those equity numbers bear repeating, with the S&P down 158 now, down 2.8%. NASDAQ down 4.2%, and the 10-year 4.22%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. So, yeah, we are, no doubt about it, starting with the U.S. stock trade as a chorus of Wall Street strategists is warning about higher stock volatility. You got Morgan Stanley's Mike Wilson saying the latest to sound the alarm on economic growth worries. Other market forecasters include over at JP Morgan Chase, RBC Capital Markets, all tempering bullish calls for 2025. You know what's really the catalyst here? You've had Trump's tariffs really stoking fears of slowing economic growth, and you also had the president and the administration making some talks about the U.S. economy. Not such great ones over the weekend.
Well, let's get with it with Bloomberg Intelligence Chief Equity Strategist Gina Martin Adams. She joins us here in the studio. Gina, the plunge in the S&P 500's most influential group, big tech. We got the S&P 500 going below its 200-day moving average for the first time since November of 2023. It's off at least, well, more than 8% from its high. The NASDAQ 100 off about 12% from its high. How much is tech weighing on the overall trade?
A lot. I think it's one of three monstrous issues weighing on stocks. It has been the case most of the year. If you look at the Mag 7, for example, they peaked all the way back in December. They're down 16% as of yesterday from their
so
peak.
Almost
and
a bear
more
market.
Weakness. Yeah, pretty significant decline in the Mag 7. Of course, a lot of that is selected stocks, Tesla and NVIDIA weighing heavily there. But nonetheless, that in and of itself is creating a big drag on the index. But it's more than that. Clearly, the Doge firings and the concern about the ultimate consumer outlook as a result of that have been weighing on consumer stocks. At the same time, you do have the tariff chatter, which is creating sort of stalled activity with a lack of a better descriptive term, and a lot of uncertainty. And a lot of that tariff chatter impacts tech as well. I think this is a little bit underappreciated. If you look at the companies in the S&P 500 with their greatest cost of goods sold exposure to overseas economies, it's tech and communication stocks. So those groups, being the biggest market cap share, also really drove so much of the optimism over the last 2 years, and that's now unwinding.
So it's not a case of just repricing, because we've talked about,
Yeah.
right, what a tremendous run-up we've seen over the last couple of years. So at some point, you got to expect some of that to come out of the markets. Is it still just a repricing, or we've gone beyond that?
Yeah, I think up until this weekend, it really was about a reset of expectations that were far too robust. I mean, this is something we started talking about in December. Our fair value models were detecting that inside the market, the S&P 500 was priced for greater than 20% earnings growth to emerge this year, which is a next to impossible task. This just doesn't happen unless you're bouncing out of recession.
Right.
So it seemed almost impossible for the market to satisfy those for the companies to satisfy those expectations embedded in market prices. There was also, though, this underlying narrative, if you will, in the market that the president was inordinately going to pay attention to the market as a guidepost, and he obliterated that theme. Over the weekend. I think he just crushed it.
You think so?
And that's what's happening today. Is he just said, we are going to have short-term pain for long-term gain. I don't actually pay that much attention to the equity market. He completely just blasted that whole theme out of the water.
We got clues. Well, I'm trying to think, was it the press event on Friday?
We got clues last week, but he said, I'm not paying attention to it. But then he also said a few minutes later, it's the globalists who are causing this sell-off. So that indicated to me that he was sort of paying attention to it.
Well, the globalists are causing the sell-off because the
According to
globalists
him.
recognize that tariffs are coming.
Yeah.
Right? Tariffs are coming. And even though he is saying, they may or may not come, I'm using these as a negotiating tool, incrementally we have had more and more tariffs implemented so far this year. Maybe not as much as he originally said, but we have had more.
Do you buy it that he's not paying attention to the market? I know you said that idea got obliterated over the weekend, but look what happened during his first term. I mean, there were tweets, there were social media posts every time there was a new record. He did the same thing in the Biden administration.
So I think we've rewritten history of what happened in his first term. If you look back at 2018, it was one of the most volatile years on record. We had Volmageddon the first part of that year. We had a 20% correction in stocks in the second half of that year. He didn't jump into the equity market to save the day by reversing tariffs in the second half of 2018. There's only so much that he pays attention to the market, but we've rewritten that narrative somehow in our minds. Now, yes, in the first year of Trump's term, we had magnificent returns to equities because he put forward tax reform, which is a net beneficial, has a net beneficial impact to earnings growth. And then we didn't get to tariffs until 2018. It's the reverse today. Tariffs have a net downside to economic and earnings growth that is inescapable. He recognizes this in his commentary. We hope that we might get to some kind of tax reform and some kind of domestic programs to substitute for the loss of earnings momentum from tariffs and some of the geopolitical risks that have emerged as well. But it's a hope, and hope is not a strategy. So the market is saying, okay, real time, things are a lot worse than we were hoping for.
If it is the strategy and it comes to fruition, so tariffs first, then tax cuts later, is that enough to juice the markets and have them come back and provide a floor? Or?
It could be. It could be. It depends upon what kind of tax reform we get. Our best guess is based upon the promises in the campaign, we will get about half as much a benefit as we did in 2017. Just doing the math on the numbers. But it depends on how far earnings expectations have been suppressed with respect to tariffs and what comes out of those negotiations in the second half of this year. It's still very much up in the air.
So it raises the question about valuations, Gina, which Carol was alluding to a little earlier. The idea that people have said by many measures, stocks are expensive right now.
Yeah.
They're out of line with historical standards from a PE perspective. Are we starting to see them come back to earth?
That's a great question. It's something we actually wrote about today for tomorrow, and the answer is no. Unfortunately, the reality of the U.S. equity market is we were so far above our valuation bogeys that even with the 7% or so correction that we've had in stocks so far, we're still near all-time high valuation levels set in the post-pandemic period. That's only for U.S. stocks, though, and it's really specifically for large-cap stocks. I still think that the international opportunity is there, even with the re-rating. This is a year where international stocks are just likely to shine with the programs that are being initiated. And small caps have derated again. Small caps have had an absolute horrible February and early March so far, and they have derated once again to be at discounted levels.
Is there anything, just kind of final question, final thought at this point, anything about the selling that we're seeing that makes you a little bit nervous? I mean, the VIX is 28. It's not like it's up to 40.
Yeah, that actually makes me nervous.
Okay.
The fact that the VIX has, we talked about this a lot on our team call actually this morning, is what's happening here with volatility, because low volatility stocks are absolutely pummeling high volatility stocks right now, but the VIX has only incrementally moved higher. You love a huge spike in the VIX because those are usually affiliated with bottoming formations in the equity market, like we had with the Japanese yen meltdown last summer. We had a VIX spike all the way to near 40. I think it even got above 40 intraday. Very clear sign of panic. We don't have any panic emerging yet. Instead, we just have this sort of seesawing upward direction of volatility. The last pattern like that we saw was 2022, which was obviously a horrible year for stocks.
Right.
That was also the last time we saw such an extreme underperformance by U.S. equities compared to the rest of the world.
That was that when that yen blow up happened, Carol. That was back in August. The S&P 500 was at about 5,200. It's at 5,600 now, so about another 8% to go to get back to there.
Happy Monday, everybody.
Good news all around.
Gina, thanks so much. Gina Martin Adams, Bloomberg Intelligence Chief Equity Strategist for us here. All right, so now we need to really talk a bit more about the U.S. economic backdrop that's fueling today's risk-off trade on Wall Street.
Hey, Gina said it. Anxiety that tariffs and government firings will torpedo growth in the world's largest economy, extending this 3-week stretch of volatility across global markets. As you just heard, American stocks fell as Wall Street forecasters tempered their bullish views while demand for recession havens boosted sovereign bonds in the U.S. and Europe.
And when it comes to a recession in the U.S., President Trump added to the concerns about an economic slowdown when he appeared on Fox News yesterday and was asked whether he is expecting a recession this year.
I hate to predict things like that. There is a period of transition because what we're doing is very big. We're bringing wealth back to America. That's a big thing. And there are always periods of, it takes a little time. It takes a little time.
That is President Trump appearing on Fox News yesterday. Now let's get to the latest on the U.S. economy and the prospect for a U.S. recession. Back with us is Bloomberg News international economics and policy correspondent Michael Mickey here in studio. So, are investors making a big leap from transition, which we heard the president use the term, to recession?
I'll start by saying Gina was the little black cloud over the markets today. It's an interesting question because the economic fundamentals have slowed, but they haven't given any sign that they're falling off a cliff. And while the equity markets are jumping out on the window ledges on Wall Street, the bond market is not. Yields have come down some, but if you look at both high yield and investment grade spreads, they're still very, very tight. So it's hard to say that a recession is baking itself into the cake. The New York Fed has a recession indicator that suggests that we're getting pretty close to recession, but we've also gotten false signals from that over the last couple of months. And last Friday, Mickey Bowman of the Fed was noting that it's possible that the whole idea of yield curve inversion isn't working anymore for some reason. And we saw that with the yield curve inverted for 2.5 years and no recession. So it's hard to say that we're actually going to have a recession.
If somebody from the Trump administration were here, perhaps they'd say what Kevin Hassett of the National Economic Council said on CNBC earlier today. The second quarter will, quote, take off after tax cuts.
The second quarter is not going to take off after tax cuts because tax cuts aren't going to happen until the third or fourth quarter. And that's another thing.
But the market can kind of lead right?
Yeah.
Expectations of something.
Everybody's talking about tax cuts. The basic part of the whole tax exercise this year is just to extend what we already have. And if they do that, which is got to be your base case scenario because it's hard to finance the rest of it. If they do that, your paycheck's not going to change. I mean, it's not going to go up, which would be a tough thing for the economy, but it's not going to go down. You're not going to suddenly have all kinds of extra money to spend. So it's a little bit of a misleading debate. Now, if we stop taxing tips, that'll help a little bit on the margin, but tips basically are the lowest paid workers in America. And so they're not going to be adding that much to GDP. And seniors, if you don't tax Social Security, seniors don't spend as much. They're on fixed incomes. So it's hard to see tax reform, other than a psychological tailwind to the markets, really adding a lot.
How quickly can the U.S. economy go from okay to, or signs of weakness to a recession?
Very quickly, and that's part of the problem that we have, is nobody can really call a recession. The old joke about...
We're those guys who are like, hey...
The markets...
I believe they're referred to as eggheads.
That'd be us. The markets have called like 7 of the last 3 recessions, I think, is the old joke. Because it's a confidence thing. It's when people lose confidence, and that's what's really hard to measure. We did get the consumer confidence numbers, and we'll get Michigan on Friday. And we did get a New York consumer confidence reading today that suggested that people are growing more concerned about their jobs and income prospects. But it's really a kind of a fast collapse that leads you into recession. And right now, that could happen. I'll go back to 2001 when George W. Bush took over. That was when we were just having the tech bubble burst. And he was immediately talking about, well, maybe we need to do some stimulus here to keep the economy from going into recession. And the question then was, could he be talking the economy into recession? And that may be where we are now, in that we're all talking about it, and then Americans out there who are listening to this program are saying, oh no, let's head for the bomb shelter.
Well, as Tim reminded me, and I was like, what? There's a Fed meeting next week, and we get a Fed decision. How does Jay Powell and the FOMC and the voting members take some of this market volatility, this Trump conversations and qualification of the economy, maybe this transition? Do they take that into account? And could we see some kind of rate move next week?
No rate move next week. They've Jay Powell just spoke on Friday and said no rate move next week. They don't have enough evidence of anything, and by the time they meet next week, who knows what the stock market will be doing? It could be up 120, or 300 points or something. So they will take it into account as part of their overall we're watching things mode, but it doesn't really figure in.
Mike, I want you to get a weigh in on whether or not Trump looks at the market today like he did in his first administration, his first term, something Gina was talking about. Is there something to be said with the idea that because of the populism that he has embraced, that his administration has embraced, if the stock market goes down, it's not necessarily a big deal because of who owns the majority of the stocks in the U.S.?
Well, that's a bit of a misnomer. Now, I can't read Donald Trump's mind. I don't think anybody, even him, can read his own mind. So we don't know what he's going to do day to day. There was the idea coming into this administration that there would be a Trump put, which he has so far not exercised and has suggested he'll let things go. But does he really want the market to crash? You got to remember that a lot more people own stocks than we think. I mean, sure, the very wealthy own a lot of stocks, and he's doing a lot to protect the very wealthy these days. But through their 401ks and pension plans and things like that, that also, the markets affect the average person. So it's kind of hard to know exactly what his position is on this. And as people say, it's hard to know whether he's playing 4D chess or not. And we all just got to watch.
All right, we got to run. Mike McKee, thank you so much. Hey, coming up next, we talk about European exceptionalism. That's next.
It's 2:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got the NASDAQ 100 index set for its worst day since October of 2022. Right now, we have got the Dow, the S&P, NASDAQ 100 index, and the Russell 2000 index all very much in the red. Keep it locked into Bloomberg Radio and Television for the latest on these declining markets. The S&P right now down 158 at 5612. That is a decline of 2.7%. Anxiety over tariffs and government firing sending stocks lower, with the Dow now down by 872 points, a decline of 2%. NASDAQ down 765 for the NASDAQ Composite Index, down 4.2%. The NASDAQ 100 index now down by 3.9%. 10-year 4.23%, with a 2-year currently yielding 3.91%. Gold is down 0.9%, 28.83 the ounce. West Texas Intermediate crude holding just above $66 a barrel, now down 1.5%. And Bitcoin, we are seeing a major sell-off there, down 5.6%. Bitcoin at 78,454. Right now, Apple shares are moving lower. Apple down 5.4%. It is seeing its biggest intraday drop in more than a month. Tesla leading tech stocks lower. Tesla right now down by 13.8%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now, wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, you just mentioned the big numbers here, worth repeating because it is such a day, if you are long this market, not so good. A lot of red. The S&P 500 down 2.8%. The NASDAQ Composite down 4.2%. For more on the markets, Bloomberg News senior editor Mike Regan joins us here in the studio. Mike, the reaction that we're seeing today, part of the unwind that we saw last week?
Yeah, I think so. I think, Tim, some of the comments that President Trump made over the weekend obviously have people sort of recalibrating their expectations for how Trump might react to this stock market swoon. I mean, clearly, look, we're down more than 8% in the S&P from its last high, almost 13% in the NASDAQ 100. I think, anyone who was around during Trump's first term sort of got in the habit of thinking that, well, if the stock market reacts too poorly to some of these policies, that maybe he'll soften his tone on them a little bit or backtrack a little bit. It seems like in this instance, at least in these early innings of his second term, that's not the case. He made remarks on Fox over the weekend saying, the economy's in for a period of transitioning, and that, he's not necessarily looking at the stock market and allowing that to worry him about these tariff and government job cut plans that he has. So, I think all of Wall Street today is waking up to the idea that the administration, and it sort of echoes, the Treasury Secretary Scott Bessent had said similar about the economy needing to go through what he called a period of detox. So, I think investors everywhere are warming up to this idea that this administration will tolerate not only some stock market weakness, but some economic weakness in order to achieve their longer-term goals, rebalancing trade and shrinking the government.
To be fair, Mike, I mean, we're still up, I think, 46% on the S&P 500 over the past 2 years, since the end of 2022.
Yeah, it was 2 strong years. Yeah.
Right, 2 strong years. And we've said that at some point there needs to be a little bit of a repricing, considering the run-up here. Having said that, if this is the environment where tariffs persist and more tariffs come, even if we get tax cuts, I mean, does the sentiment still stay kind of risk off here?
I don't see it coming roaring back to risk on in the near term, unless we hear some kind of decisive change of tack. The one thing about President Trump, obviously, is he changes his mind a lot, or at least he changes his messaging and his decisions on tariffs. So at some point, this nasty of a market, one would think, could still maybe cause him to change his mind and maybe push back those reciprocal tariffs or the April 2nd tariffs a little bit further. But he's very unpredictable, as we all know. So it's hard to really say X and Y need to happen in order for Trump to do Z. I think we all just have to wait on the edge of our seats and see how he reacts to this.
I will point out 325 names to the downside in the S&P, but 176 to the upside. So it's not like investors have run away from everything.
Yeah, a lot of the defensive, sort of economically defensive sectors are doing okay today. And the real high flyers, those NASDAQ 100, the Mag 7, those are really, at times like this, it's those highly valued companies that tend to take it the worst.
Tesla down 14% as we speak.
Yeah, I mean, there's a lot of questions there, right? We keep covering it and some of the concerns in some of its key markets. Mike, thank you so much. Bloomberg News senior editor Mike Regan. We're going to stay with the markets, but also broaden out and get a C-suite view. I mean, we've talked so much this year often about how European markets are outperforming the U.S. market by a wide margin. The Euro Stoxx 50 is up about 10% year to date, while the S&P is now down, I think, close to 5% in 2025.
With a view on that contrast and the continued electrification of our world, let's head on over to London and to Gwenaëlle Hewitt, Executive Vice President of Europe Operations over at Schneider Electric. It's based in France. Schneider manufactures electrical power products. The company's ADRs trade in the U.S. this year down roughly about 5%. Gwenaëlle, welcome. First up, the global market environment today, geopolitics. How difficult is it to do business in this economy, in this market?
Well, I think that what we are looking for is some strong position in Europe in order to shape what will be the future of the industry in Europe. And in that sense, it can be as an electroshock, right? To switch gears. I mean, for the past years, the European Union has been regulating quite a bit. Now we need to project that into concrete investments, into a very friendly environment for industry. And that's what we're expecting right now, right?
You are expecting a friendly environment for industry?
Exactly. I mean, the European Commission just announced a week ago a clean industrial deal in order to promote and accelerate the development of the industry in Europe. That's what we need. We need a European industry that is much stronger. We need to build and to boost its manufacturing footprint within Europe. We need to compete globally. And the European Commission has a role to play in that sense. Of course, we have a very strong assets. The first one is being a very large internal market, but at the same time, we have very strong industrial players. So we need to leverage on that. And the problem is that in the past years, there were a lot of regulation, sometimes over-regulation. And now we need to come around more incentives, how to accelerate through more incentives, friendly environment instead of only compliance and just regulating in a very difficult way.
Gwenaëlle, I do want to ask you, though, about the U.S. market versus the rest of the world. I mean, how do you describe the demand that you're seeing from your U.S. customers? And from what I understand, you guys produce about 83% of what you sell in North America locally. But tell us about North American demand, U.S. demand specifically, and then what you are seeing in terms of demand outside the United States. Is it strong in both areas? How would you describe it for each?
Well, so just to put it simple, our model for Schneider Electric is a very much local model. So what we sell in the US is produced in the US, what we sell in Europe is produced in Europe, etc., etc. That's really very much important, especially in geopolitical context that you're seeing today. The mega trends that are below the business, is around energy transition. It's around data centers and electrification, digitalization, and all that remains across the world. So I can tell you today that yes, we have huge demand in the US and we are building factories, expanding, etc. But Europe is also an area of growth. Why? Because we had in the past years the EU Green Deal, favoring renewable energy development, favoring also energy efficiency, and this is taking off. So when you look at our numbers, yes, we created growth also in Europe. So that's why, we have to remain hopeful, because the sustainability asset that we have built across Europe is still valid.
What about in the U.S. when it comes to the switch to renewables? Because we've heard from the president that he does not favor the policies of the last administration. He likes to call the Green New Deal the Green New Scam. And he talks about drilling here in the U.S., not the switch to renewables. How does that affect your business?
But let me come back to Europe, because at the end of the day, this is an asset that we have built in Europe. So how to continue differentiate it by developing their own technology in Europe. And there is a lot to be done. Look at electrification. Electrification in Europe is stagnant. So we need to accelerate. I don't want to give the impression that everything is done in Europe. On the contrary, we have to fight for more electrification, because again, this is a challenge, more digitalization, more renewable, and hence more investment into the network. This is not a done deal. So that's why when it comes to Europe, you have big numbers, big targets in terms of decarbonization, in terms of renewable energy, in terms of energy efficiency. We need to turn that into reality already in Europe.
But in the U.S., if you don't see those policies coming from the federal government, do you start to see companies moving away from that, and that affects your business?
Well, again, I told you we are very much across the world, and in US we are very much local for local. We have our own customers. We have a huge trend over there, and the mega trends that I was discussing about around digitalization, electrification is still happening. So let's not oppose one to each other. I think that we have to look at each and every market, and within these mega trends, which one can accelerate faster depending on the context that we foster. And in Europe, again, it's not a done deal. So that's why it's not against Europe, against the US. On the contrary, each and every region has their own pathway. The question is that now with the geopolitics, everybody is, looking around. I think that we need to focus on the own market, and being the most local company is really an asset.
So it sounds like, and forgive us, I think we're just, came in Monday and we saw a global sell-off, and I think we're trying to you have a great vantage point in terms of looking around the world and in terms of business and really trying to understand. I mean, you guys sell big time. North America is your biggest market. Asia Pacific is just right behind it. Western Europe, of course, as you've been saying, very, very important. And then, you've got almost $5 billion in the rest of the world. So you really have this great snapshot of what is going on globally. And I think we're trying to assess, as we watch the U.S. market come down, we saw European markets also under pressure, that are we starting to see some kind of global slowdown? It sounds like from what you are saying that you're not worried about it, whether it's a U.S. recession or global recession. That's not necessarily something that's in the cards from what you are seeing. Is that fair?
You know what? Why I'm so optimistic is that I'm looking at the mega trends that we at Schneider are positioned. Okay, It's climate change, it's energy transition, it's electrification, it's digitalization. Those mega trends are not slowing down, so that's why we are still optimistic. And to give you one example, you're saying it's challenged in Europe. Today, there is a discrepancy between commitments that leaders have been taken and the reality of the projects that are developing. So we need to accelerate. So that's why I really want to continue pushing and showcasing that even in a country or in a region that is so committed to the energy transition, we need to continue having attention. I give you one number. Just to fulfill the commitment that we have in Europe for renewable energy, we should develop 30 gigawatts of wind a year. And now we are developing only 17 gigawatts. So just to showcase you that in reality, the path, the acceleration should be made also in Europe.
Good stuff, and some perspective on a day where it's very easy to get distracted, probably rightfully so by the markets and concerns about the outlook, but certainly some optimism from Gwenelle Hewitt. She's Executive Vice President of Europe Operations at Schneider Electric, joining us from London on this Monday. Quick check on the markets.
Yeah, NASDAQ Composite down more than 4% right now. The S&P 500 down 2.8%. And just because I like talking about crypto, CRYP Go on the Bloomberg Terminal, Bitcoin down 5.8%, Ethereum down 7%.
Still ahead on Business Week, Novo's new obesity drug disappointing again. What you need to know about it when we come back on Business Week.
2:40 on Wall Street. We do check markets all day long here at Bloomberg. NASDAQ 100 index set for its worst day since October of 2022. Back to work Monday, and we are looking at a major sell-off for the U.S. equity market. Got to keep it locked into Bloomberg Television and Radio for the latest and see how things shake out at the close and how Asian markets react tonight. Right now, we've got the S&P down 170. That is a decline now of 3%. The S&P at 55.99. The Dow is down 951 points for the Dow Industrials, a drop now of 2.2%. NASDAQ is down 780 points for the NASDAQ Composite Index, a drop there of 4.3%. Speculation is growing that President Trump is willing to tolerate economic hardship to achieve long-term goals. The 10-year, 4.21%. The 2-year, 3.90%. Gold down $22 the ounce, 28.87, down 0.8%. West Texas Intermediate crude oil down 1.6% now, 65.97 a barrel. And Bitcoin now down 5.7%. Bitcoin at 78,329 on Bitcoin. Corporate news: Rocket is pushing deeper into the property market with a deal to buy Redfin that values the real estate listing site at $1.75 billion. Rocket, though, down 15.9%. Redfin, meanwhile, is surging by 67.2%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Folks, we have been keeping a watch on shares of Novo Nordisk because they have plunged the most since December after another disappointment for the drug maker's next generation and new obesity drug, Cagrisema. I'm not sure I'm saying it correctly, so we're going to ask what our Madison Mueller has to say about that because I'm not sure I have it right. The stock, though, has been, the ADR is down as much as 10% today. So let's get to what you need to know about this and really the overall GLP-1 trade and narrative. Back with us is Bloomberg News health reporter Madison Mueller. She's in Miami. She's at the Leerink Partners Global Healthcare Conference. Hello. Have I said it correctly?
Hello.
Is that the name of the
Cagrisema. You were close.
Okay, close.
You were close.
Is everybody talking about this at this conference? I have no idea what this conference is about, but just curious.
It is actually surprisingly no, at least not from what I've heard. I mean, you would think that they were, but I think that the focus mostly has been on President Donald Trump and the new administration. There's a lot of panels and sessions on that. So I think that that's actually been a big focus for this conference to start off, at least.
Well, let's go there. If that's the big focus of the conference, what have been the takeaways? Because you also have another really interesting story about Robert F. Kennedy Jr., who heads up HHS. And potentially what some senators are demanding. It's interesting, and we'll get to that. It's interesting, though, because is there an opportunity, do these investors see an opportunity within an administration that has somebody at the helm of HHS who has argued against Big Pharma?
Yeah. So that's the thing that these senators, there's 3 Democratic senators, Senator Warren, Wyden, and Sanders. They're demanding, they wrote a letter this morning to RFK demanding more information about the meetings that he had with Trump and with some big pharma executives, which is something that we've reported on. And there really hasn't been a lot of details that have come out of those meetings and that have been shared publicly, at least. And one of the things that RFK Jr. has called for is radical transparency. And he's also spoken out, like you said, against big pharma companies. So I think that these senators are really wondering what's happened in this meeting, what are drug makers lobbying for, what are they pushing for, and if RFK is really all about radical transparency, then, he shouldn't have a problem sharing it. At least that's what they've said. And so that is a question, though, of what's going to happen with weight loss drugs and with other pharmaceutical products with RFK at the helm of HHS. So far, it seems like it's kind of a big question mark still. But we have seen already RFK sort of go back on some of his promises, at least that he made in the confirmation hearings when he said that he wouldn't mess with the CDC's advisory committee for vaccines. Some of those meetings have already been postponed or canceled. And so we're already seeing some changes, at least from his public narrative. And so I think that it still remains a question, and a lot of executives are wondering, like, how do we navigate this and what's going to happen next?
So it sounds like, Madison, they're a little bit on the fence here in terms of executives, like not quite sure, is it going to be, I think there was a thinking it'll be an easier regulatory environment and maybe easier to get, right? So, but it sounds like, are they on the fence just kind of waiting to see?
Yeah, it sounds like they're waiting to see. I mean, at least that's what they're saying publicly. At first, like you said, there was a lot of optimism and, about an easier regulatory environment, and just that, Donald Trump's administration would be more business friendly. But I think that initial optimism, at least, is sort of being walked back a little bit. That being said, companies are still publicly really trying to curry favor with Donald Trump. We saw Eli Lilly a couple weeks ago announce a $27 billion manufacturing expansion in the U.S. specifically, sort of, answering Trump's call to bring back domestic manufacturing. So we are at least publicly seeing companies still trying to curry favor with Trump.
Is there any discussion about funding of universities and funding of biotech research at universities here in the United States? We've spoken to some folks on our program in the last couple of weeks who did mention that a lot of interesting developments have tended to come from research that's been done thanks to federal grants. Is there any discussion about that happening at this, Madison?
Yeah. Not that I've heard so far, but that is something, again, that I think is sort of brewing under the surface. And I was talking to a couple of people in the last few weeks who were saying that for biotech companies and for big pharma companies to really speak out publicly about the changes that are happening from the new administration, whether that's funding cuts or meeting cancellations or whatever it is, that there's sort of a line that the new administration will need to cross, and we maybe haven't crossed that line yet. These people were saying that might happen when there's layoffs or funding cuts that happen at the FDA Center for Drug Review. So the ones that are really overseeing the process of bringing new drugs to market, which obviously is extremely important for pharmaceutical companies, biotech companies. They were saying that might kind of be the line, but that there is probably sort of a line that these companies have that they'll start speaking publicly when the new administration crosses that, if they do cross that line.
All right. I have to go to Novo because investors definitely drawing a line in the sand today. Shares of the ADRs of Novo Nordisk that trade here in the U.S. are down more than 9% right now. What do we need to know about this news today, about this kind of next new diet drug from them?
Yeah. So we talked about CagriSema back in December when Novo released results from their obesity trial. And that's when investors were initially very disappointed. They had been expecting 25% weight loss from this next generation drug, and it did not hit that. And this trial is sort of a follow-up to that. It was in patients with type 2 diabetes. So in patients with type 2 diabetes, usually there is less weight loss anyway. Investors were still expecting like 20% weight loss, which is actually what the obesity trial came in at in December. And so I think that the results to me are not extremely surprising, but it is sort of, we've had so much positive sentiment about Novo over the last couple of years that any sort of disappointing results now I think are really, grab attention and people are really paying attention to and maybe overreacting to a little bit. But this result wasn't totally out of left field based on the obesity results. But I think it's just the expectations for Novo have been so high that it's hard when they don't meet those.
Yeah, let's remind everybody in 2023, it was up more than, the ADRs at least up more than 50%. A little bit of a pullback last year, but they've been on a tear.
Hey, Madison, just 30 seconds. How much improvement are these companies looking for with the next gen of obesity drugs?
Yeah, so the 25% threshold is really the threshold for next generation products. That's what they're looking for. Eli Lilly's drug Zepbound is like around 21%. So it's really, the next generation products have to beat that because it's a really good drug. Side effects are not as bad as Ozempic and Wegovy. And so you want less side effects, more weight loss, around 25%. Or if you can come up with an oral drug that works as well as the shots, then that's, the next big thing as well.
Yeah, that feels like a holy grail. Hey, I highly recommend, you have a great story on the Bloomberg, a quick take, why the obesity drug revolution is a work in progress, to remind us that there's going to be kind of these, feels like start and stops as we go along. Great stuff. We know you're busy. Thank you so much for checking in with us. Madison Muller, of course, Bloomberg News healthcare reporter. Do check out her reporting. She's got a bunch of stories out there, including how senators want more info with about that meeting by RFK, which we talked a little bit about, but there's more on the Bloomberg as well.
A quick update on the markets. The S&P 500 down 3%. The NASDAQ down 4.3%. NVIDIA down 5%.
All right, coming up, everybody. U.S. college campuses increasingly the latest focal point for the Trump administration. That's next on Business Week. to another development on our radar. A Palestinian student activist at Columbia University who led anti-Israel protests last spring was detained by immigration authorities at his home. The Associated Press reported that Immigration and Customs Enforcement, or ICE, officials entered the university-owned building in Manhattan, Upper Manhattan, on Saturday and took him into custody. This is according to his attorney, Amy Greer. So with more on what we know, Bloomberg News New York Bureau Chief Katya Porzakansky is here with us. Katya, what do we know about this?
Yeah, so we know that he is, his name is Mahmoud Khalil. He was the spokesman, one of the many spokespeople for the Quad group, which is this coalition of different student groups at Columbia University. Obviously, they were kind of like the epicenter of protests over the spring, and he was one of the people that were more out there. He was on a student visa at the time, but now seems to be, he got his permanent residency, his green card last year, according to court documents, and he's married to a U.S. citizen. So he, it seems that the Trump administration or the ICE has detained him. They've moved him to a facility in Louisiana, and they're citing, support of terroristic activities. Now, the thing that's kind of interesting is that he will, he should be getting due process. So, there are already court filings explaining the situation. They say that this is a repression of free speech and activist activities, but there are grounds under which a person with a green card can lose their residency, both through terrorist activities or support of terrorist activities, including just endorsing or espousing views, as well as foreign policy threats that is a little bit more wishy-washy.
Well, the president out on social media just a couple hours ago saying this is the first arrest of many to come. We know there are more students at Columbia and other universities across the country who have engaged in pro-terrorist, anti-Semitic, anti-American activity, and the Trump administration will not tolerate it. Many are not students, they are paid agitators. Now, we don't know about whether or not they're students versus paid agitators, or they're outside versus inside universities. What's the message that the president is sending to universities right now?
This message has been really ramping up, first of all, in the last few weeks, but it's a message to the universities, I think, to take some of the accusations of anti-Semitism on their campus much more seriously. However, of course, the anxiety that a lot of free speech people have is that this doesn't stop there. First of all, that itself could be a repression of free speech, but also that it doesn't end there, right? At least with regard to Columbia, this is the school where they've really started targeting and taking action. Just last week, they canceled $400 million worth of funding and grants to Columbia, citing allegations of anti-Semitism, or the failure to respond to allegations of anti-Semitism on their campus. And remember, when you get funding from the government, as most universities do, and they get billions of dollars worth of funding. Columbia gets $5 billion worth of funding from the federal government. You have to abide through certain rules, such as Title VI, which means that you can't be violating or encouraging, or not encouraging, but failing to act to the violation of civil rights of other students on your campus. So that's what they're going after the funding through, at least. And then this is an extra step, or a separate step, looking to clamp down on the other types of activities.
I think there's a million questions out there, and I guess we're all waiting. What is next? What are we expecting? What is the due process for him?
So I'm still learning this, but I've been talking to some immigration attorneys today. As a permanent resident of the United States, he is supposed to be entitled to due process and to be able to fight his case in front of an immigration attorney. Now, he was moved from this detention center locally to one in Louisiana, and the speculation is that he could find a less sympathetic judge over there in Louisiana than what he would find here. However, there's also this question of what is in the charging document, which we don't have a copy of just yet, because that will tell us a lot as to what avenue the government is going to pursue in terms of sending him out. And apparently, there are ones that are a little bit more strict that would tie a judge's hands a little bit more.
Are we thinking that this is something like this could go to the Supreme Court?
I'm not sure. In fact, an attorney that I spoke to said the fact that you've had the State Department, the Department of Homeland Security and now the president all speaking out publicly about this individual, saying that this individual has to go, it's actually probably going to be less give a judge less of a reason to try to hear him out.
Another interesting development on a day that there's a lot going on. Katya, so glad we could get some time with you. Katya Horzikansky, she's New York bureau chief here at Bloomberg News, joining us here in studio. We got to talk a little bit more about the markets before we wrap up.
Yeah, we're seeing red across the screen. A quick headline, though. A redhead crossing the Bloomberg. Tesla extending its slump to 15%. It's the biggest drop in a single day, going all the way back to September of 2020.
Yeah, we've seen this one pull back rather dramatically. I'm just pulling up some numbers here on the Bloomberg. It's down 53% since mid-December of 2024 last year. So we are seeing quite a pullback in that. On a day where we're seeing really a pullback in many, many different sectors, except for some of those defensive names, down 3.25% on the S&P 500, the NASDAQ 100 down 4.33%. For those watching on TV, the close coming your way. Tim and I continue on Business Week.
News on the Hour, sponsored by O'Reilly Auto Parts.
I'm Cammie McCormick. The markets continue to have anxiety over tariffs, inflation, federal layoffs, and President Trump's dismissal of their concerns. The Dow is down 1,000 points. CBS business reporter Jason Brooks.
Investor concerns over tariffs and the economy have whittled away the stock market over the past week, and the selling in tech stocks is accelerating after the NASDAQ last week sank into correction territory, down more than 10% from its record high in December.
China's retaliatory tariffs went into effect today, and they'll likely hit American farmers hard. Correspondent Anna Corin is in Beijing.
The tariffs include 15% on U.S. chicken, wheat and corn, and 10% on products like soybeans, pork, beef and fruit. Well, this is in response to the now 20% blanket tariffs President Trump placed on all Chinese goods.
And in Canada, Ontario's premier has announced it is now charging 25% more for electricity shipped to the U.S. That could impact more than 1 million Americans in 3 states. The Justice Department is looking into why we're paying so much for eggs. Scott McFarlane reports a watchdog group called for the investigation.
To review why egg prices are so high, whether it has to do with that bird flu or if there are other potentially more pernicious causes that are raising the prices of eggs.
Republicans have another budget plan, but Caitlin Huey-Burns reports despite President Trump's endorsement, it has opposition from Democrats and at least one major Republican.
Already today, we have Thomas Massie, a congressman from Kentucky. You've probably heard his name a lot during these funding fights. He came out today and said he's absolutely against it. It would take a lobotomy, he said, to support this. So already down 1 vote.
A government shutdown could come on Friday. Secretary of State Marco Rubio is in Saudi Arabia for talks on Ukraine, and he said today they could lead to the administration releasing assistance to Ukraine. CBS's Holly Williams reports the president has indicated as much.
Trump said that the pause on intelligence sharing had just about been lifted, but didn't give any further details about what he meant by that. Meanwhile, diplomatic wheels are turning. Ahead of that meeting in Saudi Arabia tomorrow, a senior U.S. official says that Ukraine wants to move forward.
Ukrainian President Zelensky is in Saudi Arabia but will not be part of the talks. The leader of student protests at Columbia University is facing deportation after being arrested by immigration officials. Mahmoud Khalil was arrested Saturday. His lawyer says agents claim they were revoking his green card. President Trump says it's the first arrest of many to come. This is CBS News. unrest has caused travel disruptions in Germany. CBS News correspondent Steve Kathan reports delays in Germany can back up flights worldwide.
A one-day strike by workers hitting 13 airports in Germany. Canceling most flights. It involves public sector employees at the airports as well as ground and security staff. Pay is the major issue. It's estimated more than 3,500 flights are affected, more than 500,000 passengers. Steve Kathan, CBS News.
A single-engine plane with 5 people on board crashed and burst into flames in the parking lot of a retirement facility near the airport in Lancaster, Pennsylvania. All 5 people survived. Mannheim Township Police say it may not have been a miracle, but they say it was close. Recapping Wall Street, the Dow is off 1,121 points. I'm Cammie McCormick, CBS News.
This is Bloomberg Business Week. Insight from the reporters and editors that bring you America's most trusted business magazine. Plus, global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Massar and Tim Stenovec on Bloomberg Radio.
And a very good afternoon, everyone. We are just about 55 minutes away from the closing bell on Sell-Off Monday. I think you can kind of say it.
Yeah, I think we can call it that. Is that fair to say? I saw 3 at the front of the S&P 500 on the downside, Carol. 3.3%.
To the downside.
Wow.
Almost 200 points lower on the S&P 500. We're pretty much at our lows of the session. Same thing for the Dow Jones Industrial Average, more than 1,000 points to the downside.
She did it. She cited points.
Just for you.
It's a big day. That means it's quadruple digits.
It is 2.5% to the downside. NASDAQ 100. So we're looking at those big tech names really getting hammered. The Magnificent Seven. We have seen all of those names selling off today. NASDAQ 100 right now down 916 points. That's good for a decline of about 4.5%.
Hey, I'm looking at shares of Apple down 5.8%. A redhead crossing the Bloomberg terminal. Mark Gurman out with a scoop. Apple preparing one of the most dramatic software overhauls in the company's history. It's aiming to transform the interface of the iPhone, the iPad, and the Mac for a new generation of users. That revamp due later this year is going to fundamentally change the look of the OS and make Apple's software platforms more consistent. This is according to people familiar with the matter.
So keeping an eye on Apple. We mentioned the overall equity trade, the bond market, though. What exactly is it telling us? Our Mike McKee referencing it a little bit earlier. Are we headed toward a recession? Michael McKenzie on the recession play. We'll get into that in just a moment.
Hey, also, what's going on with real estate in this market right now? We're going to check in with the COO of the Dawson Company. They've got projects happening in multiple states right now.
And speaking of what's up with energy? We head to the huge CERAWeek Energy Conference. We'll hear from Lord John Brown, former CEO of BP, and John Ketchum, CEO at NextEra Energy, folks. So we're going to be front and center on the energy trade. That's coming up over the next 2 hours.
All that and more. First up, though, check of the day's trade and top business stories. Here's Charlie Pellet on this sell-off.
And here's what's going on. We've got 53 minutes to go ahead of the closing bell with the Dow, the S&P, NASDAQ deeply in the red. No, I don't usually start with the year-to-date numbers, but do want to begin there because so far this year, Dow Industrials are now lower by 2.1%. The S&P on the year down 5.3%. NASDAQ is extending its loss year-to-date to 10.4%. A gauge of the Magnificent Seven mega caps has tumbled 6%. Tesla now extending its slump to 15%, biggest drop since September of 2020. Apple stock we were just talking about trading lower. Now we got Apple down by 5.9%. Right to today's numbers now with the S&P 500 index down 203 points. That is a decline of 3.5%. Dow Industrials down 1,152 now, a drop there of 2.7%. NASDAQ down 4.9%. The NASDAQ 100 index down 4.7%. The 10-year 4.20% with the 2-year 3.88%. Gold down $28 the ounce, down 1%. West Texas Intermediate crude down 1.8%. And Bitcoin now slumping 6.5%. We've got Bitcoin at $77,100 on a Bitcoin. So what about the overall mood of the market? Barbara Reinhardt is Chief Investment Officer for Multi-Asset Strategies and Solutions at Voya Investment Strategy.
The problem is the stop-and-go nature of the administration's policy seemed to really be what's causing a lot of indigestion in the markets. And that also, coupled with softer survey data, earnings revisions have been marked down a bit, at least for the first half of this year. And it's causing a lot of problems. I mean, it was just on February 20th that we hit a new all-time high for the S&P 500. It feels like it was about a year ago.
And indeed, March 10th, we have got the S&P down 202, now down 3.5%. Recapping 10-year 4.20%, the 2-year 3.88%. Tesla bears repeating, down now by 15.6%. S&P down 3.5%. Keep it locked into Bloomberg Radio. We got you covered right through the close and beyond. Lots of reaction, lots of coverage, lots of analysis. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie Pellet. Well, we heard a lot about the equity market just now from Charlie. I want to talk bonds because bond traders are signaling an increased risk that the U.S. economy will stall as President Donald Trump's chaotic tariff rollouts and federal workforce cuts threaten to further restrain the pace of growth. We've got with us Michael McKenzie. He's Bloomberg News rates reporter. He joins us here in the Bloomberg Interactive Brokers studio. Michael, as you write, there was speculation that the president would pour stimulus on an expansion. It would keep upward pressure on treasury yields. That is not at all what's happening. What's happening instead?
Well, I think investors have had to tear up the rule book. They came into this year thinking, okay, this economy is going to get pumped up a lot by deregulation, and that the Trump administration was going to be pro-business, and that's not really how it's panned out. And I think some of the data's come on the disappointing side, and you're beginning to get a sense here that the cuts in government spending, if you think back to last year, we had a big tailwind from government spending under the Biden administration. So even when the market started pricing in rate cuts last summer and the Fed duly delivered in September with a 50 basis point rate cut, lo and behold, the economy held up. And by the end of the year, the Fed was saying, we're pretty much done. So the market's now having to get its head around the risk, or trying to price in the risk of, okay, if growth's going to slow, how much is it going to slow? And from discussions with a number of traders in the last week or so, it seems to be, if the data continues to point to a deterioration, then the Fed's probably going to have to start resuming rate cuts at some point, and probably gets the funds rate down about 3.5. And right now, that's where the market's pricing in, at least 3 rate cuts this year, which will get you down to 3.5. So that's kind of where we are at the moment.
Does the bond market equally reflect the nervousness that we're seeing in the stock market? I think we were talking with Mike McKee earlier, and he talked about spreads are still pretty narrow on different segments of the bond market. So does what we're seeing right now in the Treasury trade equate with the selling we're seeing in the stock market?
The other fact that's behind the rally we've seen in Treasury, so think back to in mid-January, we peaked at 480 on the 10-year, 460 on the 5-year. 10 years now back down to 420, and the 5 years is below 4% now. These are big rallies, and essentially that's reflecting the hit to risk assets. So when I was talking to investors at the beginning of this year, they were saying the one case for buying treasuries with the new administration coming in is going to be that if you get a hit to risk assets, you want to own the 5 to 10 year sector. That's really paid off, and that can continue to pay off if we continue to see more pressure on risk assets.
But are you saying then the moves that we've seen in yields already this year, the backing off, it's all of this nervousness already factored in, Michael? Or
to some extent, but I think you need another catalyst here. I mean, there's a lot more volatility in treasuries. The treasury volatility remains much higher than equity volatility.
Okay.
And that's just the constant having to sort of go back and forth with positions. We've been swinging around a lot in tight ranges to some extent, but the market is volatile, and there is some deterioration in liquidity at the margin.
The 10-year 4.2% is the yield that we're seeing right now. Carol and I were talking about this earlier as we were preparing for this afternoon. Isn't this what Trump wants to see? He wants to see the 10-year yield fall?
It does, and I think what's interesting is talking to some bond investors lately saying this is an administration that they think wants short-term pain, longer-term gain. Seems to be an administration that says, look, we're going to make some cuts to government spending. You're going to have a bit of turmoil, a bit of sort of turbulence, but they are hoping that this will get the economy back on track. And one a key part of that is you keep rates down. So Scott Bessent has come out and said, I want lower 10-year yields. He doesn't want to specify to what level, but if you keep 10-year yields down, you are going to see more mortgage refinancings. And I think one thing that does, anyone who thinks that we're going into recession needs to ask the question, do you see balance sheet stress at the consumer and corporate level? If you don't, it's hard to make a case for recession. More importantly, though, look at the value of house prices today. You can now extract home equity from your house. So that will help buttress any kind of weakness we get in the economy. So I think the general tone of the bond market is the risks are rising, but we're not quite yet there to say, okay, this is a recession coming. That said, the real question here is the Fed going to actually look past potential inflationary consequences of tariffs and really look at a slowdown? And that's why the next couple of monthly payroll reports coming out are going to be very important for this market.
Is it just kind of interesting, though, Michael, that we went from earlier in the year, just nonstop American exceptionalism to all of a sudden we are using the recession word pretty regularly? Or
it's been bandied around. In general, talking to investors, they don't see a recession imminent. They don't really see this. And more importantly, though, think back to what happened last year. We had a big rally so the 10-year last year, after September, the rate hikes, just before the Fed started, the 10-year fell all the way down to 380. But then it started rising again because, lo and behold, if you drop interest rates, it helps the economy.
Right.
Now, the question here is how much of a hit is this administration going to do with government spending? Bearing in mind, of course, that we still have Congress to decide on one big, beautiful bill. And lo and behold, if you're going to have tax cuts coming at the end of it, I would suspect the bond market could whip around again.
Seriously, that would be enough to make up all the tariffs and possibly more tariffs to come?
If you combine that with deregulation, if you now allow banks to buy more treasuries, if you cut all the red tape around small businesses, I think you could lay the case for a second half recovery. And then, of course, you have the problems of what is the ultimate inflationary impact of these tariffs that are coming through. I mean, I think right now it's a trade war that's really hurting sentiment. You're certainly seeing that on equities.
Yeah.
The Fed set to meet next week. What is the outlook and what's happening in the bond market signal about expectations for the Fed for this year?
Well, if we look at the March meeting, no one's expecting any move. I think the key here is May. We've been sort of dancing around pricing in about a 50% odds for a rate cut by May. So it's in coin toss territory. And I think you're going to have to see more. Obviously, you get inflation this week. Then you'll have another couple of months of payrolls and inflation to come before that May meeting. And that's, I think, will be the ultimate arbiter whether or not the Fed can go or not.
And if inflation comes in hot, that's not great news.
I think that puts the Fed in a really tough spot. I mean, I think at the moment they're okay, but they want to see inflation still trending down. They still want to see signs of disinflation. And if they get a hot number, that's going to complicate things, particularly if we see what happened in the last Friday's payrolls report. We did see U6 unemployment pick up. Mm-hmm. If that continues, then you're going to hear more chatter about stagflationary outcomes.
What are you watching regularly? Like, what's top of mind for you as we kind of go through this?
It's every tape bomb that comes out of Washington.
Yeah.
And from Donald Trump, I think that's because he keeps flipping around.
Right.
So everyone's got this kind of, what are they really going to do? And it's that uncertainty that I think is driving people to say, you know what, I'm going to put my money in the 5-year Treasury. I think the 5-year Treasury will tell you it's below 4% today.
Right.
Couldn't get below 4% at the end of last week, but is now below 4%. So that's telling you that there's a bit of concern. There's a flight to quality trade going on. And I think that's the one thing to keep watching.
I thought he was going to say like White Lotus 3 or like Severance when he asked him.
I'm a big fan of Parker Posey, by the way.
She's great in that.
I loved her stuff back in the 90s with Hal.
You got to read I think, New York Times profile on her a couple weeks ago. It was just like,
White Lotus 3.
She's awesome, yeah.
I mean, anything to step away from this?
Yeah. What are you watching? Anything I can right now.
Michael McKenzie, love. Bloomberg News rates reporter joining us here in studio. Hey, coming up next, we're going to just keep tracking this market and the selling, certainly on the equity side of things. We're seeing stocks hovering near their lows of the session, although rounding off the bottom. This is Bloomberg.
It's 3:21 on Wall Street. We do check markets all day long here at Bloomberg. We have got 39 minutes to go ahead of the closing bell. As we have been discussing, we are off session lows. Our buyers, though, coming in to catch a falling knife. For the Dow, the S&P, NASDAQ, all trading lower. We did have the Dow down 1,000 points or more at our last update. Right now, we got the Dow down 957, a decline right now of 2.3%. The S&P down 172. That is a drop now of 3%. NASDAQ down 4.3%. Year to date, by the way, the S&P is down by 4.8%. The 10-year 4.21%, with the 2-year 3.89%. Gold down $21 the ounce. Spot gold right now at $28.87, down 0.7%. A retreat for crude, $66.04 a barrel on WTI, down 1.5%, and Bitcoin down 5.9%, 78,185 on Bitcoin. Cara Murphy is Chief Investment Officer at Kestra Investment Management. She told us the selling comes down to policy uncertainty and valuations.
The good news is that the policy outlook can change fairly quickly. So we don't think that this is necessarily a long-term issue for the market, but there is some digestion that the market has to do, and we need to get back to this sort of area where we can have a good view about where policy is headed so that companies can then begin to plan.
Murphy was interviewed this morning on Bloomberg The Open. Reporting after the close of trading today, we will be hearing from Oracle. We got you covered on that stock. Oracle right now down 4.5%. Briefly, Tesla plunging, leading a tech sell-off today. We've got Tesla now down by 15.4%. For on-demand news 24 hours a day, subscribe to Bloomberg News Now wherever you get your podcasts. I'm Charlie Pellet. That is a Bloomberg Business Flash.
All right, Charlie, thank you so much. Carol Massar, Tim Stenovic live here in our Bloomberg Interactive Broker studio on Business Week. And we are, of course, as Charlie is, as all of us, tracking what we're seeing in terms of the trade as we get ready for what could be the worst trading day for U.S. stocks in 2025, although I feel like we've said that already a couple times this year. But again, just to remind you, S&P 500 off its lows, so we're just seeing around off the worst levels of the session, but still down nearly 3% on the S&P 500 and the NASDAQ 100. Those big tech names, as we talked about with Gina Martin Adams, really taking it on the chin. That average is down about 4%, Tim.
Still, though, we are on the brink of a correction on the S&P 500. The NASDAQ 100, though, hit correction territory on Friday. It did sink as much as 4.5% today. The Mag 7, Carol, the gauge, the Bloomberg gauge of the Magnificent 7, tumbling 6%. A company like Tesla down as much as 15% earlier in the session, down 15.1% as we speak.
Got to say, you look at the S&P 500, 359 names to the downside, 144 to the upside. You look at the 11 major industry groups in the S&P 500, and you've got 9 lower at the bottom of the pack. Consumer discretionary, which is down about 4.25%. At the top, those energy names still up about 0.5%, and utilities up negligible, if you will. It's just up about 0.7 percentage point, or 0.07%, I should say. And then consumer staples, that's your third best performing group, but that group is down about 0.75%. But you look at those safer, more defensive plays. Hey, let's get into a little bit more about the market trade. Back with us is Bloomberg News senior editor Mike Regan, right here in our Bloomberg Interactive Broker studio. We are rounding the bottom, Mike, coming off our worst levels of the session down, but the selling, at least it looks like some investors finding some opportunities here.
Yeah, I think that's somewhat encouraging to see a bounce off the lows right near the close here. S&P down as much as 3.6%, now down 2.8%. I mean, obviously still a nasty day, but I think, a lot of technically minded traders really hate to see the market close on those lows.
Right.
So to get a little bit of a pop here in the last hour, I think, is a little bit of a silver lining to this cloudy day.
We're seeing some big names lower. As I mentioned, the Mag 7 index falling as much as 6%, a little earlier. Apple's down 5%, Nvidia's down 5%, Tesla down 15%, Microsoft down 3.6%, Meta Platforms down 4.7%. The sell-off in big tech that we're seeing.
Yeah, it really seems to be, the most highly valued, and also the stocks with the strongest momentum coming into this sort of almost near correction that we've seen. And I think that's fairly common when, traders tend to sell their winners, sort of book those profits on the names that did the best. So not too surprising. I'm not sure there's really an economic signal you can extrapolate from that other than people are concerned about the economy. They're worried about the market as a knock-on effect of that. And really it tends to be these sort of strong momentum, highly richly valued names that you often see bear the worst of the selling on a day like this.
Well, talk to us about the technical trade too. Like when you hit a certain level, or you see a certain, right, we're down a little bit more than 8% on the S&P since their high in mid-February. I mean, how does that often kind of put a floor in, or how is it important that that does put a floor in versus, you continue to just take out one technical level after another?
Yeah, I think the one main big technical level that everyone's looking at today is that 200-day moving average, that long-term trend of the S&P 500. It looks like today we will actually close below it for the first time. It's something like, I read earlier, 360 some days or something like that. So a long time where we've had this trend line sort of be a support for the market. Again, if you're looking for a silver lining on that, though, one close below it doesn't necessarily, mean anything.
Right.
That trend line is still rising. Once the market gets weak enough where a trend line like that, it actually bends it lower and the market gets sort of stuck underneath it. That's kind of a really classic bear market signal. When that trend line is lower and is heading lower and the market's stuck under it. So far, knock on wood, not there yet, but it is very noteworthy to close below that trend line for technically minded traders.
It's a good point, because if you look at the trend line, right, it's
still kind of moving upward, yeah. So, if this weakness persists, it is flattening out a little bit. You could sort of drag that trend line lower. And then, markets that get trapped under that, or at least the S&P, tends to really sort of obey that trend line, at least in the short term, until there's some kind of catalyst to snap it out of it.
Hey, Mike, real quick, the S&P 500 down 8.5% from its all-time high back in February. If we hit that 10% correction, do we start to see any algos triggered, or is that some sort of catalyst then for the downside?
It's a good question, Tim. I can't say specifically one way or the other. It certainly is those type of levels are worth watching. It wouldn't be too surprising if we did see some sort of buy orders enter the market there. People thinking maybe this is a little bit gone too far. Can't say definitively that'll happen, but it is it's a good instinct to watch that type of level, that 10%, 20%, 15% type of move as at least an area that could sort of stop the bleeding for the short term. I think ultimately this market's not going to be risk on again until there's a little bit of relief from the main things it's worried about, which is higher inflation and slower economic growth because of the tariffs.
All right, watching the markets for us, our own Mike Regan, Bloomberg News senior editor. Mike Regan joining us here in studio. Right now, though, we want to head out west and check in with our own Sarah Fryer, because we just talked about the Mag 7, the Bloomberg Mag 7 Total Return Index down 5.4% at this hour. Every name is down. There's 7 in that index. Tesla seeing, there's 2 for Google, right? So let's just point that out. Tesla seeing the biggest hit, down about 15%. Sarah Fryer, I don't know. What are you hearing about, this tech trade today, which is obviously dragging down the overall market in a big way?
It's all about de-risking. I think that in times of volatility, you look at these stocks that have really just ridden on the optimism of extreme investment in AI. And there's been a little bit more caution around that lately. And I think Oracle earnings after the close will give us a little bit better view of what the future holds too. But when it comes to Tesla, you did mention that stock. I mean, that is also related to more than just the market. That's related to some of the fundamentals of the business, and also the connection with Elon Musk, the great amount of association that his own brand has with that brand, which causes some folks who make decisions on whether they want to get a Tesla based on what they think of Musk right now, and he certainly had himself in the headlines. So, beyond that company's performance and their deliveries, there's also some risk with his moves in government.
It's a really good point, and I'm looking at the chart, Sarah, of Tesla stock. It's at its lowest level going back to October 24th of 2024. So it's given up all of those gains that it had following the election of Donald Trump and, of course, Elon Musk's close association with the president. We also had some problems with X today, and Elon Musk himself saying that X is under attack, a cyber attack. Is it too much of a jump because X is not a public company? Is it too much of a jump for me to say, or for us to infer, that any of the reaction that we're seeing with regard to what's happening to Tesla today is also a reaction to people's concern about just security, Musk's role at the company, if he goes back to the company?
At a broad level, I would say, because it's this executive in charge of so many companies, maybe 6 at this point, who's spending all of his time in the White House and at Mar-a-Lago and keeping his eye off the ball in that sense. Some investors would prefer to see Musk take a backseat at the companies and just let them be run by somebody who can focus their full attention. Others, thought, with him out of the office, where is this inventive spirit? Where is that future vision coming from? And Musk has a tendency to work late in the night. I'm not saying he can't pull it off, but we're starting to see it in the performance of his companies that we have an executive who is by all definition of the word distracted.
Hey, Sarah, there's a story that's just popped up on the Bloomberg, and it says, as of January 20th, billionaires including Elon Musk, Jeff Bezos, Mark Zuckerberg, who were present at Donald Trump's inauguration and had gained wealth due to frothy stock markets. Well, here we are 7 weeks later, and it says these billionaires have lost a combined $210 billion in wealth, with the S&P 500 losing 7-8% as we speak. It's probably a little bit more. It also says the companies behind the inauguration attendees' fortunes have lost a combined $1.43 trillion in market value since January 17th. It's probably a little bit more at this hour. There are tech CEOs meeting with the Trump administration. I don't know. What are you guys maybe waiting to hear from this meeting? One can only assume that lots of CEOs might be calling the White House at this moment to say, hey, let's talk about policy, but what are you hearing?
Across the board in tech, it has been about trying to get in the inner circle to try to make direct appeals to Trump on policy when tariffs come down. What can they do for their own companies when he makes decisions on AI policy? What can they do to ensure that they get the infrastructure built that they need to get built, that they have enough in the way of deregulation so that they can pursue what they need to do without the government preventing it from happening. It is a little bit like playing with fire, though, because a lot of these executives looked at Trump as a business-friendly president because he was more of a willing to pick the phone, honestly, and talk to them about the future and what they needed, willing to negotiate. And tariffs, inflation, all those things could make their stocks less favorable for the market.
All right, great to check in with you, Sarah. Thanks so much. Sarah Fryer, she is Bloomberg News Big Tech team leader out there on the West Coast. Folks, we're rounding off our worst levels, down still about 2.5% now on the S&P 500, NASDAQ 100, a decline of 3.4%. This is Bloomberg.
It's 3:40 on Wall Street. We do check markets all day long here at Bloomberg. A slight bounce off the bottom, but the S&P 500 index still remains lower by 2.5%. Let's head right over to the first word breaking news desk for today's afternoon call. Here he is, Bill Maloney.
And good afternoon, Charlie. It has been an ugly day for stocks with, like you said, even with this bounce off the lows, the Dow's currently down 828 points, was down 1,200. S&Ps are down 2.6%, while the NASDAQ is still off by 3.8%. The U.S. 10-year yield is at 4.22%. Gold and oil are in the red, and Bitcoin, that's lower by 5%. Among the main 11 S&P sectors, only energy and utilities were in the green. Tech and consumer discretionary were under pressure, and leaders to the upside in the Dow, Merck and Amgen, while Goldman Sachs and Nvidia each fell 6% and led to the downside. In deal news, Redfin soared 63%. Rocket is buying the company for $1.75 billion. And in other news, Tesla is down as much as 16%. That's the most since 2020. Wrapping things up, Oracle reports after the bell. Live from the first breaking news desk, I'm Bill Maloney. Charlie?
Okay, we thank you very much, Bill Maloney, and to hear live breaking news over your Bloomberg, type SQUA, S-Q-U-A, on your Bloomberg terminal. I'm Charlie Pellet. That is a Bloomberg Business Flash.
I'm driving in my car.
How about you let me drive?
Oh, no. This is not a toy. Who's gonna drive you home?
Honey, please, I'll do the driving.
Drive on.
Excuse me, I want to drive. It's the question that drives us.
This is the drive to the close
That funky music will drive us till the dawn.
on Bloomberg Radio.
All right, everybody, we've got just about 18 minutes to go until we wrap up this trade on this Monday. Having said that, you just heard from Charlie and Bill Maloney. We are definitely off our worst levels of this session, kind of bouncing around here, but still down 2.7% on the S&P 500. Dow Jones Industrial Average, a decline of just shy of 200 points. We were down more than 1,000 points on the Dow at one point, now a decline of 865 points. And the NASDAQ 100, which is dominated by that tech trade, it is down 3.9%, down 790 points.
Hey, curious what Max Wasserman thinks on a day like today. He's founder and senior portfolio manager of Miramar Capital. Max, you argue that the market is finally starting to recognize the risk of overvalued NASDAQ and the S&P 500 given the current market conditions. Is it still overvalued to you?
Well, thank you for having me on. And the answer is yes. I mean, the only thing that's surprising us is that we've been saying this for the past 6 months, that it took so long. But, the momentum has a funny way of turning on you. When everybody can justify, earnings going up in multiples of 31, 35 times on these large cap tech, when the market sours, it can take them right back down. So we think they're starting to recognize that the multiples are still too high on the NASDAQ. But we think the general market is not priced like that, and there's a lot of opportunity there. But given the fact that the NASDAQ 100 and the top S&P 500 stocks is pure NASDAQ, basically, this is why you're getting this major sell-off.
How were you prepared for today's sell-off? How were you invested ahead of this if you thought that, if this isn't surprising to you?
Well, we have been lowering our tech exposure for a while. I mean, we have investments. We're a dividend growth shop. We have investments in the Broadcoms, the Apples, and the Microsofts, but we were underweighted technology. We've been putting more money in the staples, which nobody wanted them, energy we like, and healthcare. You couldn't give healthcare stocks away. I mean, one of our largest holdings, like an AbbVie, is making 52-week highs. We just tend to think there was better value. We still like the growth in tech, but we're not willing to pay 30 to 40 times earnings for this.
So is this just a valuation reset? Is this just a potentially somewhat fundamental reset based on Washington policies? Or is this the U.S. economy starting to come undone?
I don't know if it's coming undone, or maybe we're just taking a better look at the U.S. economy. I think we're starting to say that the economy is showing signs of slowing down. And you have policies out there that are basically saying that they could hurt the economy. And if you go back to the fact that in December that the Fed told you that they're not going to be cutting interest rates, which Wall Street, desperately always wants, and because they had stubborn inflation. So there's a lot of things that are stopping that ignition of a further multiple expansion. I just don't think you're going to get multiple expansion. I think you're going to get a little bit of contraction, as it's showing, and the market's going to come back down to an equilibrium on where the fundamentals eventually show. But I think it's going to take another quarter or two for us to understand what are the tariffs, what is the unemployment really going to look like, what is the Fed really going to do. In the meantime, an uncertainty, who wants to pay 30, 40 times for these tech earnings right now?
Max, do you buy it that the president is not paying attention to the market, or rather, maybe a different way to describe his comments over the weekend, saying that there would be short-term pain?
You know, it's very hard for me to get ahead of any politician.
People keep telling me that when I ask these questions.
Yeah, but when you look long-term, there seems to be some inherent contradictions. But he did say that there could be some short-term pain. And his policies don't seem to be quarter by quarter. And for a president always just say he looks at the stock market, he's telling you he's not looking so closely. To me, it's the Fed. The Fed is telling you they're confused. They sort of want to cut interest rates, but there's stubborn inflation, and they don't know what inflation is going to look like with tariffs, if there's real tariffs, and how long they last. Because we don't know what the tariff looks like because it's on again, off again. And we don't know if April 2nd is really going to be reciprocal, what's going to be excluded. But it's very hard to run monetary policy with all those uncertainties. And when the Wall Street wants Fed cuts, and they're not giving it to them just yet, I think more pressure is going to be put on the Fed to eventually start cutting interest rates.
Are you more of a buyer or seller in this environment?
Well, it depends. Right now, a lot of our stocks, to be candid with you, are running very strong. So our top positions are hitting some 52-week highs. So we're waiting here. I am looking through the tech rubble once we start to get a little bit more of a sell-off to just nibble here and there at good companies that are paying us dividends that we like. We still like some of the large cap tech. We just think they need to come down more. And we're starting to see it. I mean, we like the Googles of the world. We like the Broadcoms, and we like the Microsofts. But, you know, it's sort of, are we catching a falling knife? But, you know, for nibbling purposes, yes, we would start because you're never going to time it perfectly. But when you have these great companies selling off 20% and still trading in the high 20s, low 30s, you could get another 10% here on the NASDAQ sell-off. But the equal weighted part of the market is showing strong signs. Look at the staples, look at healthcare, right? Look at financials that are taking a hit today. There could be some compelling valuations coming there.
I will note that there are 124 stocks in the U.S. right now, Carol, that are hitting 52-week highs. IBM, one of them. Another one is Tootsie Roll. Just thought that would be fun.
You gotta like chocolate, right? And we like Hershey, so it's the same thing.
Yeah, I mean, I'm looking at the S&P 500 equal weighted index, just down about 1.4%, so not as bad as what we're seeing in the S&P 500 at this hour. What about on the fixed income side of things? Are you anticipating that yields along the U.S. Treasury curve continue to go lower?
Well, that's the quandary. We've been telling people for the last 6 months, just focus on the short term, 1 to 3 years. We just don't think you're paid because we still think inflation's stubborn and we don't know. Do we think the 10-year could come down to 4? Yes, but I think it could equally go up to 4.85, depending on what the policies play out. So we just don't think you're being rewarded to go long term. We would still say stay short term, stay high quality. We still like U.S. Treasuries here. We still think they're not a bad value because the spreads on corporates and even munis aren't just there to take the risk.
Yeah, that's something that, right, the spreads are still pretty narrow, correct?
Correct.
Speaking about the big picture of the market right now, do you think we're going to bounce off of this, and this is sort of the low of this most recent sell-off, or is there a move to go further down? You say things are still overvalued.
You know, I talked to some friends of mine. A really good friend of mine is a great trader, and he's telling me at 55.30 or something on the S&P could break through. And I'm listening to a lot of great technical analysts saying that you'll get a bounce here. It's hard for me to tell because emotions can run to extremes, as we know it. I think emotions ran to extreme to bring the NASDAQ up so much for 2 years in a row, and it could take you down a little bit. I would look at this as an incredible opportunity for good companies. Find the companies you really like, find the valuations that make sense, and you average into them. Right now, we're looking selectively for tech if they get sold off more. We need a little bit more of a sell-off there.
Hey, Max, just got about 25 seconds left here. How much have you been looking overseas? The Euro Stoxx 50 is still, it's up about 10% so far in 2025. Opportunity overseas, and just quickly.
Well, you know, we don't look much overseas because we buy such global companies and the currency risk. And sometimes I get very upset with the tax structure of how the dividends come back. So when we invest overseas, it has to be tax-friendly countries with us. And there's only a few countries that do that. So we're mainly buying domestic global countries.
All right, got it. Hey, listen, good to check in with you. Max Wasserman, he's founder and senior portfolio manager of Miramar Capital, joining us from Northbrook, Illinois. Folks, we've got about 10 minutes before we wrap up the trading day. Again, we're off our worst levels of the session when it comes to the equity trade, but still down 2.7% on the S&P 500, a decline of 3.9% on the NASDAQ 100, the Dow, a decline of 2%. This is Bloomberg.
This is Bloomberg Business Week with Carol Massar and Tim Stenovac on Bloomberg Radio and Television.
All right, everybody, we're just under 7 minutes to go until we wrap up the trade on this Monday, March 10th. Carol Massar, Tim Stenovac, live in our Bloomberg Interactive Broker studio. And yeah, I mean, I feel like nobody's saying panic in terms of the equity trade, and we are coming off our worst levels of the session. We've really seen that trade over the last half hour or 40 minutes or so. Still down 2.7% on the S&P 500. Dow Jones Industrial Average now a decline of 2%. Again, all of them off their lows of the session, and the NASDAQ 100, Tim, down about 3.9%.
There are still 25 stocks in the S&P 500 that are hitting 52-week highs today.
Yeah, I mean, and
AbbVie, you got BMY, you got Brown and Brown, you've got the CME Group.
How many?
25 in the S&P 500.
This is
Verizon.
Which is what Max Wasserman was talking about, right? Some of the names that he's investing in, he said we're hitting 52-week highs today.
Yeah. It's kind of crazy. You do have 17 hitting 52-week lows in the S&P.
Okay. But a little bit of context perspective, remind everybody, right, that we say we've been on such a tear over the last 2 years, certainly in 2023 and 2024, tremendous run-ups in U.S. stocks, a lot of it led by those big tech names. Having said that, the environment a little bit different, and I think investors are trying to assess the impact of tariffs and what that means for individual companies, as well as what it means in terms of higher prices, inflation expectations, and what that might do to overall growth of the U.S. economy.
Hey, and like Bill Maloney, I don't know if you said this on air, if he was telling us before he went on air, but we're bouncing off the lows today, and if we don't, if we don't close. And we don't see selling into the close. It's kind of a good sign, at least in the short term.
Yeah, absolutely.
That's what a technician would say. I'm channeling a technician.
You channel
Don't
well.
throw anything at me, anyone, please.
Do not throw. VIX, by the way, up almost 5 points, 28. Just about 28, the level. And I was reading on the live blog that it said that when you see the VIX hit something like 30, while the VIX may not be at a level that indicates a bottom just yet, it's quickly approaching 30, which has seen stocks find their footing in the days that followed. Prior spikes to 30 or higher in the last 4 years since the pandemic have been followed by a rebound in the S&P 500 in the following 5 sessions by 1.7% on average. So, I mean, there's a lot of things we're trying to assess where we go from here, but we'll see. Time will tell, right, over the next week.
I'm going to do it because this is one of the stories that is about the moves that we're seeing today.
Go for it.
Strategy, formerly known as MicroStrategy. Those shares are on track to fall nearly half from their peak as investors fret about economic headwinds and retreat from crypto-related bets that had initially benefited from Trump's election win. Down 16% at one point today, a little earlier in the session. If the decline holds through the end, it's going to have lost 49% of its value since closing at an all-time high. That was back in November.
That's a lot. I mean, Tesla's down 16%, right?
Yeah.
Palantir's down 11% today. You mentioned Microchip, right? That one is down about 12%, almost 12% in today's session. But we do have 156 names in the S&P 500 actually gaining ground as we speak. So it's not like every name that's out there. Energy has been a group in a major industry group in the S&P 500 that's been holding on to some gains. It's up about 0.6% as we speak.
Okay, I'm taking a look at the Mag 7, the Bloomberg Mag 7 index. At one point today, Carol, it was down more than 5%.
Yeah, right. And, and then let's not forget, right? We keep a watch on the equity markets. That's one thing. But also in terms of whether, the Treasury trade, the U.S. Treasury trade is talking or showing any kinds of signs of recession. We talked about it with Michael McKenzie. Still, again, not some panic, but the 10-year down to 421, shorter end of the yield curve, that 2-year note specifically 389. Don't forget, we've got a Fed meeting and decision, or not expecting any kind of rate moves next week from the U.S. Central Bank.
Okay, that Bloomberg Magnificent 7 index down 5.3% right now. At one point in the session, it was down as much as 6.5%.
Yeah, so something to, just kind of keep a watch on, right, in terms of perspective. We'll see what we get. We've got about 2.5 minutes to go. Do we see investors come in and maybe do some cherry picking in terms of now stocks that are now 2 or 3% cheaper or more than they were at the beginning of this session? We'll have to see, but do not go anywhere. We're going to head over to our TV colleagues and count you down to the close on this Monday. The closing bell starts right now.
The Closing Bell, Bloomberg's comprehensive cross-platform coverage of the U.S. market close, starts right now.
And right now, we are 2 minutes away from the end of the trading day. Romaine Bostic alongside Scarlett Fu, taking you through that closing bell with a global simulcast that starts right now. Tim Stenovic and Carol Master joining us in the radio booth. Alex Steele is on assignment on this day here. Stocks deep in the red. They're off the lows of the day. 57.0537. Carol, was where we opened. And that was the high of the day.
Yeah, pretty remarkable. I think what's interesting, though, over the last half an hour, though, we have seen stocks come off their worst levels. I think it's really interesting to see whether or not we continue to see buying into the close. We've just got about a minute or so to go, or whether we start to see another leg to the downside.
We should know not everything is down today. If you look at the S&P 500, there are 25 stocks in the S&P 500 today that are actually hitting 52-week highs. Verizon, one of those. Altria, another one of those. AbbVie is hitting a 52-week high today. So is IBM.
Yeah, so some defensive buying, but when it comes down to it, the number everyone's looking at is the 200-day moving average, or I should say the line, and everyone's talking about how nothing good happens below the 200-day moving average. We could be closing below that level, and if we close again below that level tomorrow, a lot of people saying that puts us in a new regime.
Yeah, well, it certainly looks like we are going to close below it here on this day. 57.34 is your 200-day moving average. The S&P right now at 56.07 and change, and we should also point out the index right now poised to actually close in oversold conditions for the first time in about a year and a half.
Yeah, pretty significant, right? And, this is when you wonder, do buyers come in at this point, or do they kind of wait to see how it plays out over the rest of the week?
Yeah, hard to do that, of course, when you continue to hear this chatter out of Washington saying, look, folks in the White House, they don't care what the market's doing. They're playing the long game on the economy. It'll be interesting to see whether that actually comes to fruition. The closing bells in New York as people are obligated to chat and cheer, with the S&P down more than 150 points on the day, or roughly about 2.7%. The Dow Jones Industrial Average down almost 900 points, or 2% on the day. The NASDAQ Composite is going to close lower by 700 points, or about 4%. Similar move lower on the NASDAQ 100. And the Russell 2000 also being dragged down on the day, down 56 points, or 2.7%.
All right, quick check on the S&P 500. You had 341 names to the downside, guys, 162 to the upside, Scarlett.
And given that the S&P closed down about 2.7%, you would think that all 11 sectors are in the red. That's not the case. Utilities gaining more than 1%. Energy also holding up by about 1% as well. Of course, they're among the two smallest sectors in the S&P.
All right, let's get to some of the individual gainers, guys. Redfin, no surprise, up 67%, right? Rocket is buying Redfin, an all-stock deal, $1.75 billion is a price tag on that. Rocket paying $12.50 per Redfin share, so no surprise to see this one. Biggest intraday gain, probably biggest gain in total on record for that name. Another name actually gaining in today's section, Tractor Supply, at one point up 5%, but finishing the day with a gain of about 0.5%. Business Insider noting over the weekend that Mizuho analyst saying that faced with U.S. egg prices at record highs, shoppers are turning to Tractor Supply in large numbers to buy baby chickens of their own. So we did see a lift in that one. And Cracker Barrel, guys, up about 3.5%, being raised to a buy from holdover at Truist Securities, which views the company's solid results in the last 2 quarters as a sign that its turnaround plan is gaining traction. They upped the price target to 55 from 51. Stock closing at 44 and change today.
All right, you got the gainers, Carol. I got the decliners. I do want to start with the shares of Tesla. It's worst day going all the way back to September of 2020. Shares falling by more than 15%, reaching their lowest level going back to October of last year. And yes, that was before the U.S. election. Shares dropping today by 15.4%. Growing concerns about the company's deliveries. Joseph Spack over at UBS cut projections for the first quarter and the full year, expecting a 16% reduction in deliveries this quarter and 5% annual drop next year. You got to wonder if shareholders are going to start demanding that Elon Musk get back to Fremont, California, or maybe Austin, and work more on Tesla. We'll see if that happens. Hey, shares of Apple also selling off today. All members of the Mag 7, Apple no exception. Apple, worst day going back to September of 2022. Shares down by close to 5%. At one point, it was the worst day since 2020. Separately, Apple did say it was delaying an AI-related update to Siri for the foreseeable future. And then this afternoon, Mark Gurman out with a Bloomberg exclusive, citing people familiar that Apple is preparing a major software overhaul to transform the interface of the iPhone, the iPad, and the Mac. The idea is that it makes the OSs more consistent and will simplify navigation.
A lot of moves.
Yeah, go ahead.
Go ahead. Go ahead, Al.
I was going to say, just finally, shares at Novo Nordisk down by 9.4% today. Those are ADRs. Martin Lang, I saw him on your air, EVP for development. We should note that Novo shares fell after the company's next-gen shot failed to meet expectations in a trial. Patients did lose 13.7% of their weight over 68 weeks.
All right, let's get a quick check on yields here. There was a lot of activity there, particularly on the short end of the curve, down 10 basis points on your 2 and your 5 year. Of course, the 2 year most sensitive to conditions, to Fed conditions, I should say, or changes in Fed rates. You had an 8 basis point drop on the 10-year yield and about 30-year yield. And speaking of Fed conditions here, we talk about this idea of what the Fed might do next, guys. I mean, we've all been sort of focused on work. We came in, just barely a month and a half ago, and you had a market that was pricing in barely a quarter point of cuts all year long. Right now, that is more than 3/4 of a percentage point now being priced into this market. To be specific, right now, 83 basis points by the end of the year. So a big turnaround just in the past 6 weeks in expectations for Fed cuts.
And yet the expectations for next week, when the Fed meets and puts out their latest views on monetary policy, they are not expected to cut rates. But it will be interesting. We get another read on inflation this week, and whether or not it becomes trickier for the Fed, especially if we see or continue to see signs of slowing U.S. growth, and if inflation continues to be sticky. Once again, we bring up this idea of stagflation and how it makes it more difficult for the U.S. central bank.
Yeah, Michael McKenzie, who covers rates for Bloomberg News, was on our air a little earlier, and he said, obviously next week's meeting, not really seen as a live meeting, but investors kind of looking to signals that we get about what happens at the May meeting as a potential meeting for some rate movement.
I suppose the silver lining here is that a lot of people, economists, are anticipating CPI increases to slow for the month of February. Right now, we're looking at 2.9% year-over-year growth in consumer prices versus 3% in the month of January. And when it comes to University of Michigan and consumer inflation expectations, that too is decelerating just a bit.
And what's interesting too about all this too is this idea, and we're speaking with Amy Wu Silverman at the top of our show, who's talking about this idea. A lot of this stuff hasn't actually shown up in the data yet. Gina Martin Adams echoed that, and that's going to be a big concern right now, is that there's all these fears out there, but at least as far as the hard data, not showing up just yet.
All right, let's get to Oracle, just coming out with its latest results. Third quarter adjusted operating margin, 44%. That's a little bit better than what the street was expecting, 43.6%. Adjusted revenue, $14.13 billion. That compares with an estimate of $14.39 billion. And third quarter adjusted EPS, guys, $1.47 a share. That's 2 pennies light. And you do see the stock down about 2/3% here in the after hours. All right, guys, that is a wrap. We'll continue to track some of that earnings after the close. That's a wrap on radio, TV, YouTube, and Bloomberg Originals. We will see you again, same time, same place tomorrow for the closing bell.
This is Bloomberg Business Week, insight from the reporters and editors that bring you America's most trusted business magazine, plus global business, finance, and tech news as it happens. Bloomberg Business Week with Carol Masser and Tim Stenivek on Bloomberg Radio.
It is Bloomberg Business Week. That's Carol Masser. I'm Tim Stenivek. You did just hear Carol give a quick update about Oracle. I'm looking at shares right now, bouncing around. They were higher, they were lower. Now they're higher again. Investors in the after hours can't make up their mind. Third quarter adjusted revenue did miss the average analyst estimate. Adjusted revenue coming in at $14.13 billion. The estimate was for $14.39 billion. On the bottom line, adjusted earnings per share came in just shy of estimates at $1.47, whereas the estimate was for $1.49.
Yeah, and we are seeing the stock right now up about 0.8%. The real key ones in terms of the headlines, third quarter adjusted revenue, again, a little bit light, $14.13 billion. The estimate on the street was $14.39 billion. Third quarter cloud infrastructure revenue, of course, important to the company in a big way, $2.7 billion. That's a slight beat. The estimate on the street was $2.71 billion. And the company also boosting their quarterly cash dividend to 50 cents a share. The street was looking for 48 cents a share. And again, as Tim mentioned, rightfully so, this stock is bouncing around a little bit here in the aftermarket. Just right now, maybe up a hair, up, call it flat right now.
Hey, this is interesting. Larry Ellison, chairman and the CTO of Oracle, quote, "We are on schedule to double our data center capacity this calendar year. Customer demand is at record levels. Our database multi-cloud revenue from Microsoft, Google, and Amazon is up 92% in the last 3 months alone. GPU consumption for AI training grew 244% in the last 12 months. And we are seeing enormous demand for AI inferencing on our computer's private data.
So does this mean they couldn't meet demand, and that's why there's some disappointment with some of the revenue numbers? Because it sounds like they're still optimistic about the build. But as we mentioned, adjusted revenue for the third quarter was a little light, up about 6.4% year over year, and adjusted EPS was 2 cents light. Cloud revenue was a little bit light. So cloud infrastructure revenue was pretty much in line, but you do wonder, we'll see what kind of color we get about that demand, because if they're continuing the build, sounds like they anticipate the demand will be there.
I just cannot believe this, what we're getting from Oracle in terms of demand here. He said, we're connecting OpenAI ChatGPT, XAI Grok, and Meta Llama directly to version 23 AI of the Oracle database with advanced vector capabilities. The company also out saying that the board of directors declared a quarterly cash dividend of 50 cents per share of outstanding common stock. And they did note that Larry Ellison, who is the largest stockholder, did not participate in the deliberation or the vote on this matter.
Yeah, so interesting, right? In Oracle, we are also seeing Safra Katz say we expect RPO to continue to grow. That's recovery point objective, which is, I am Googling this because this isn't my world, but it's the maximum point of data loss.
I'm just glad you're not looking at me for it.
It's a key consideration in disaster recovery planning. So how much data loss can be tolerated. So giving some color around that. Again, Oracle shares, folks, just down about 0.9%.
All right. Well, right now in Houston, CERAWeek by S&P Global is taking place. It's one of the biggest energy conferences of the year. U.S. Energy Secretary Chris Wright spoke already. We heard from executives such as Joe Dominguez, CEO of Constellation Energy, and Saudi Aramco CEO Amin Nasser. Bloomberg TV's Alex Steele is live at CERAWeek now, sitting down with another CEO, John Ketchum, CEO at Next Era Energy. Alex, take it away.
All right, thanks so much, guys. We are joined now by John Ketchum. He's the CEO of Next Era Energy. For some background, Next Era is the largest renewable company in the United States. It's focused on solar, wind, battery storage, and green hydrogen. John, it's always a pleasure to catch up with you.
Great to be here, Alex. Thank you so much for having me.
You bet. Tough day in the markets. Lots of fear about tariffs, lots of fear about recession, more economic pain before any other kind of gain. Are you seeing any signs of this in your market?
We're not. We planned for this. So from a wind standpoint, 90% of our wind turbines made in the USA. We've converted our battery purchases to almost all predominantly in America. And from a solar panel standpoint, we diversify our buy around the world, but we're also increasingly pivoting to the United States.
So if we do see tariffs go up on Wednesday, aluminum, steel, 25%, does someone call you and say, hey, look, I got to charge you more, or no?
No, we don't. We'll get some of those calls, but it doesn't impact our generation costs. Those costs are absorbed by our suppliers through our contracts. The only area where we could see some additional expense would be in the transmission area, where we do use a lot of aluminum and steel in the poles, but it'd be a modest impact.
What about the demand side? So lots of worries about recession, weakness in economic growth. Are you seeing any signs of that?
We're not. We're projecting demand to increase sixfold for power over the next 20 years compared to the prior 20. And we think that demand is going to have to be met by all forms of generation, which is a perfect fit for a company like NextEra, because not only are we the world's leader in renewables, but we also have the largest gas-fired generation fleet in the United States. Nobody's built more gas-fired generation in the last 20 years than NextEra. We're the 7th largest nuclear operator in the world. We're in upstream oil production, we're in midstream, and we have a leading competitive transmission business.
I just spoke to the Secretary of the Interior, and they're looking at leases of solar on land. They're looking at online wind leases, offshore wind leases that have already been doled out, where contracts could already be happening. Are you worried that all of a sudden the government's going to come to you and be like, John, shut off those solar plants?
We haven't seen that, and right now is not the time to pivot away from renewable energy, and here's why. Because again, nobody's built more gas-fired generation in this country in the last 20 years than NextEra. What we're seeing in the market for gas build from our customers is a lot of demand. But with that demand has come a stark increase in prices for gas-fired generation. It's increased threefold because the turbine's more expensive. It's really hard to get labor to build combined cycle facilities because we're competing for skilled labor with data centers, with semiconductor chip manufacturers, chemical companies, oil and gas refineries, and the electrification of industry. And so labor costs have gone up substantially, driving the cost of gas up from our last plant built in 2022, $785 a kW. Today, to build that same plant, $2,400 a kW. Wow. So gas-fired generation prices have gone up over $100 a megawatt hour, making it extremely expensive. So we've got to be careful here in terms, or we'll have a real affordability problem in this country. We're going to need all of the above, but we've got to be careful not relying on just one generation class, that being gas-fired generation. We're going to need renewables to get us to 2030 and beyond. And when the gas shows up and the nuclear is a ways out, that won't show up till 2035 or later.
Well, let's talk about that. So you guys are exploring restarting the Duane Arnold nuclear facility. We saw that with Constellation and 3 Mile Island. They got a nifty agreement with Microsoft. It was a complicated negotiation and contract process, but what are you going to restart the plant? What are those conversations like? Who are you talking to?
So Cedar Rapids is a hotbed for data center development. So we're talking to a lot of different hyperscalers. There's a lot of demand for that facility. So we need to get the contract in place where we can get that signed, get the revenues to support the recommissioning, and then make sure that we firm out the cost estimates. But again, back to the tax credits, we need the tax credits in order to build that plant, because those are a big part of, you know, helping out with the economics, which will provide a real growth engine and much needed power supply for hyperscalers in that area.
How hard are those conversations right now with hyperscalers to come to a price?
Right now there's a lot of demand because AI is just getting started. We're in the early innings of artificial intelligence. We want to globally dominate that market. So there is a lot of demand, particularly for nuclear assets, to help serve those data centers. Also for renewables. Data center developers want renewables to power their facilities and gas. So it's really, again, all of the above. And what's interesting is in Congress today, what we saw were 21 House Republicans signed on to a letter that went to Chairman Smith and Chairman Crapo on the Senate side saying, please don't touch the tax credits for wind, solar, or battery storage. Don't touch the ability to transfer those tax credits because they're essential to keeping utility bills low and driving investment. And as an example, NextEra is investing $120 billion over the next 4 years during the term of this administration. 80% of that investment is going into Republican states.
Okay, so what you're talking about specifically is the tax credits within the IRA that benefit wind and solar, maybe some nuclear also, but a lot of hydrogen also is a big benefit. And the worry is if you repeal the IRA in some respects, those tax credit goes away and puts the kibosh on a lot of certain projects. Are you talking to the administration? What's your level of confidence?
Yeah, we are talking to the
administration. Are they listening?
We are talking to the administration, and yes, they're taking our meetings, they are listening, and the big message that we're bringing is, look, don't take any options off the table. If we take renewables off the table and the gas doesn't show, fire generation doesn't show up till 2030, nuclear till 2035 or later, the demand is here right now. It will go unmet. And we all know if we don't provide supply of generation to meet that demand, prices only go in one direction, and that is up. And again, the credits, we are legally obligated at Florida Power and Light, the largest rate regulated utility in the U.S. that we run, to flow those credits back to customers dollar for dollar. So it actually reduces their utility bill dollar for dollar. We've done a national study. Because of the credits, household income across the U.S. is up 12%. If you take those credits away, that's a 12% tax increase on Americans across the board.
I do have to say, after talking to the Secretary of the Interior, though, it doesn't feel like there's a lot of love for wind and solar.
Well, the message that we're bringing forward is we're going to need it. Because if we don't have renewables to answer all the demand that's coming, again, that six-fold demand over the next 20 years, we're going to get caught short without adequate power supply in this country to meet that demand, which is going to put a lot of pressure on utility bills. And the last thing we want is inflation driven by power prices in this country, which is what we'd be looking at.
Before I let you go, what do you think the data center world's going to look like? Is it going to be you building a plant for a data center on site? Is it going to be that hyperscaler moving to where you already have power and a direct hookup, or is it just going to be flooding the grid with stuff?
Yeah, it's going to come in two ways. I mean, one conversation we have are what I call islanded solutions, where we can build right at their site, provide them with a multi-gigawatt power solution, whether it's through renewables, gas, nuclear, a combination of all of the above. But that's a little bit more expensive because you have to build in a lot of redundancy if you're not connected to the grid. Most hyperscalers would prefer to be connected to the grid to have that reliability backup to their data center. So it's going to be a three-way conversation between a NextEra, the data center provider, and the local utility in that area. And we have 20 years of utility relationships. Nobody's better positioned to be able to deliver that solution than NextEra.
But it's complicated, as you're saying. All right, John, really appreciate it. Thank you very much for joining.
Alex, always a pleasure. Thank you.
You're welcome, John Ketchum. He is a NextEra CEO. Back to you guys.
All right, Alex, thank you so much. That is our own Alex Steele. She is live at CERAWeek with John Ketchum there, CEO at NextEra, I should say, Energy. And if you missed any of that conversation, great in terms of one of the themes that we talk about. Yes, we had the market selling, but energy was an outperformer, and increasingly you hear about the increased electrification of our world and the increased energy needs. So some really important voices there.
Hey, if you want more on energy, stay tuned, because she's going to be coming back to us with Lord John Brown, former CEO of BP, a little later in our program. Also, check out our live blog, T-Live, on the Bloomberg Terminal. CERAWeek Day 1. Some highlights include Energy Secretary Chris Wright saying tariffs effects on crude too early to call, and the European Commission Energy Director criticizing Russia's energy, quote, weaponization.
Looking at our live blog, speaking of that, for our markets live blog, and the NASDAQ 100 has fallen nearly 4%, worst day since 2022, closing at the lowest in September. S&P having its biggest fall this year, down about 3%. And we had Tesla dropping 15%, the biggest tumble since September 2020. The rest of the Magnificent Seven also slumped. But, you know, we did a segment last week looking at Tesla. Like, at some point, do investors come in and look at what has happened to the share price and kind of, you know, it's not the first time that people have said Elon has a full plate. This is what he does. But you do wonder at some point, do investors, you know, kind of want to, I don't know. have some questions for him.
Elon's a different animal, right? Because he has so many companies and he has been able to focus on so many different things.
Yes.
Hey, speaking of the sell-off, I want to bring back in Bloomberg News senior editor Mike Regan, who joins us here in the Bloomberg Interactive Brokers studio. So, Mike, we got the final scorecard for today. Red across the screen, the NASDAQ Composite down 4%, the S&P 500 down 2.7%, the Dow down 2.1%. It did shed 890 points. It didn't finish off, these indices didn't finish off the worst levels of the day, but this was some serious damage if you're long this market.
Yeah, absolutely. And especially you look at year to date now. I mean, the NASDAQ Composite down almost 10% year to date already. S&P off about 4.5%, you know, down about 8% from its last record. So, you know, certainly an ugly, ugly day. I mean, I do think, you know, again, to use that silver lining for the cloudy day, that bounce off the lows is something.
Who said it. Sorry, that's who told us. I was saying, I know we talked to somebody who said if we don't close at the lows of the session and we see it bounce and we don't see selling into the close.
Yeah.
Okay. I thought it was Bill Maloney. Maybe he said it also.
Yeah, I mean, I think it's something that does give a little bit of confidence to bulls. I mean, I wouldn't say it guarantees, you know, this is the bottom or that we see you know, a rally rebound tomorrow, but it is one of those sort of check the box things. You know, I think there'd be a lot more sort of hand wringing and concern tonight if we had closed right near the lows of the session. So to get a little bit of a bounce, I think allows traders to exhale a little bit. And again, it's no guarantee of anything that the trend's reversed or that we'll see a rebound tomorrow, but it is, you know, better than the alternative, whereas, you know, you're saved, you know, a nasty day is simply saved by the closing bell.
I love on the live blog, the Markets Live blog, they say, you know, no secret that buying into tech weakness has paid off handsomely in recent years over a longer horizon. 1 in 3 month forward returns only confirm that. They show back in September of 2022, I guess the S&P was down about 1.5%, and then 3 months later, well, maybe that's not a good example. I'm just looking, I guess it's some of them, May of 2022, some selling, and then we saw 3 months later it was up about 11%. So, this has been a trade that we've heard over and over again, right? Buying into the weakness, especially for tech.
And those big tech stocks, especially. I mean, I've been doing this job for I don't know how many years. It's never been a wise idea to bet against tech in the long term, But that said, I mean, this is obviously a noticeable dip, and how long it lasts, how long tech continues to bear the brunt of the selling is anyone's guess. But it's hard to ignore just this very fierce correction we've seen.
And I think it's fascinating that Oracle, which came out with its latest numbers, and the stock was bouncing around, but right now it's up about 5.3% here in the aftermarket in what has been a down market day. And this one, third quarter adjusted revenue came in just a hair light. But we are reporting that it's given a strong outlook on cloud and, reported a surge in bookings and gave a revenue forecast for the fiscal year beginning in June that topped estimates. I guess my point is, Mike, you have been doing this a long time, and they're the overall market indices, but if you dig deeper, as Tim's been pointing out, there were stocks that hit 52-week highs today, and not every name was down across the board.
Yeah, definitely. I mean, if you take a name like Oracle, if you give someone sort of a reason to buck the trend, I mean, they were down big today, now have recouped all the losses and are higher, at least in the aftermarket trade. I mean, a lot can happen between now and the open that could sort of evaporate that. But look, I think that is another sort of reason to find some solace in this market is we do have utilities up pretty strong, energy up. So, a bit of a rotation more than like that sell everything type of trade that sometimes you see at times like this. That said, I mean, I really think, it's really the comments coming out of the White House over and over again really lead or sort of informing the investing public that, look, sort of buckle your chin strap here. We're not really going to come to the market's rescue and redo any of these policies just to please the stock market or to avoid some first quarter numbers that are going to be ugly. So, and you hear more and more this sort of shifting the blame. The White House is trying to shift the blame to the Biden administration and say this is Biden's economy that they've inherited, which I think...
We did a whole segment on this with Mike McKee about what's the Biden economy, what's the Trump economy.
Yeah. Well, the jobs report was the Trump jobs report, according to...
Mike?
Well, no, according to the folks from the White House who came and talked about the strong... certain strong portions of it.
It's not the clear delineation is a little tricky.
Well, and it's maybe there's a little bit of spinning going on to sort of
in politics. Spinning? Come on.
I hate to be the breaking news here, but to blame the last guy. But clearly they think they can get away with blaming Biden for some sloppy market action and for some weak economic data in the first quarter. So their perspective gives them cover for some bad numbers in the first quarter.
All right, Mike Regan, thank you so much for guiding us through on this market day. We really appreciate it. Bloomberg's Mike Regan.
Well, the Business Week Women in Leadership segment is brought to you by Visa and Visa Foundation, connecting small businesses to the digital economy. Today, and especially International Women's Day, they are committed to uplifting small business for growth.
All right, folks, some news in the world of real estate today. Blackstone Mortgage Trust is preparing to sell its first collateralized loan obligation since 2021. I know, wild. CLOs, a $1 billion deal that shows the real estate investment trust pivoting away from its focus on office properties. So interesting development.
Okay, this CLO is going to be backed by roughly 90 properties, and over 85% of the total dollar value will be comprised of apartment complexes and hospitality and industrial properties. That's according to people familiar with the matter. This by our own team at Bloomberg News.
Yes, indeed. For more on real estate, we bring in Tamara Bowens. She is President and Chief Operating Officer of the Dawson Company. Based in Atlanta, it's a real estate services firm that, in its own words, has developed, renovated, and or managed 5 million square feet of office, 1.5 million square feet of retail, and 15,000 and growing units of attached and multifamily housing. The company has projects in Bethel Park, Pennsylvania, Pensacola, Florida, and has completed many projects throughout Atlanta, Baltimore, Cincinnati, and more. She joins us from Pensacola. I mean, you have a great vantage point in terms of some of the real estate that's going on, certainly on the commercial side of things. Talk to us, first of all, big picture, how you would describe the real estate market. And you can be as specific, because I know geography makes a difference when we're talking real estate.
Yeah, absolutely. So, as you probably have figured out, it's very complicated today. From our vantage point of development, we're really focused on, building communities. So back in the day, you could just build an apartment complex and move on to the next thing. It's more sticks and bricks. Now it's more about building a holistic community, and putting in those features and amenities that the marketplace wants. When you're specifically talking about development, which is our bread and butter.
How, are you seeing specific, and as Carol mentioned, you've got projects right now in Pennsylvania and Pensacola. You've done projects in Atlanta, Baltimore, Cincinnati, and others. Geographically, where are you seeing areas of strength and where are you seeing areas of weakness right now?
It was very interesting. So our main focus right now is Pensacola. Pennsylvania was long ago, or Philadelphia was long ago. But, like I said, Pensacola is our market focus right now. And what we realize is that, even smaller cities want what big cities have, right? So it's no longer building to the lowest common denominator, but it's really about elevating the status and the stature of what you build. So, I think there was a thought process before that smaller towns and cities wanted different things from big cities. What we're seeing now is this migration of the things that exist in a city like in Atlanta, like in New York City, are also welcome in these smaller cities. And that's exactly what we're doing as a company.
We spent a good portion of our earlier part of our program talking about rates and where we're seeing, not where we're seeing, but where bond investors are seeing the 10-year go. How dependent is your business on rates?
Rates are coming down. They're not coming down fast enough, of course, and it makes it more expensive to develop and to build. But if you're in the right market with the right fundamentals, the money will come. We're actually right now in the process of doing a public-private partnership in the city of Pensacola, at a property called Maritime Park. So it's a city park that we have the rights to develop 5 pad-ready sites. Right now, we're under contract to build a Reverb by Hard Rock Hotel, as well as luxury lofts. And then that'll be quickly followed by other lots, which will have an entertainment complex, as well as a luxury high-rise and a luxury hotel as well.
So I want to go back to what you said about rates coming down faster. Do you see rates coming down faster because of concerns about a recession? Because if rates start to come down pretty fast, that means the Fed's going to be a little bit concerned about economic growth. Is that what you anticipate?
I don't have a crystal ball, but what I was really meaning is from a development standpoint, of course, we want rates to come down faster because money then is cheaper. But, as far as the speed in which it will happen, like I said, who knows? But I definitely think that you'll see some movement, but it won't be as fast as anybody wants to happen.
You guys also partner with large asset managers to raise money and finance these projects. How has it been, the fundraising environment, over the last couple of quarters, and how has it been this quarter?
Actually last year we were really knee deep in trying to raise money, and it was definitely more difficult. I feel like the purse strings are loosening up now, and so it's becoming a little easier. Like I said, we work with investment banks, and as we're looking at this property from this development at Maritime Park, we're definitely getting some traction faster than we got on past developments, for sure.
What's the most difficult part of developing right now? One of the things that we often find when we talk with developers is, regulations, permits, getting things done. It just takes a lot of time. The markets that you're working with, are you finding them problematic, or is it fairly okay and easy to get things up and running?
I think for us, especially being in Pensacola, it's an education process. So if you think about Pensacola, it's in the Panhandle. People think of the Panhandle as a redneck Riviera. They think about 30A. Pensacola is so different from that. And so it's just a constant education of what Pensacola is, the amount of investment that the government has, in the Air Force there. You think about it being, most people don't know that Pensacola is really steep in healthcare and STEM technology, which is driven by the naval bases there as well. And just, it's a young population, and it has, it's growing by gangbusters. So I think for us, being in Pensacola, it's really more of an education process. And then when investors understand the market, it becomes so much easier to have the conversation and to get the investment.
All right, got to run. Tamar, thank you so much. You are President and Chief Operating Officer of the Dawson Company, joining us from Pensacola, Florida on this Monday. We got some news crossing the Bloomberg.
Yeah, let's go to the skies because we're seeing shares of Delta Airlines just crater, I wanted to say, in the after hours, down about 9% as we speak. The company cut its profit expectations roughly in half for the first quarter as demand for air travel softens. Earnings, the company says, will be 30 cents to 50 cents a share in the period, down from an earlier forecast of as much as $1. Delta said in a statement. Delta's share, again, shares falling in post-market. You're watching other airlines? Are they moving?
Got American down almost 4% here in the aftermarket. United, it is down 5.3% in the aftermarket. JetBlue just down about 0.8%. But really the majors, as you mentioned, Delta down 9%, American down 3.7%, and United a decline of about 5.5%.
Okay, well, let's go to Texas now, back to Houston, where CERAWeek by S&P 500, S&P Global is taking place. It's one of the biggest energy conferences of the year. Alex Steele of Bloomberg TV just spoke with John Ketchum, CEO at NextEra Energy. She's sitting down with another big name in energy, Lord John Brown, former CEO of BP. Hey, Alex.
All right, guys, thanks a lot. I really appreciate it. It's a tough tape today, to be sure. Laura John Brown, yes, former CEO of BP, but also now chairman of Beyond Net Zero. It's a climate growth equity venture established in partnership with General Atlantic. Also a tough tape for anything Beyond Net Zero right now. Great to see you. Thank you so much for being here, John.
It's a great pleasure.
Markets were falling out of bed. Oil prices are lower, excuse me. Everyone seems to be panicking about growth, about recession fears, tariff fears. You have been in this industry, you've been a CEO. What is it like right now?
Well, right now it's uncertainty is as high as I can remember it since my entire career, which goes back a long way to the 60s.
That's a long, long way. So you've lived through a lot. What would make it more certain? What is the biggest uncertainty?
Well, I think people are playing with multiple uncertainties in different jurisdictions in the world. You know, but the underlying one is, you know, does this impact the world, and will it change overall growth? Could the growth stop in the world? I personally think uncertainty in demand affecting oil prices, the markets, so people want to wait and see.
Is the wait and see going to then become a continued search for Beyond Net Zero, an energy transition, decarbonization? Is that still something that the energy community is committed to?
Well, we think it is. Obviously, we'll be as pragmatic as anybody, but we've found over the last few years, by investing in things that improve efficiency and effectiveness, we can invest for all seasons. We don't have to worry about whether a government's supporting something or not supporting it, whether giving us tax breaks or not tax breaks. We just look at things that are commercial and have pretty good returns. And they're in efficiency, as I said, and actually in things like the circular economy. Doing more with what we've already used and redoing it is great for efficiency and effectiveness, but all these things are great for the environment because they reduce carbon dioxide output.
Is that a different message than a couple of years ago, where it would be like we need to reduce carbon emissions because it's good for the environment?
Well, we also believe that, but we've also been,
Two things can be true.
They can, or they are. I mean, it's a virtual coincidence. But, you know, we're an investor not in heavy assets. We're asset light, so we look at the way software, and today there's what a choice we have of that with generative AI, how it can make things better for the world, and thereby reduce greenhouse gas emissions, thereby reduce the worst impacts of climate change. And we'd like to do our bit in that. We're not big enough to affect the whole world. What can you do with $3.5 billion? You can't do as much as you can with $3.5 trillion.
This is very true. Are there certain new energies or alternative energies right now where the value is really good?
Yes. The energies, so wind and solar and batteries have come a long way. And they're now actually really cost competitive sources of energy. Cost competitive for people who want to diversify, cost competitive for people who don't have energy in their nation. You know, these are really important things for the future. So this is not about subsidies. It's about economics.
The other side would say, or a counter argument would be, oh, well, it's intermittent, and we need the base loads of nuclear or natural gas or coal to supplement. How do you guys view it?
You need all of the above. You know, wind and solar with batteries can produce effective base load supply, depending on where you are. One size, I'm afraid, doesn't fit all. And, you know, you can make lots of sweeping statements, but it all depends on the details. But actually, you know, even in the US, you know, the wind and sun are out of sync between, you know, Arizona and New Mexico. So, you know, if you add the two together, you could produce great semi-baseload supplies for California.
So it's been a tough lesson for the energy shift transition over the last few years with the war in Ukraine, along with now President Trump policies, the inflation that we got as well. Are you getting any indication that on the margin, abandoned oil and gas areas or areas that were too risky or something might become viable again?
So first of all, no one abandoned oil and gas or coal. I mean, coal demand has been kind of flat for the last 10 years, so people forget that. And oil has been rising roughly at 1 million barrels a day a year for a long time, and gas at 100 billion cubic meters a year. They're rules of thumb, and they carry on. So we've had a lot of supply, and oil and gas will remain part of the energy mix for a very, very long time, because there's nothing to substitute them. So some things will open up, but opening up is about the price of energy, and it has to be competitive pricing, and it has to be about your sense of the risk you're prepared to take. In the case of oil, you have to be sure that whatever price you think you're going to produce at is going to survive for 20, 30 years. And so that's always a big consideration.
Yeah, and the curve has been changing quite rapidly.
Curve changes daily.
Yeah, there was a report from the UK government that they unveiled proposals that could ease the tax burden on offshore oil and gas. They'd still ban any new leases, but they could ease that tax burden. Is that a signal? Like, what does that tell us? I thought the UK was going to be like all wind.
No, it can't be all wind, and it can't be all solar. I wish it could be all solar.
Definitely not solar.
But,
it's the UK.
Well, no, actually, as time goes by, the solar's better, even in cloudy conditions.
Okay, fair enough.
So it's got to be a mix. The key thing is diversification. You know, diversification, if one thing goes wrong, you've got another thing. If geopolitics gets in the way, you can't get electricity from a connector or gas from imports. You need diversification. It's what Winston Churchill said. The only point of security, the only key of security is diversification. So making sure that what remains in the North Sea, which is not a lot, it's really it's had its way past its best, is used appropriately, is probably a good thing.
So regionally, when we talked about how you guys invest, right? Like asset light, really about the circular economy, where regionally is there the best opportunity for that?
So we've focused on really quite big chunks of the world. The United States, it's not by no means the majority of investments, Europe, Sub-Saharan Africa. So all of these areas have different things you can invest in, depending on the particular nature of the region. You know, is it long or short energy? What is its, what does it really want to do? What's its ambition in life? And it changes over time. And so you've got to be pragmatic, you've got to work these different places to see what's really good for you.
Or it changed quickly, as in the United States. So what would be good investments right now in the U.S., where a lot of the uncertainty, you could argue, is originating from?
Well, what's changed, of course, is the way in which the federal government is looking at these investments. And that one should expect. I mean, governments change. You know, governments tend to, I always like to think that what governments do for the energy business is kind of temporary. And they come and they go, and there are long cycles of change. It doesn't change what has to be done over the long term. Obviously, if you've got public market investors, you've got to worry about them quarter by quarter. We're in a private markets, we can take a longer-term view. But long-term, it's clear. The world needs more energy. It moves 50 million people out of poverty every year by getting access to energy. It's good for the climate if it's done in the right way. And remember, making sure we are not subject to climate change is not about saving the planet. It's about saving humanity from being ravaged by what's going on around them.
A different voice than what we normally hear at CERAWeek. I really appreciate it, John. Thank you very much. Lord John Brown, of course, he's chairman of Beyond Net Zero. Guys, I'll send it back to you.
All right. Thanks so much, Alex. Do appreciate it. Once again, Alex Steele out there at CERAWeek in Houston. Lord John Brown, the former CEO of BP. For more of our CERAWeek coverage, check out our live blog on the Bloomberg Terminal and for day 2 tomorrow as well.
All right, some stories crossing after the closing bell. Let's toss things over to Charlie Pellet for an update on that. Charlie.
I thank you very much. And here's what's going on. We are keeping an eye on Delta Airlines shares after hours because right now the stock is plunging 15%. Delta has cut its profit expectations roughly in half for the first quarter as demand for air travel softens. Now, this is not a Delta exclusive story. We've got United down after hours, plunging by 11% after hours. American down by 4%. But again, Delta cutting its profit expectations roughly in half. That is the headline right now from the Bloomberg Professional Service. Also after hours, keeping an eye on Oracle. The stock right now little changed, up by about 0.5%. Oracle reported a surge in bookings and gave a revenue forecast for the fiscal year beginning in June that did top estimates. A down day today for the Dow, the S&P, and NASDAQ, and that is putting it mildly. In terms of percentages, a 2.7% plunge for the S&P, ending the Monday session at 56.14. The selling continues. The S&P today down 155. The Dow down 890, down 2.1%. NASDAQ Composite Index plunged 4% today, and the NASDAQ 100 Index down by 3.8%. Cannot ignore Tesla. That stock today down 15.4%. 10-year 4.21%. The 2-year 3.88%. Gold down $20 the ounce, down 0.7%. West Texas Intermediate crude, just talking about the oil industry, WTI 65.95 a barrel, down 1.7%. And Bitcoin now with a $78,000 handle, 78,700 on Bitcoin, down 5.2%. Again, recapping, stocks lower, S&P down 2.7%. I'm Charlie Pellet. That is a Bloomberg Business Flash.
Hey, thanks so much for that update, Charlie. Do appreciate it. Airlines certainly one to watch tomorrow, Carol Master.
Yeah.
Global markets, though, experiencing volatility due to anxiety over tariffs and government firings. American stocks being heavily impacted in demand for recessions havens are boosting sovereign bonds. The S&P 500 extended its plunge. The NASDAQ 100 saw its worst drop since 2022. Treasury yields sliding on bets that an economic slowdown will force the Fed to slash interest rates. We've got someone here with a great global view. It's great to have back with us Michael Lowen. He's CEO of IDA Ireland. It's the foreign direct investment agency of the Irish government. Michael joins us here in the Bloomberg Interactive Brokers studio. Welcome back. How are you?
Good afternoon, Tim. I'm great, thank you. And to Cara, great to see you.
Great
It's good to see you. Listen, we got to just start with tariffs because that's exactly where things are with the U.S. right now and with what historically have been some of its closest allies. How are you looking at this regime in terms of international trade?
Yeah, so I think from an Ireland perspective and an European perspective, obviously, you know, our position on tariffs has been, I suppose, consistent, and maybe that's one thing you mightn't just associate with today's environment. Consistent in the context is going to be disruptive. I think it's going to be negative on the global economy. It's obviously, as we can see, it's leading to uncertainty, and uncertainty leads to lack of decisions and lack of investment. And we're very conscious of that from an Ireland perspective. And what we have to think about is, okay, from us as a small open economy, which we are within the European Union, how do we make sure that the stability, the proven track record, the trusted relationship that we've built over many decades, how do we ensure that actually comes to the fore? Because I fundamentally believe that for economics to continue to prosper, for companies to continue to invest internationally, they need locations like Ireland. They need to be able to go into locations that are proven, that are trusted, and are strong partners. And that's effectively what we're going to continue to focus on. notwithstanding, there are headwinds in front of us.
There are headwinds and then there are headwinds. So, Michael, are you concerned about U.S. policies by the Trump administration impeding more foreign direct investment into your country?
So I think I probably have mentioned over the last 2 years, we've seen a significant change in the competition for foreign direct investment. So that journey already started probably 12, 18, 24 months ago.
But even so, you have a lot of big tech giants that still have very impressive setups over there.
We do. We have a lot of big tech companies. We have a lot of big life sciences companies. A lot of big financial services and fintech companies. And the reason we have them is because we bring value, and those companies get value within Ireland. And maybe just to give you an example of that, if we look at the total output that comes from our FDI base in Ireland, it's over about 420 billion on an annual basis. 85% of that revenue is outside of North America. It goes to international markets. So Ireland is a real hub for international access, whether it's into Europe or across the rest of the world. And that has a flow back and benefit to those companies and investors in Ireland as well. So we have to.
Like you're getting ready to go to Washington and make these arguments.
Yeah, well, certainly this is the week that we, from an Irish perspective, we're working our St. Patrick's Week. We're making sure that all of those key points in terms of that partnership with Ireland is clearly understood. And remember, it's a two-way bilateral relationship. Ireland is now the sixth largest investor in the United States of America as well. So it's an incredible two-way flow, and that's come from being open and a trusted, proven partner.
Well, I'm wondering, though, about this idea that the United States in the last couple of weeks has really shifted its position with allies and close partners, Canada and Mexico, for example. And the president has had words for the entire continent of Europe and the European Union as a result of what he sees as not sufficient spending on the continent's defense. Does it feel like the U.S. is as close of a trading partner and as close of a partner as it's ever been right now?
So I think what we've seen over the last number of weeks, and in particular, we've seen a significant change in that engagement. There is no doubt. You've also seen the response from Europe, and maybe a realization that Europe has to do more on defence, for example, which you've commented on, Tim. And I think all European countries, and particularly there was a summit last week and the week before, are committing to further engagement and spending in terms of security. And I think that has to be welcome because, we've over the last 24, 36 months, we've seen a very big change in the landscape in Europe. I think the war in Ukraine certainly was a very significant change in Europe, and that has changed perspective, and I think you've seen that response as well. But I do hope that if you think about Europe and the US, it's the largest trading bloc in the world. There is 6 billion of daily trade between US and Europe. And I think protecting that, and if we look at what that looks like at the moment, the trade deficit is less than 3% between the two blocks. It's quite small in the overall scheme. So you have to think about building on that, because I think there's more to be gained in terms of collaboration and working together as two significant blocks than there is apart.
Are you, though, nervous? I am curious if you folks are nervous, though, about the relationship between the U.S. and Ireland changing significantly. Based on what you've heard out of the White House so far.
Yeah, of course we have to, we're very conscious that there is a change in terms of policy, but we're also very conscious that there's a deep, relationship between the US and Ireland. It dates back, like last year we celebrated 100 years. Mm-hmm. The US was one of the first countries in the globe to recognise Ireland as an independent state. So it goes past, let's call it 6 months, 8 months, it goes back 100 years.
Right.
We would hope that stands, to the future. We look to it in terms of a close partnership with the US, and we look to bring value to the US. And as I say, it is a bilateral arrangement. We are a strong investor in the US economy, and the US is very important to the Irish economy, and we certainly would like to see that continue.
Is there concern that we won't see that continue?
I think at this juncture you have to say that we're conscious that there is a change in direction, but we're also very confident in terms of what we offer and that bilateral arrangement.
But how, given the change that we've seen over the last few weeks, what have you had to do differently? What does Ireland have to do differently in order to make sure that it appeases the U.S. government?
Yeah, I think what we have to do actually, some of the things we have to do what we've always done, which is be that proven location, a trusted partner. We would see ourselves as a very trusted partner with the US and indeed with our European partners. We have to continue to be that trusted partner and that safe location and proven location. That's what we're going to focus on. Focus on what's inside our control, because we cannot control what's outside of that.
Michael, just got 30 seconds left here. You're surprised to it sounds like everybody's not quite sure what their relationships will be going forward. Are you surprised to be kind of at this point when it comes to a relationship that Ireland has had with the United States, as you said, for a century?
Well, I think this week, Carol, reflects that relationship as well. You know, we are having, an entire week, in fact, an entire month has been designated now to recognise the heritage with Ireland. I think that's a very strong signal of the respect that exists between both nations. And I think we're very thankful for that as well and appreciative of that. And this week actually is a real opportunity for us to ensure to build those relationships, because it's like every partnership has to be worked on. And I think this is no different. And we're certainly in that I suppose, that focus this week is about ensuring that we put Ireland's best foot forward.
Well, we hope we can hear more from you too on the other side of your time here in the U.S. Good to always see you. Michael Lowen,
thank you.
He's CEO of IDA Ireland, the foreign direct investment agency of the Irish government.
Well, today is a great day to kick off a new feature on our program that focuses on 3 stocks. So let's take a look at some stocks that are on the move today. Bailey Lipschultz is a Bloomberg News equities reporter. He joins us here in the Bloomberg Interactive Brokers studio. Bailey, you had plenty to choose from today.
A lot of red too. And starting with the worst performer in the S&P 500, that is none other than Elon Musk's Tesla, down 15%, guys. Worst day since September 2020. This coming as analysts continue to cut expectations for sales, but also as investors really rotate out of a lot of those big winners. We had seen Tesla really riding the wave of momentum after Donald Trump won in November, and then really pulling back and erasing those gains. And now, again, worst day since 2020, closing at the lowest level since October. A lot of money lost.
I want to talk travel stocks, but I also want to expand our day, which is, normal market times from 9:30 to 4, but we also got some news after the closing bell.
Until the NASDAQ goes 24/7.
Yeah. That's true, until the NASDAQ. But we did get some news from Delta after the market closed, and you've got Delta Airlines down 12%.
Wow. Delta Airlines down 12%, and that's leading to other airlines trading lower, as well as cruise stocks. That coming after Delta slashed their profit forecast, citing weak domestic travel demand. The interesting thing from that earnings report and snapshot that we've seen so far, premium flyer, totally fine. It's everyone else who's really struggling, and that's impacting the business. So if you're well off and can fly first class for a few $1,000s,
I believe they call it Delta One at the front of the plane.
I haven't, when I sit in the back,
That's what I heard, Bailey. That's what I heard. You also mentioned cruise stocks. Are we seeing them hit after hours too as a result of domestic spend perhaps being pulled back on discretionary purchases?
We are. So Carnival Corp, CCL is the ticker. That's down about 3%. Norwegian Cruise Line, which caters to a more affluent consumer in Europe, down 1.8% also. So we're seeing investors pulling away from kind of these really discretionary companies. We saw Carnival down more than 7.5% today's session. Biggest drop since June 2023. No news there. Just simply investors rotating away, just given the uncertain economy, especially when you look at companies that their profit is really driven by U.S. consumers and people wanting to spend on more luxurious vacations, not necessarily the travel you need. And also just keep in mind, though, we had seen a pretty robust tear for Carnival and a number of those companies over the last 12 to 18 months.
I mean, consumer discretionary as a whole down almost 4% today, so no surprise one of your worst performing major industry groups in the S&P 500. However, it was really good to be Redfin today, certainly. And if you were an investor in Redfin and bullish on Redfin, you were pretty happy.
Yeah, the stock closing up 68%, which sounds great until you think about it and go, okay, well, it's only closing at the highest level since December. It's been a rough go for the company. Going to be acquired by Rocket for $1.75 billion. It is an all-stock deal, so we did see Rocket shares under some pretty notable selling pressure this morning. So investors, whether it's arbitrage, traders trying to game that out. But the interesting thing to me, an interesting thing from a number of these analyst notes, is people use Redfin or Zillow to buy houses. Right. Well, Rocket offers you the mortgage. So if Rocket can get this deal approved by regulators, then you kind of have a one-stop shop for home buyers.
It's interesting though. You mentioned the Rocket. That was down 15% on the news today.
Yeah.
Oftentimes we do see the company that's acquiring the other company, move lower. Was it exacerbated by the sell-off today? Is it investors saying we think you're overpaying? Is it the idea that we don't necessarily think this is a great buy for you? Is there a signal that we can look into?
It didn't seem that way. The one thing to keep in mind, though, is when you do have M&A, to your point, that kind of merger arbitrage creeps in, but especially that's pronounced when it's an all-stock deal. So you actually can actively short Rocket and buy Redfin, knowing you will get shares on the back end, as opposed to a cash deal where you're kind of positioning with a bit more of kind of an alpha flavor.
Yeah, great point, Rob. All-stock deal, $12.50 a share for a Rocket to buy Redfin.
Hey, since we're talking stocks and we're talking about what's moving, I mean, we did see Oracle come out with their earnings. And while initially the stock bounced around in the aftermarket, ultimately we saw the stock rally. I think some upbeat expectations about the outlook here. But it's just a reminder, Bailey, too, that, yeah, stocks in a day where we saw a lot of selling, you still see companies and specific stocks trade on fundamentals.
Yeah, and there is a reaction, as you mentioned, strong bookings number, obviously a lot of optimism around what Stargate could mean. But again, closing at the lowest level since early September, so you're at a 6-month low. Investors maybe, again, it's going to be interesting to just keep an eye on what Tuesday brings, because when we do see these big sell-offs, turnaround Tuesday, maybe, fingers crossed if you're a bull.
I mean, on Friday, it was like the S&P 500 was back at levels, from before the election. Now back at levels since September. So at one point today, Bailey. So we're sort of this round trip pre-Trump election.
Yeah, and it's getting interesting. It's getting to the point where everyone throws out the word capitulation. It's been coming up more in conversations.
We're not even
today.
9% off of all-time highs. Are we talking about capitulation?
That it wasn't really today.
No.
You didn't see just everything falling off a cliff. You kept pointing out stocks hitting 52-week highs.
52-week highs in the S&P 500.
Exactly.
No, and to your point, Tim, it's kind of like we had this insane rally after the election, and now that money's rotated.
Like a little perspective, people. A little perspective, people. But we will see certainly what tomorrow will bring. Right now, though, I'm looking at those airline companies, and they are just really getting beaten up. Delta down almost 14%. American Airlines down about 7%. United down about 11%. This is Delta came out and cut its profit expectations roughly in half for the first quarter, citing economic uncertainty that is hurting demand for domestic air travel. Bailey Lipschultz, thank you so much. Bloomberg News equities reporter. That's going to do it for us. Monday over. Good stuff. I'm Carol Master, Tim Stanovic. Balance of Power starts now.
From the world of politics to the world of business, this is Balance of Power. Live from Washington, D.C.
From Bloomberg's Washington, D.C. studios to our TV and radio audiences worldwide, welcome to Balance of Power. Alongside Kaylee Lyons, I'm Joe Matthew.
Stocks extend a brutal sell-off driven by anxiety over tariffs and growth, as President Trump says the economy faces a period of transition and greets tech CEOs at the White House.
Former central banker Mark Carney wins the race to become Canada's next prime minister, just as Ontario raises prices on electricity exports to the U.S. in retaliation against Donald Trump's levies. We'll have more with Ontario's Premier Doug Ford and reaction from U.S. Energy Secretary Chris Wright.
And House Republicans release a spending bill to keep the government funded through September, but it faces hurdles in both chambers of Congress. Republican Congressman Tim Walberg of Michigan will join us live from Capitol Hill.
Thanks for being with us on the late edition of Balance of Power. We begin this Monday with today's sell-off. Another down day. Markets experiencing a 3-week stretch now of volatility due to anxiety over tariffs, government firings, leading to a sell-off in the S&P 500 and NASDAQ 100, which saw its worst day since 2022. For more now, we turn to Bloomberg's Romaine Bostick at World Headquarters in New York. Romaine, this is not getting any easier.
It's not getting any easier. It was difficult before even the inauguration. Concerns about a potential slowdown in earnings growth, but the chaos in Washington, Joe, has really thrown a wrench in everything. We had one of our worst days on the S&P 500 since the fall, a worst day on the NASDAQ 100, if you can believe this, going back to 2022. And a lot of this, Joe, and I'm going to borrow a phrase from our colleague in Washington, Ed Harrison, Trump finally said the quiet part out loud, and that's a lot of the policies that he's implementing right now he's okay if it does a little bit of economic damage. He talked about an economic transition. Scott Bessent last week on CNBC talked about this idea of a detox and how MAGA does not stand for Make M&A Great Again. This does seem to be a White House, at least if you take them at face value, Joe, that does seem to be pointing a little bit more towards the long game and trying to ignore some of these short-term market moves. But these short-term market moves are significant. Not just the 3% drop that we had today, Joe, but you go back basically to about February 21st. Basically, the idea here that this is a market that's been on the back foot since, down 10% on the NASDAQ, 6-7% on the S&P since then.
Well, and when you look at some of these individual stocks, Romaine, Tesla down 15% on the day. I can't imagine Elon Musk is super thrilled about that, even as his focus seems to be elsewhere on the Department of Government Efficiency.
Well, how about 54% since that all-time high on Tesla back in mid-December? And more importantly, Kaylee, we get this idea that, you know, the folks in Trump's inner circle, meaning the billionaires, you know, the Mark Zuckerbergs and the Elon Musk, they were supposed to be benefiting from all this. And at least in the short term, they're getting killed. I mean, Elon Musk alone, his net worth has dropped by about $148 billion, basically going back to January 17th, so that last trading day before the inauguration. Remember, that was on the upswing, and don't cry for him just yet, Kaylee. He's still worth a lot of money still. But there's this idea here that this isn't just about everybody else getting hurt. Right now, everybody is feeling the pain, and the big question is, how much longer is the White House willing to let this continue, and is there truly indeed some sort of long economic plan in this that maybe we should be looking to?
Yeah, are they still going to consider tariffs the most beautiful word in the dictionary? Bloomberg's Romaine Bostick, thank you very much. Now, as markets are bracing, Canada is also bracing for higher tariffs, an immediate challenge for Mark Carney, the former governor of the Bank of Canada and Bank of England, who is set to take over as the country's prime minister after winning the race to succeed Justin Trudeau. During his victory speech yesterday, Carney had this sharp message for President Trump on trade.
The Canadian government has rightly retaliated and is rightly retaliating with our own tariffs that will have maximum impact in the United States and minimum impact here in Canada. And my government will keep our tariffs on until the Americans show us respect.
And we did see further retaliation today with Ontario Premier Doug Ford ordering a 25% surcharge on electricity exports to 3 U.S. states. And Premier Ford is joining us now for more here on Bloomberg TV and radio. Premier Ford, thank you for your time. You have suggested that this surcharge could be hiked or potentially that electricity exports to the U.S. could be cut off entirely if there is escalation from this administration. What escalation would precipitate that response from you?
Well, first of all, thanks so much for having me on, Kaylee and Joe. I appreciate the opportunity. I start off with every interview saying we love Americans. We love the U.S. Canadians love Americans. I do. Spent 20 years of my life in Chicago and New Jersey. In saying this, this is one person. It's not the American people. It's not even Republicans that I've talked to, governors or senators or congresswomen and men. As one person, that's President Trump, has created this chaos, not just here in Canada and the U.S. and Mexico, but around the world right now. You know, he ran on a mandate to lower inflation, create more jobs, and it's done the total opposite. Inflation's going up. Assembly plants will close if he continues on with these tariffs in the auto sector. People will lose their jobs. Manufacturing will go down, and people will have less money in their pockets. I believe in an AmCan fortress. Let's create the American-Canadian fortress and have the strongest, wealthiest, most prosperous two countries in the entire world. That's what I believe in.
Have you talked about your own retaliation with incoming Prime Minister Carney? Are you both on the same page on this?
I just got off the phone with him a minute ago, and Prime Minister-elect Carney, extremely bright individual when it comes to finances and other areas of business. I'm going to be sitting down with him this week and having a conversation. But he's right in line with what I believe in across the country. Patriotism is running wild like I've never seen before. And again, it's not against the American people. It's one person. I call it the self-inflicted potential recession There's one person that will put us in a recession, and that's President Trump.
So you've spoken with the incoming prime minister. Have you had a chance to speak with the president or anyone in this administration since putting into place this surcharge today?
No, I haven't. I spoke to Secretary Lutnick, another great individual when it comes to finances. And I agree or disagree with President Trump. He's an extremely bright business person. If they can't see this, when the market speaks, I always say when the market speaks, you have to listen. The market is speaking. CEOs are speaking. People are speaking out. Why is he doing this to his largest customer in the world, Canada? No one buys more products off the U.S. than Canada does, including autos, 400% more than Mexico, 200% more than anywhere in the world. And we buy as many cars as we ship down there. And the ones shipped down there are 50% American-made parts. You can't, I always say that you can't unscramble an egg that's been around since the 1960s, the auto pack. We have to make a larger omelet. That's what we need to do.
Well, you're export tariffing electricity here. You've called for possibly export tariffing crude. I wonder, what is your message to Premier Smith of Alberta, who's staunchly opposed to that idea?
Well, that's strictly up to Premier Smith. I have no jurisdiction in Alberta. That will be up to Premier Smith. But Americans have to remember, President Trump, I should say, President Trump should remember that Alberta ships 4.3 million barrels a day down to the U.S. And there's nothing more than I'd want to do is send more energy, more critical minerals, rather than raise tariffs. I don't believe in protectionism with your two closest friends and allies in the entire world. As we're going back and forth at each other, China's ramping up every single day in the critical minerals, and they've cut the U.S. off for any critical minerals for their military. We have it. Ontario has more critical minerals than anywhere in the world. And who do I want to give it to? I want to give it to our closest friends and allies, the U.S.
Well, when we're considering what commodities Ontario does have, you've threatened to cut off the supply of nickel from mines in Ontario. Is that a real threat? And again, what would make you act on that? What action from the Trump administration would see that response?
Well, 50% of the high-grade nickel, and I emphasize high-grade nickel in the U.S. for their military and their aerospace and manufacturing, comes from Ontario. Again, Kayleigh, I want to send more nickel, more high-grade nickel, more lithium, more cobalt. We have 33 of the most critical minerals that the whole world wants. I don't want to give them to anyone. I want to give them to our closest friend and allies. That's what I want to do. I want to create that damn can fortress.
This is interesting, and I wonder, Premier, what your thoughts are about President Trump's motivations. What's his obsession, if I can use that word, with Canada? Clearly, we've established that much more fentanyl by many thousands of pounds a year is going through Mexico. Have you heard that message from this White House, what it is that Canada could do to bring these tariffs down?
Well, your guess is as good as mine, Joe, because when the president said tighten up the border, we acted immediately to tighten up the border. I had the DEA in my office, I had the U.S. Border Patrol and Canadian Border Patrol, federal and state police, and we're doing that. We put over 10,000 personnel along our border, but it works both ways. I hate drugs. I can't stand 1 gram of fentanyl coming in, but where's the precursors coming from? From China. They gave me a report, our provincial police, equal to our state police, that hundreds of kilos of cocaine are coming from the southern border that were caught in the last couple of weeks. Illegal guns, illegals, opioids, fentanyl, everything. We have a shared border, and I know our Canadian and American Border Patrol folks work together. Our police work together. So we're going to do everything we can to stop the flow of drugs and illegals and guns coming back and forth across the border. But it has dropped drastically here in Canada.
Well, President Trump contends it's not just an issue with what's flowing over the border. This is also about making sure trade between the U.S. and Canada is more fair, hence the threat of reciprocal tariffs against things like lumber and dairy. Premier, should Canada consider lowering rates charged there so that it doesn't require a reciprocal tariff?
Well, Kaylee, I'll tell you the facts. You take the oil off the balance sheet because the U.S. needs it. The U.S. has a $56 billion surplus on manufacturing and services with Canada. So they have a surplus of $56 billion. I have no problem with that. That's fine. Let's grow the pie. As I say, grow the almond, make it larger. As as our foes, be it China, is declaring an economic war. They've been doing that, by the way, quietly for the last 10 years while everyone's been sleeping. And they're sitting back laughing at the two greatest allies, duking it up back and forth. It's unacceptable. Let's unite. We're stronger together. United we stand, divided we fall. We need to stand united together.
Thanks for joining us. Doug Ford, Ontario's Premier. Great to have you with us on Balance of Power. We should also note that Mark Carney is the former chair of Bloomberg's board of directors. Coming up on Balance of Power, House Republicans unveil a funding bill to avoid a shutdown at the end of this week. We've got details ahead from Republican Congressman Tim Walberg of Michigan. It's next on Balance of Power on Bloomberg TV and radio.
I think we'll see very little dissent. There's no appetite out there, and there should never be appetite to shut the federal government down. It costs more money to reopen, it hurts people, it puts our nation at risk. So I sincerely believe that we will pass this CR and that the Senate will take it up and pass it as well.
Republican Congressman Chuck Fleischmann of Tennessee on the early edition of Balance of Power, expressing confidence about averting a government shutdown after House Republican leaders unveiled a draft funding bill this weekend. And joining us now with the latest from Congress is Bloomberg's Megan Scully, who helps lead our coverage of Capitol Hill. So, Megan, it's not exactly a clean continuing resolution. There's specifically some components of this which Democrats aren't going to like. That's why we have questions about the vote count, knowing you're at least going to need Democrats in the Senate, if not the House, too.
Absolutely. So it's looking like Democrats are holding strong in the House. You know, obviously we won't know until they actually cast the votes. But in opposing this legislation, Republicans have probably 2 votes to spare. We know Tom Massey is a no. He's usually somebody who stands by his no, as opposed to others who we have seen be persuaded otherwise in the run-up to a vote, particularly when the president gives them a call walking into the chamber. So that leaves them one. And is there that one out there to vote down this bill? It's looking probably not. Definitely not. No one is emerging as the likely one. So then if it does pass, we look to the Senate, and they're going to need 7, maybe 8, because Rand Paul is a no there, to overcome a filibuster, which would be expected. So John Fetterman would be behind it, a Democrat from Pennsylvania. Where are the others? There is not, as the congressman said, there really isn't an appetite in either party for a shutdown. But this bill doesn't do the things that Democrats wanted it to do, namely holding Doge to account, putting some constraints on Elon Musk. It does not do that.
Is it just a different reality, though, for Democrats in the Senate, knowing that that's the vote that would prompt the shutdown? You can get away with a lot in the House right now, but if John Thune needs 8 Democrats, can he find them?
Yeah, so it's one of those things you could sort of fudge it, right? And Susan Collins does this all the time, where you say, well, I voted for the procedure, so I voted to end the filibuster, but then I voted against the legislation, which would only need a 50-vote majority.
I voted for it before I voted against it, Megan?
Yes, so it's a little tap dancing that they like to do. They might be able to find the votes there. If they don't, then what we anticipate is a very short-term CR, something in the order of a week or 2, and they try to hash out some kind of a compromise.
Well, I'll tell you, this is going to be interesting to figure out together here with the help of Bloomberg's Megan Scully. Thank you, Megan. For more, we turn to Capitol Hill, talk with someone who's in the middle of all this. Republican Congressman Tim Walberg of Michigan is joining us. Congressman, it's great to have you on Bloomberg TV and radio. The countdown clocks are not on TVs. Nobody seems to think we really are going to shut down. Do we run the risk of sleepwalking into a shutdown on Friday?
Well, I hope not. I don't think we need to. I mean, you just have to go back to December with the CR we're presently under. All the Democrats in the House voted for it. We've changed nothing to speak of other than moving some community projects that we don't want to fund twice and taking some of those dollars and putting them toward things that I would hope that Democrats would want to support, even though Hakeem Jeffries told them this past Friday to vote against the bill. They were very supportive of making sure that bureaucrats were not laid off, but now they're willing to do something even more strongly committed to hurting not only the bureaucrats, but Social Security recipients, Medicare, Medicaid recipients as well. In the end, I think we're going to pass it because, frankly, it's what's needed. It is a true clean CR with just a few revisions in it, using present dollars. But it does what's necessary to keep the government open, keep Medicare recipients receiving what they need, Social Security recipients, Medicaid recipients, and by the way, it also gives the largest pay increase to junior enlisted military in 40 years. And I think that's something that's necessary. And so I believe ultimately we're going to get this out because we got to go to a bigger issue, and that's reconciliation for a tax cut.
Well, Congressman, just quickly following up on your point about Democrats, they argued they would be more supportive of a measure like this if it had constraints on the ability of those in the executive branch, President Trump and Elon Musk, to decide how the appropriated money is actually appropriated. Without that kind of language in this bill, can you guarantee that they will spend it as Congress has outlined?
Well, I guess I need to ask a question first. Would Democrats allowed us to withhold our votes until Biden assured us that he wouldn't spend it the way we didn't want him to spend it? That's ridiculous. They know it is. It's a false argument. What goes on in the White House will be controlled by the President of the United States. And Donald Trump is not a shrinking violet. When he wants to spend something that is appropriated for him, he will do it.
We noticed that, Congressman. We should let our viewers and listeners know that you chair the House Education Committee. And, of course, the president has made no secret about his desire to sunset the Education Department. If he achieves that goal, I guess with or without the help of Congress, will you and the Speaker sunset the Education Committee?
Well, of course, that takes votes again. It takes votes on both sides of the Capitol. And right now, I don't think there are 60 votes to abolish the Department of Education. But the President and my committee and our Ways and Means Committee can do significant things to right-size, to depower certain parts of the Department of Education, to force the bureaucrats who are over there to get things done that really speaks to quality education. And that's what we're going to be committed to with the Secretary of Education, Linda McMahon. We've had that conversation. She knows what a TKO or a KO means, and we may have to do some of that. But in the end, it comes as a result of Congress that put the Department of Education in place back in 1979. If we're going to abolish it, it will come through Congress. But I certainly will do what I can to make sure that states have more control. When you get back really to the nub of it, our biggest concern is with the students, the parents, and the teachers. We get those three things working right, regardless of what is in place as far as the department or what laws are in place. We get those things, the student, the parent, and the educator, those things working right, will do just fine.
Well, something that didn't do just fine today, at least if you were long, is the equity market, Congressman. And before we let you go, we just got a statement from the White House talking about a divergence between the animal spirits of the stock market and what's in store for the economy in the medium to long term. What would you tell your constituents that might be looking at their portfolio today or are worried about keeping their job about what they might have to endure in the near term for the sake of that medium to long term?
Well, first I'd say hang on a bit. Take a deep breath. This president has been known to succeed. His last term was very successful. Right now, he has told the people exactly what made 77 million people vote for him, the largest in history, that he would restructure government, he'd right-size it, he would reduce the size of government, and he'd give control back to the people. That is an aggressive act, and there certainly will be some upheaval that takes place. But I think if they bide the course, and take that deep breath and not listen to Democrats that are talking gloom and doom. Remember what we just came through with 4 years of inflation that shouldn't have been there except for government overspending. With what the president is doing around the world as well as the United States, I think in the end, I would bet on his success over what the pundits are talking about.
All right, Republican Congressman Tim Walberg of Michigan, thank you for your time. Now, as I was alluding to, tech stocks specifically experienced their biggest one-day plunge since 2022, with the NASDAQ dropping a bunch today. A big drag was Tesla, suffering its worst day since 2020. And joining us now with the latest is Bloomberg technology reporter Jackie Davalos. So, Jackie, interesting to see moves like this on any day, but especially a day when tech executives go to the White House to meet with the president.
That's exactly right. And that's where really a lot of this uncertainty is actually hanging in. What is going to happen to tariff policy, manufacturing policy? That has big implications for a lot of the chip makers, especially the domestic ones that, of course, President Donald Trump has said he wants to boost. When you look at some of the other names, of course, this is partially related to the broader route we're seeing in the market. But you mentioned a couple names as well that also have their own problems going on. You have Tesla, NVIDIA, Apple's Siri delay. Then you have NVIDIA's concerns about DeepSeek and whether that chip policy is going to dent its sales. And then, of course, Tesla, with Elon Musk's politics perhaps denting sales, those growth prospects are no longer what they were.
So you're looking at a lot of broken charts here in a market that may not actually rebound very quickly. I suppose if the president said he was doing away with all the tariffs, that might make a dent here. But how troubling are the losses in tech to see a round trip like this? Tesla, you mentioned, down 50%, more than that from its peak.
Well, of course, you have to look at what is actually going on with the fundamentals. And I think there are signs that there are weaknesses underlying a lot of the exuberance that we've seen with some of the growth narrative driving the Magnificent Seven stocks. All of those seven were down on the day, including those that you might think are less prone to being vulnerable to, manufacturing or perhaps that trade policy, Meta, the software heavy names. But even as we look at Oracle today, it saw some massive swings after it reported actually, a miss in its third fiscal quarter results. You actually saw investors more excited about its outlook. Then you saw it tank again a little bit, as much as 2 to 3%. But a lot of this will have to hang on what President Trump says about domestic policy as well.
Really great to have you at the table. Thank you so much. Coming up, Bloomberg's Alex Steele sitting down with Energy Secretary Chris Wright in Houston. We'll bring you that conversation next on Balance of Power. This is Bloomberg TV and Radio.
Are you expecting a recession this year?
I hate to predict things like that. There is a period of transition. There are always periods of, it takes a little time.
There's going to be no recession in America. What there's going to be is global tariffs are going to come down. I would never bet on recession. No chance.
Are you worried about a recession? Maria Bartiromo asked you, and you kind of hesitated.
I'll tell you what, of course you hesitate. Who knows? All I know is this. We're going to take in hundreds of billions of dollars in tariffs, and we're going to become so rich, you're not going to know where to spend all that money, I'm telling you.
President Trump there on Air Force One after we heard from him earlier on Fox on Sunday morning. Then Commerce Secretary Howard Lutnick confident on that very same day the U.S. economy would avoid a recession. President Trump, on the other hand, not ruling anything out. Joining us now, Tom Orlik, chief economist at Bloomberg Economics. It's great to see you, Tom. Thanks for coming back to talk to us here. This is clearly a market that was, I guess, taking Donald Trump more seriously than Howard Lutnick over the weekend. How are we already talking about the R word in the administration that was supposed to bring growth?
So it's a great question, Joe. So I think before the inauguration, there were two possible paths that the Trump administration could take. The markets were betting it was going to be like the first term. Tax cuts, good for the markets. Regulation cuts, good for the markets. And a bunch of talk about tariffs, but really not enough to move the dial. The second possibility, and I think that is the world that we've realized we are now in, is that Trump would actually attempt to deliver on some of the sweeping reforms that he identified on the campaign trail. Huge tariff increases, huge spending cuts. Now, they might be the long-term solutions, a U.S. economy with a big trade deficit and rising debt needs. But I think what the markets are telling us today is before you get there, there's going to be some significant short-term costs.
Well, and we keep hearing on this program, Tom, that this is a negotiating tactic, that not all of these tariffs are going to be implemented. He's just trying to extract concessions from whatever trading partner it is that we're talking about. But is this not already impacting business and consumer decision-making in a way that will show up in the economy, regardless of whether or not the levies actually go into place for an extended period of time?
So I think that's a great question, Kaylee. And when it comes to tariffs as a negotiating tool, I think we need to think about the difference between big countries and small countries. Let's think about Colombia. Colombia refused to accept migrant flights from the United States. Trump said 25% tariffs. Colombia caved. No tariffs went into place. That's where tariffs can really work as a negotiating tool. Now let's think about China. Well, China is now almost as big as the US in economic terms. China doesn't want to be pushed around, so Trump says 20% tariffs as a negotiating tool, and what does President Xi say? Nothing. The tariffs roll on. President Xi knows that this is going to be painful for China, but it's also going to be painful for the US, painful for companies like Apple, painful for companies like Nvidia, and we're seeing that pain reflected in that 4% drop in the NASDAQ today.
Tom, at what point do we start taking the markets more seriously here in Washington, or is this just noise if the markets are overreacting? This is a president known to obsess over Wall Street who says he's not paying attention to the markets right now.
So everyone says they don't pay attention to the markets. Everyone really pays attention to the markets.
Yeah.
The example I come back to in my more optimistic moments is the Volcker shock at the beginning of the Reagan era. Reagan came in. Volcker realized that he needed to do something big to bring inflation under control. Interest rates were jacked up. That was really painful. The US suffered soaring unemployment, but it was the right thing to do for the long term. And the rest of Reagan's first term and all of his second term was a period of growth for the US economy. That's what the Trump administration hopes they're going to be delivering. The markets are signaling to them, well, we might get where you want in the long term, but in the short term, there's going to be a price to pay.
All right, Tom Orlik of Bloomberg Economics, thank you so much. Now, earlier this afternoon, our colleague Alex Steele had the chance to sit down with a member of the Trump administration, the Secretary of Energy, Chris Wright, and asked him about the jitters we're seeing in the market.
I don't know if you've seen, but it is a tough day in the market. Stocks were hit really hard. Oil's off 2%. S&P was off almost 3%. Growth fears and tariff fears directly impacting the market. What do you say?
Look, this president's a businessman. He's a negotiator, not in his career in politics and his career in business. And what has been the end result of that? Improvements for the American people. But we're in the midst of a deal right now. We're in the midst of negotiations. Trump is fighting every day to make conditions, business conditions, cost of living conditions better for Americans. I think that's the trajectory we're on, but you've always got uncertainty on the road there.
There's pain for gain, right? But like how long that pain lasts for can be really tricky, particularly when we're trying to actually invest.
Yeah, look, he's got two big goals on trade. Number one, but we've heard about, I don't think it's been talked about enough, is look, 100,000 or more premature deaths of mostly young Americans from fentanyl. He's massively motivated by that. Anyone who's been touched by a friend or a family friend that's seen a death from fentanyl, this is just heartbreaking. So he's trying to work with both of our neighbor to the south and our neighbor to the north to how can we go as far as we can to shut down the trafficking in fentanyl. I think it's hard to go too far in that direction. The other thing President Trump wants to do is have free trade but fair trade. You've heard him talk about reciprocal tariffs. You know, we have 250% tariffs to export, dairy products into Canada. That doesn't make any sense. That certainly hurts American dairy farmers. So let's have the parties come together and together work to lower tariff barriers together and have reciprocal trade so it's fair to both sides.
All right, let's unpack that for a second. Going first to the trade barrier part, just example, when you have a tax and a tariff on Canadian imports of oil, won't that actually hurt consumers? Because all of a sudden you're going to have refiner margins are going to plummet, then you're going to have higher gasoline prices. Every analyst on the street is saying that.
They might be wrong.
What if they're right? What if they're right? I mean, we don't have that oil in the U.S., right? We don't have heavy oil, so we cannot refine it here.
Yes, it's good for that oil to come into our marketplace, and I suspect that market will continue coming into our marketplace.
Okay.
So look, there's uncertainty is unsettling, and that leads to a loss of confidence. That leads to fear. But look, life is long. This administration's been in 50 days. We've had 4 actions on LNG exports. We're getting rid of nonsense regulations on home appliances to make them lower cost and higher performing. There's so much positive going on. But yes, you're seeing the sausage making up close and personal.
Okay.
At the end of the day, we want a lower cost for Americans and expand opportunity for Americans, and I think that's what you'll see coming.
But what if the sausage becomes higher gasoline prices or diesel prices because of the tariffs?
Well, since President Trump was elected and since he was inaugurated, you've seen a decline in oil prices and a decline in gasoline prices. You saw them decline further today.
This is true. They're down about 17% oil prices since the peak back in January. But on the flip side, if I'm a driller, how do I drill more? Because I don't want to drill when oil's at 69.
So President Trump's worked hard to lower the cost of doing business in the United States. We had 4 years in the Biden administration where there was so many barriers and you never knew where the next one was coming. You can't get a permit on federal land. You can't build a gathering line. You can't, maybe you're not going to be able to export your natural gas. I don't want to drill if I'm not sure where it's going to go. We had all those things that artificially chilled investment, which means the break-even prices for the companies goes higher and higher. Trump's longer-term agenda is make it easier to invest in America, lower cost to produce oil, natural gas, electricity, manufactured products, everything in the United States. So I think you're going to see a lowering of the break-even, a lowering in the threshold at which it no longer makes sense to drill. But supply and demand will dictate prices for sure.
Sure, but on the flip side, if you have tariffs coming in on aluminum, steel, that will raise the break-even prices per well drilled.
Two motivations there. Number one, we've seen so much exporting of manufacturing jobs in the United States over the last 25 years, mostly to Asia, driven in large part by China. So he has a goal, I think a great goal, to reshore manufacturing in the United States. We can make heavy industry again in this country. But there's a transition time there for sure. But look, he's a negotiator. He's a businessman. He got elected to lower prices for American consumers. Do you think he's going to change his mind and say, no, I'm in favor of higher prices on American consumers? That's not where this administration's going.
It's just how long the pain will last. I think is really at the heart of the question. And as a CEO, I have not yet to meet a CEO here today that tells me they're going to drill more because they're worried about the uncertainty.
Uncertainty's unsettling. Uncertainty's unsettling.
You know, you were a CEO of an oil company.
Absolutely. But look, you got to give it a little bit of time. We saw the results last time. Trump was in 4 years in his first term. Trump 45. There was a lot of fear there. What happened? Inflation averaged below 2%. Energy prices came down. Wages grew in America, particularly for blue-collar, working-class people. It's the same agenda. It's the same agenda this time.
So let's go to the IRA for a second. You guys are reviewing, of course, what parts of the IRA will stay. Tax credits, everyone I talk to loves the tax credits. They love them. They love them for hydrogen. They love them for wind. They love them for solar. Will you keep those? Will the administration keep them?
Everybody loves to get other people's money, you know, whether it's business or consumers or whatever. But look where that's led us, Alex. Look where that's led us. Almost a $2 trillion deficit in the last year of the Biden administration in peacetime with relatively low unemployment. That's just unsustainable. If you shovel money out the door, everyone can get a sugar high, but you have to pay the piper. So there's, of course, politics, and it's the House and the Senate will decide what from the IRA bill stays and what goes.
Bloomberg's Alex Steele bringing us a great conversation with the new Energy Secretary, Chris Wright, at CERAWeek in Houston. Coming up, we'll have a look at how the Trump administration is responding to the tariff fallout and the administration's plans to cut spending. Yes, the DOGE, our signature panel, on the way next on the Monday edition of Balance of Power. Rick Davis and Jeannie Shanzena will be with us on Bloomberg TV and radio.
frankly, I can't believe I'm here doing this. It's kind of bizarre, but I kind of think that we've got this enormous federal budget deficit, and it's a $2 trillion deficit. It keeps growing. Our interest payments are higher than our Defense Department budget. That's I think was the real wake-up call for me.
Elon Musk on Fox Business earlier this afternoon talking about his current role in the administration. And joining us now for more here on Bloomberg TV and radio is our signature panel, Bloomberg Politics contributors Rick Davis, Stone Court Capital partner and Republican strategist, alongside Jeannie Sheehan Zaino, Democratic analyst and senior democracy fellow at the Center for the Study of the Presidency and Congress. Welcome to you both. Jeannie, in that interview, Elon Musk told Larry Kudlow when he was talking about his concern about the U.S. potentially going bankrupt that entitlements need to be cut, Social Security and Medicare, which is something that the president himself has said should not be touched. This, of course, after last week with Donald Trump reportedly telling cabinet officials that it's up to them to implement cuts, not up to Elon Musk. Do you sense any trouble in paradise here?
I absolutely do, if only because we are hearing mixed messages out of this administration. You know, it wasn't long ago that we were critiquing Joe Biden's administration for mixed messages, and here's Donald Trump. You've got a Commerce Secretary saying absolutely no recession, the president saying he can't say no to that idea. You've got Elon Musk talking about the need to cut entitlements, and by the way, he's mathematically correct on that, and yet you've got a president who not only has taken that off the table, but said, I want to give more tax cuts. And so, you know, the messaging from this administration, and we talk about Donald Trump as this great communicator, and he is in some ways, but the mixed messages are doing a huge and enormous harm to them politically and to the markets and the economy.
What are your thoughts on this? Rick, the Commerce Secretary, Howard Lutnick, is out talking growth. We're not going to have a recession. Donald Trump won't rule one out. Elon Musk just talked about keeping America from going bankrupt. Which one is it?
Well, I'm not a conspiracy theorist. Believe me.
I don't know.
But is Elon Musk a Democrat? I mean, like, who has done more damage to the Trump administration since the inaugural than Elon Musk? Wow. I mean, he has inflamed Republican constituencies all over the country over his cuts in their pet projects. He's alienated Republicans on the Hill against the administration, who are frustrated that they have no say. He's single-handedly disrupted the cabinet of the presidents, you know, where they have shouting matches at the first cabinet meeting. I mean, like, and I actually like the fact that he's trying to cut the growth of federal government. I think that strategy is great. But all of the other things just seem to be undermining the current administration. Not that they are all speaking with a unified voice. They're not. Right. But he certainly stands out as the sort of grinder-in-chief of this administration. If anyone is pointing to a recession, it's Elon Musk.
Well, and then you have his own personal businesses that he's associated with. Tesla stock down more than 15% today, now at the lowest since October. You had a Starship blow up in the airspace last week. You had a cyber attack, at least according to Elon Musk, of X today. Larry Kudlow asked him, Rick, how hard it is to run his businesses while doing this Doge work. He says he's doing it with great difficulty. At some point, does this become unsustainable when we're talking about key man risk in so many different areas, including perhaps in the Department of Government Efficiency?
Yeah, it's a really good question. I think that the fact that Larry Kudlow brought it up in the interview, kudos to him, because it's like what every investor in Tesla and Starlink and SpaceX would be asking, right? What are you doing in X? What are you doing to make our companies and our investments secure at a time when the markets overall are really pressured? And so I think it's a legitimate question. I mean, look, it's not outside the strategy to have Starships blowing up. That's how they learn what they're doing. But the reality is that all of those businesses are stressed right now, not least of which because of the macro environment that has been created by the Trump administration being all over the map on things like tariffs and this whole issue of growth that you talk about. Where's the evidence? I mean, you know, we're seeing job loss, immigration by deporting all these folks. You're taking a cap on growth. You know, and obviously the trade policy is also exacerbating that. So I mean, it's very unnerving for Republicans all over town to see this current outcome.
What's happening to Tesla's brand right now, Jeannie? What do you make of this? The stock is down over 50% from its recent high following the election of Donald Trump, down by more than half. We saw protests over the weekend at some Tesla dealerships, if I can call them that. You know, you've got celebrities posting on their getting rid of Tesla cars. How much of this concern about sales has to do with politics?
It looks like much of it. And, you know, the reality is that in these 6 weeks, we have learned that while Elon Musk is a brilliant businessman and he is really, really good at making money, his political acumen is probably not all that it's cracked up to be. And so, you know, Donald Trump, of course, needed him to help him fund his campaign and to reach a large audience, and he has done that. But putting him in charge and up front in terms of these Doge cuts has been something of a disaster. And I think, you know, one of the visions that will go down after all of this and will stay with us is the vision of him holding up that chainsaw. And even Donald Trump is saying, no more chainsaws. We're not going to do that anymore. So it is bad politics. And that's what Rick was just talking about. It's bad politics for the Republicans. It's bad politics for Donald Trump. And Steve Bannon, of all people, has been screaming this from the rafters, and he's right. Even if you don't like Steve Bannon, his political sort of sense is accurate on this one.
Mm-hmm. It just strikes me that we just got a second statement out from the White House about some of the market activity we saw today. Jeannie, this one in part reads, President Trump delivered historic job, wage, and investment growth in his first term and is set to do so again in his second term. But are you surprised we haven't heard from the man himself who, at least in his first term, so frequently touted the stock market? Where is he in defense of U.S. exceptionalism and equity prices?
Yeah, it is stunning. I mean, he's out talking about everything except the numbers and except the reality. And I think what we're seeing is Donald Trump really wants to use this tariff policy he's been so long committed to. But the reality of the market and so much else, consumer sentiment, all of these numbers is telling him that he shouldn't. And so I almost feel we're watching, you know, the inside of Donald Trump fight with itself. You know, should I or shouldn't I? We've seen this back and forth, and it continues to go on. I think at some point he will pull the plug on it, but I think he's probably wrestling with that in the White House this very minute, so he doesn't want to come out and talk about that at the very least.
What do you make of this? Somebody decided today we need to kick out a statement after the markets close. Rick, this is a White House spokesman, to Kaylee's point, not the president, who says President Trump delivered historic job, wage, and investment growth in his first term and is set to do so again in his second term. Do we not need a little more than that?
Yeah, that really doesn't address anything that happened this week or last week with the markets. And you could make an argument that the last thing the White House should be doing is talking about the markets. I mean, what goes up goes down and back and forth. We used to complain all the time about Joe Biden not talking about the record markets that he had. I mean, he had good news to talk about and wouldn't do it. So I don't blame him for sort of being a little bit sketchy. I mean, honestly, I'd prefer the White House not to get into the ups and downs of the markets. But that's not the case.
Well, we'll keep tabs on this. Maybe he'll speak about it tomorrow. Rick Davis and Jeannie Shanzano, thank you so much. Our great panel to get us started on this Monday. Coming up, U.S. and Ukrainian officials are set to meet in Saudi Arabia to discuss initial ceasefire agreements, at least possible agreements with Russia. We'll look ahead to those conversations next on Balance of Power on Bloomberg TV and radio.
just about have. I mean, we really just about have. And we want to do anything we can to get Ukraine to be serious about getting something done. You know, I say they don't have the cards. Nobody really has the cards. Russia doesn't have the cards. They don't have them. What you have to do is you have to make a deal.
President Trump on Air Force One yesterday talking with reporters, announcing, if you had trouble hearing on the radio, he's largely lifted the freeze on U.S. intelligence sharing with Ukraine. This comes as officials from both countries are set to meet in Saudi Arabia to discuss the timing and scope of an initial ceasefire with Russia. Kayleigh, Secretary of State Marco Rubio set to lead those talks tomorrow.
Alongside National Security Advisor Mike Waltz, we'll be keeping you apprised of that tomorrow, plus what's expected in Congress. The House could vote on a continuing resolution to fund the government passed this weekend. And you'll have more coverage of that in the Washington edition newsletter you can find on the terminal and online.
We'll see you back here tomorrow. Thanks for joining us on Balance of Power. This is Bloomberg TV and Radio.
This has not been a great time for genius. The people who claim to have it do not seem to qualify for it. The people who diagnose it others seem to have a very, very narrow definition in mind. And the people we can all agree are stone-cold geniuses always seem to have a dark side. I read in Bloomberg Businessweek about the biggest crypto genius of them all, Sam Bankman-Fried. At his peak, he was worth like $26 billion. And that was before he was accused of running one of the biggest frauds in American history. His defense is that he is not a criminal, essentially, just inept. What does it mean to have genius in work, in the marketplace, in life? And who is even to say? To make anything simple takes actual genius, and we're gonna try to live up to that name together tonight. It's the Business Week Show. Hello, I am Max Abelson, and I'm not a genius, just a regular, like slightly above average journalist who has spent about the last decade and a half here at Bloomberg News, and sometimes our magazine, Bloomberg Businessweek, writing about Wall Street's money and power. And what that means is I write about ambition and ownership and imagination and survival and risk and second acts and, of course, genius. Tonight, and in the weeks to come, we are going to be talking about those things at this table with people whose lives and careers and ideas are big or interesting or just really fun. So, welcome. This is the Business Week Show, and it's starting right now. If you consider yourself a master of Wall Street, a connoisseur of investing, a soothsaying financial genius, a brilliant portfolio manager, our guest has very bad news for you. Burt Malkiel's book, A Random Walk Down Wall Street, 50 years ago, had a clear and vivid message, which was that Wall Street genius is really just an illusion, and that professionals in pinstripe suits, at the end of the day, are no better than naked animals. It was a genius and radical idea, because what he had to say is that you should forget them and just buy and hold clear, boring, basic, low-cost index funds. He is here to tell us about it. Burt Malkiel, welcome to the show.
Thank you very much. Glad to be here.
Your book is actually, it's pretty funny. It's a little saucy sometimes, your book. I mean, you say no one in finance can really forecast the future, or at least they can't do it successfully, consistently. You know, I think you use the word genius in quotation marks, and you give it to Ponzi schemers and whatnot. Right now, are there any actual individual geniuses on Wall Street? You know, real human geniuses, maybe AI is the genius we've been all waiting for. Can you identify any current geniuses on Wall Street right now?
Well, as you know, I put genius in quotes because I'm not sure there are geniuses in the market. And I've always said I would much rather be lucky than smart. Are there some hedge fund people who have, in fact, made a lot of money? George Soros bet against the British pound and made a lot of money. There were people who sold short in 2000 and made a lot of money. But I am not willing to say that they were geniuses. I want to say that they were lucky, because for every one of them, there was a hedge fund that in fact lost money. No, I don't think there are geniuses. I think there are a lot of very smart people on Wall Street, but it is not possible to predict the future. And, you know, it's kind of very interesting how you talk about AI. I recently had to give a presentation on the economic outlook. And I thought, you know, just for kicks, I will go to ChatGPT and I will ask, can you give me an outline of what I should say? And actually, ChatGPT gave me a wonderful answer. It was a one-sentence answer. I cannot predict the future.
It might not necessarily qualify as genius, but you're able to write about Wall Street with clarity, which is really unusual because Wall Street, and I suffer from this myself, you speak to Wall Street executives and they absolutely fetishize complexity. Why does Wall Street like to make things sound so complicated? Is there something sinister or something that has to do with the ego?
Whether it's sinister, but this is a very highly paid profession. And someone like me who says, listen, don't listen to anybody, just buy a simple index fund and keep on investing period after period. If I'm charging you 2% a year to manage your money, I want you to think you can't do it yourself. So sure, you've got a vested interest. This is a very highly paid profession. These guys do very, very well. Is that sinister? I don't know. You call it sinister, anything you want, but is there an incentive to make it seem like it's very complicated, that ordinary people can't do it themselves? I think that's absolutely right.
The honest truth is, it's not necessarily that I think that the aura of complexity in Wall Street is coming from a sinister place. More like it makes me feel bad or makes me feel dumb, and that I appreciate that your book is sort of written so that I can understand it. But it does make me think about exclusion in a small way, because so many stocks are owned by so few people in this country, because the very wealthiest people in America have such giant portfolios, that when the stock market goes up, inequality goes up too. Is there anything that can be done to change that in the future?
One of the things that's impressed me throughout my life is really how capable so many people are. And I think to the extent that we can eliminate discrimination, I mean, for example, opening up our jobs, our economic opportunities to women has been a very good thing, and I think has been generally helpful for women. I think it's the same sort of thing in terms of racial discrimination. I am absolutely convinced that rather than there being just a small coterie of geniuses, that intelligence is very widely distributed in our population. And so my own sense would be the more we can do with education, the better.
Why is it that we need geniuses, or really just the concept of genius? Is it like the way we need heroes and heroism, to help just explain the world and justify?
I think we need innovators, and I'm not saying that innovation isn't good. We absolutely do, but I'm not going to call them geniuses. And Jack Bogle would certainly never have called himself a genius. But I think we do need innovators. There will undoubtedly be financial products that are actually good for one. I'm not a fan of Bitcoin. I don't think, I don't recommend that any investor buy it. But will there be improvements in the payment system in the future? And will there be digital currencies in the future that are stable and that are useful, as opposed to something that goes up $1,000 or down $1,000 in a day? Absolutely. And there's room for much more innovation in finance. So I think there will be innovation. There should be innovation. I just wouldn't call it genius.
That was great. Burt Malkiel, thank you so much.
Thank you so much. I really enjoyed our conversation.
Stay tuned, because next we have a very far out genius. There is no one way to be a genius. You could be dreamy and far out. You could be scrupulous and scientific. You could work within the institutional establishment, or you could honor indigenous wisdom. All of those descriptions apply to this guest. Moraba Jah is a space environmentalist, an astrodynamicist, a spacecraft navigator, and the first African-American professor of aerospace engineering at the University of Texas. Last year, the MacArthur Foundation gave him a fellowship that is informally known as a Genius Grant. So, if you want, you could call him a genius, you could call him Professor Jah, but you'd rather you call him Moraba. So, Moraba, welcome.
Great to be here, my brother. Thank you so much.
Really glad to have you. I really love the phrase, a stroke of genius. You were in Alaska with your family in a hotel one morning. I think you were taking a shower. And you had this feeling and this vision that kind of struck you. And you know, whether or not it has anything at all to do with genius, tell us about that moment.
You know, I'm in the shower, and I felt a presence. And in my mind's eye, I saw flashes of scenes from like history and how in the beginning, whatever that means, it seems like there was this intergenerational contract of stewardship with the planet, but that humanity over time has mostly abandoned that intergenerational contract of stewardship and has forgotten about how interconnected things are.
Did that moment change the life you led and the work that you do?
Absolutely. So one of the people that I really look up to is Jane Goodall. I watched something about Jane where she said that she went to a meeting as a scientist and she left that meeting an activist. In very similar ways, I went to Anchorage, kind of just this scientist, and I came back both a scientist and now this space environmentalist activist to really try to, I guess, really showcase how we need to protect orbital space.
If there's a kind of genius that means something to you, something that you would want to live up to, or something you'd want to recognize in yourself, what would that kind of genius like actually look like?
To me, the best kind of genius is simply allowing myself to let the universe go through me and, I guess, use me as some sort of vehicle for the work that I'm trying to do. And if I can keep myself kind of in the moment and in a place of compassion and empathy, then I think genius is just what comes through when you allow that to happen.
There's more garbage orbiting the Earth than there are working satellites. You now work not just to make sure that all that stuff is properly tracked, but to be an evangelist for expanding the way we think about environmental protection so that it includes all that stuff. What can those of us who are not scientists, what can we do to help you?
Every day, the technologies that we have are more and more reliant on these robots in the space that we call satellites. And we're tracking about 50,000 things ranging in size from a cell phone to the space station. 5,000 are working and everything else is garbage. So that's like 90% of the stuff is trash. The thing that most people just don't realize is that these satellites that are providing these critical services and capabilities, position, navigation, timing, communications, internet with the Starlink satellites, right? Any of these things can get schwacked, that's the technical term, get schwacked by a piece of junk, and that's game over, and then you lose that capability. So I think more and more people just need to be aware that, oh, well, that space, that's somebody else's problem. No, it's our problem because our way of life, our technology is now going through this infrastructure.
There's a real stereotypical idea of genius that I'm thinking of a kind of solitary genius working by herself or himself off in a fun cabin, you know? What does it mean, what would it mean to be a genius collaborator?
Back in the times of like the Renaissance, people looked at folks like, Da Vinci, Michelangelo, and they said, okay, these are geniuses in their own right? And people say, well, how can anybody be like another one of those? Science has developed so much beyond those days that there's no way for somebody to be able to be, quote unquote, this Renaissance person that knows very deeply things in all these different fields. Like, those days are gone, okay? But to me, the real genius is recognizing where you bring in smart people from other fields that complement and augment your own to solve wicked problems.
Yeah, connectedness, connections with one another. But my understanding, though, from reading a little bit of your writing, is that you were, I think in your childhood, you felt really isolated.
I did, yeah. My mom was born in Haiti, and she was naturalized citizen. My father, Sierra Leone, naturalized citizen. They got divorced when I was very young, and yeah, my father was just very abusive. At the age of 7, he kidnapped me, and 9 days later, they found me in some apartment in the Bay Area, put me back on a plane to my mom, and my mom had, we had a cousin that lived in Caracas, and so we fled the country because my mom's like, I don't want your father to ever find you again. He never did physically again. But growing up in Venezuela, I felt very isolated. I felt very alone. I came into contact in this void with what seemed to feel like an ocean of infinite love and compassion. And then I realized, oh, I have a choice here. I can choose to meet my experiences with equal anger, or I can choose to act from a place of love and compassion and heal from my pain and make my healing be of service to others. And that's what I've chosen to do.
When the MacArthur Foundation, when they named you a fellow, they said it was because, they used a beautiful phrase, it's because you envision transparent and collaborative solutions for the Earth's orbital spheres. What are those solutions? And maybe when are they coming?
My inspiration for this comes from indigenous people, from traditional ecological knowledge, TEK, I call it ancient tech. And so for me, the vision of my future is seeing Western science and traditional ecological knowledge come together, not annihilate each other, but actually harmonize with each other, so that then that could be the way of the future, so that humanity does recognize interconnectedness, empathy, and stewardship.
Thank you so much for being here and sharing your story, sharing yourself.
Thank you, brother.
Truly enjoyed it.
Thank you.
Coming up next, a genius I would like to be when I grow up. Getting older is not easy, but the good news is time brings opportunities to become a more practiced, a more seasoned, a more you version of you. The guest who's sitting with me at this table is one of the most accomplished people I've ever met, and she is 17 years old. In 2021, Zaila Avantgarde won the Scripps National Spelling Bee, but She considers herself not so much a speller as a basketball player, and she has multiple Guinness World Records in juggling. A few weeks ago, this young genius started the 11th grade. Zaila, so glad you're here.
Thanks for having me.
Truth is, we're all super different. We all have our own gifts. We all have our own limitations. When and how did you come to realize how special you are?
So that's a complicated question, I would say, because I didn't so much realize, I realized I was special, but I became special through a process of like training and stuff. If you look back on it, like I wouldn't say I popped out the womb like a genius or something like that. It's like when people would start to stop and look at me while I was dribbling or practicing at a court, people like stop and look because, hey, look at this cute little girl. I was very small when I was that age. So this cute little girl dribbling 2 balls and doing all this between the legs, step backs into shots and stuff. So pretty early on, I realized that, yeah, I might be a little bit different than the average kid.
You won this like completely beloved national competition, but it's something that I think you no longer consider your main passion, or maybe you didn't even consider it your main passion then. What does basketball make you feel that spelling doesn't?
I would say basketball gives me even more of like the competitive rush. Like I just really love to compete and stuff. So like, and like spelling is more like, yes, it's not really like person-to-person competition. It's more like person versus dictionary, which is something you hear a lot from spelling bee people. It's like it's me versus the dictionary, because that's where the words are coming from. Whereas with basketball, it's more like physical competition, like, oh, I made it between the legs and there's this girl on me and I have to shield her off, and it's like more tangible competition as opposed to the more philosophical competition of spelling.
I want to ask you about a very different kind of genius. There's this billionaire named Sam Bankman-Fried. Think you've heard of him?
Of course.
Widely considered to be the world's, great crypto genius before he was then charged with fraud, which he has denied. How should the rest of us look at people who get called geniuses, but maybe they still have shortcomings, just like everybody else?
Sometimes I feel like the term genius is like nowadays it's so loaded. Like it's not, maybe it's like, oh, it doesn't just mean, oh, look at her, she's a genius, like she's so smart or whatever. But like then like if you're labeled with that like your whole life, that kind of like puts a pressure on you. Like maybe once upon a time, like I listened to a podcast about Sam Bankman-Fried, but I don't know him personally, so I can't speak for him. But hypothetically, like he's like his parents are like, oh my God, you're so smart. He goes to accelerated programs in school, and that's just putting pressure from a very early age. Like I'm a genius. I have to be a genius. I have to always be a genius. So I always feel like people like some of the scammers and stuff should get maybe just a little bit of sympathy, just a little bit, because they are like causing all sorts of trouble, because like they've been considered geniuses their whole life and they had a nice business plan or something, but then it didn't work out. And so what are they supposed to do? Go to all these people who say, oh, you're a genius. That just puts a little pressure on you to like give you that extra push you needed to try to maybe go into the murky waters of life.
The murky waters of life. I want to ask you one final question about pressure. I think that there is sometimes pressure in the United States, maybe everywhere, pressure on really smart people, genius or otherwise, to use their intelligence to like make a lot of money, to be successful. And like, I guess I'm thinking specifically about the finance industry and mathematicians, but it's true of the business world. You're smart, you go make money in business. Do you have a favorite company or an industry or like a job that appeals to you?
I mean, I'm not like super like make millions of dollars. I mean, if anybody who's watching or listening wants to give me millions of dollars, please hit me up. However, like I'm interested in going to neuroscience or maybe working for NASA or maybe being an NBA head coach. But I just realized I've never thought, how much money would I get for this? Because that's not really something like I think of, because you can make a lot of money, not to sound trite, but you can also be really miserable making a lot of money. So that's not even something I actually consider, like how much money will I make? I'll cross that bridge when it comes.
Zaila, you're gonna cross the bridge, you're gonna have a great time. I have had a great time talking to you. I'm thrilled you're here.
Thanks for having me.
When you ask geniuses, as I just did, what a genius is, or if we need geniuses, or if they're a genius, the answer you'll get will be genius. It turns out that there is not one way to be a genius of finance or of art or of language, just as there is not one way to think about genius itself. What matters is not what you call unusually high levels of intelligence or talent. What matters is what you do with it. Thank you so much for watching the first episode of the Business Week Show. We'll see you again for another one soon.
I am a completely virtuous person. I have no missing virtues. But I do wish I could sing.
People clearly tend to be impatient where they should be patient.
I waste the most money on champagne. I love champagne every day. Every day I have 2 glasses of champagne. That's my thing. 2 glasses of champagne every day.
Risk is everywhere. It is a risk to get out of bed, take a sip of coffee, step into the street, shake someone's hand, eat a tuna melt. Trust risk betrayal, authenticity risk rejection, and if you want to play it safe, doing nothing risks missing out on everything. We associate risk with what you might lose, but there is no winning in the marketplace without it. If anyone ever comes up to you and offers you something that is completely risk-free, buyer beware. Nothing ventured, nothing gained. I read this thing in Bloomberg Business Week about Silicon Valley Bank, which bought billions of dollars of bonds, a risk, and the value of those bonds fell, depositors went running out the door. The impact of that risk was one of the biggest bank failures in the history of this country. What does it feel like to take risk in business and in life? We're gonna try to find out from actual risk takers. It's a risk, we're gonna take it together, and we're gonna take it tonight. It's the Business Week Show. Welcome to the Business Week Show. Tonight, risk. The very idea of who gets to take financial risk in global markets and how they go about taking that risk, and then how they talk about that risk, changed thanks to tonight's first guest. In 2012, Jamie Rogozinski logged onto Reddit, he started a new page, and he called it Wall Street Bets. In the years that followed, it got millions of users. It sparked real frenzies in stocks like GameStop and AMC, and at one point, it got its own Super Bowl ad. But As you may imagine, things did not work out all that well for everyone, and Jamie is here tonight to tell us all about it. Jamie, seriously, thanks for being here.
Thanks a lot for having me.
Risk is a funny thing because it freaks some people out, me included, but there's also something about it that is so attractive and so tantalizing. Why have you been so drawn to it?
Risk is a funny thing because when people say risk, especially when you frame it that way, the implication is either there's an element of randomness, right, or that's the outcome can be very, very costly because it's either unlikely to pay out or the actual, chance of losing might be really costly. But the way that I see risk is really, if you're able to actually quantify those elements, it's really a price that you pay for an opportunity. The way that I look at risk in that sense, it's not that I'm attracted to these thrill seeks. It's, I think this is worth it, right? I think I can identify these are the probabilities or possibilities, and sometimes I can't, but at least I can map them out. And this is what the possible outcome is. And I'm like, let's do this.
Okay, let's do this. Let's really talk about that. Because what you're saying is you're really talking about what it means for something to be risky. When you started Wall Street Bets, the way you've talked about it is that you said you wanted a place where people could talk about risky ideas and they could talk about it kind of proudly, risky trade ideas. You were enabling other people to take risks. So can you tell us, like, what worries did you have at the time that things potentially could go wrong for them?
You know, my definition, my understanding and my position on risk has evolved, right? It's become clear as the years gone by. And early on, I justified this by saying, well, look, they're all adults. You have to be 18 in order to open up a brokerage. Same thing if you go to a casino, everyone can go through. And when I said I wanted to be able to discuss high risk, I wanted to discuss high risk, high return, right? It wasn't just high risk is throwing your money out the window and having it go away with 100% certainty. This was high risk with the possibility of making money. And those two obviously go hand in hand. There are some that are irresponsible with it, but I can't make myself responsible in much the same way that there's gambling addicts, right? But outside of that, what I start seeing is a learning process, much like the one that I personally went through. I lost tons of money, but I walked away with so much knowledge and understanding and hands-on experience that a textbook can never explain to you.
I want to ask you about someone who sort of counts as your really, really complete opposite, Jack Bogle. He was the founder of Vanguard. He helped popularize the very vanilla, very boring idea that if you're an investor, you can diversify your bets. He ended up popularizing the index fund. How did it feel that you, in some ways, were kind of singularly responsible for changing the way that just millions of people think about investing? What did that feel like?
It was humbling for sure. It was unexpected to see the enthusiasm. If I were to have predicted the outcome of it, it would have been people looking down at this particular type of activity. Secretly, it was almost a goal of mine. But the beauty of it is what conservative investors do, Bogle, Buffett, whatever it might be, is no different than what gamblers that literally go to sit at a roulette table do. The changes in the vision that Wall Street Bets were, it demystified the idea of finance to people that might otherwise think it's just Excel sheets and discounted cash flows.
You also took a different kind of risk, and you sued Reddit, and you lost. Will you tell us a little bit about what that felt like?
Terrible. Yeah, that was probably in the top 5 riskiest things, if not 3. I get kicked out, and the stubbornness behind Reddit, they never answered. I tried pleading and sorries and threats and back channels and lawyers. They would just be like, no, you're done here. They got to a point where they said, no, we're done trying to negotiate. We want to take you to court with this. And I said, all right, well, I guess now I have to actually go to court. And so this is when I decided to countersue them.
So it didn't feel like a risk. It felt like just something you had to do.
I needed to do it for closure. I still had a chip on my shoulder, and I couldn't fully commit to anything. And I'd still kind of look at, every time I'd see Wall Street Bets on the news or people talking about it, it would still have that kind of sour feeling. And so, and I needed to get past that. And I'm like, look, if I lose, I lose. And then it is what it is. And it would have been the fight of the century for me, or my lifetime for me. But but then I can be at peace. Right?
Is that how you feel now? Are you at peace?
Unfortunately not, because it's not over yet. I would have liked I would have liked for the judge to have been like, no, dude, you lose and it's over. You know, I don't want to cover too much on the legal side of things, but the judge, let's just say they left plenty of room for maneuvering. So unfortunately, it's not over.
I was told, I really don't know what it is. I was told you brought an object, I think, that maybe encapsulates risk. I think Natasha, my colleague, is gonna pass it to us, I do believe. What is this? Okay. All right, tell us about this guy.
You're familiar with this?
Yeah, remind me.
So this is from a meme, right? It says, "This is fine." It's a little dog, and this encapsulates so much of both my life and my ability to handle emotions, especially with the volatility of markets, but also life in general. It gives you so many ups and downs and so many ways to go through it. Oftentimes, when faced with adversity, my composure resembles this. It's like, yeah, don't worry about it.
Can I see him?
Yeah, absolutely.
All right, well, this is mine now. Jamie, thank you so much for being here. Loved having you.
Not a problem. Thank you very much for having me.
We have more risk coming up next. When executives across corporate America want to take a little risk or manage it, they often turn to Wall Street. And there is no entity on Wall Street with a more interesting relationship to risk, including Wall Street bets, than the company Goldman Sachs. And when I think about Goldman, which I do often because I'm a Wall Street reporter, my mind often turns to Maeve DuVally. Maeve is a longtime media executive and until recently was a managing director at Goldman. The truth of the matter is, we have a cordial relationship, but a kind of antagonistic one because it's my job to report on Wall Street's money and power, and it's her job to push back. Recently, I finished her wonderful memoir, Maeve Rising, which is an account of her journey from being a lonely and angry person to the woman who is sitting at this table with me right now. Maeve DuVally, welcome.
Max, thanks for having me. You know, I would say we don't have a antagonistic relationship. I would say that we've locked horns through the years.
Okay.
Is that a better characterization?
I think that's a better characterization, but I'm going to ask you in just a couple of minutes about all kinds of risks that you have taken,
okay,
personally and professionally.
Sure.
But I feel like we should start first things first.
Yep.
Why is risk, which is really, I mean, it's just a fancy way of saying basically the things that can go wrong. Why is risk so important to the work that happens on Wall Street?
Well, from a market perspective, obviously managing market risk, managing operational risk that somebody pushes a button they're not supposed to, and the trade that happens is bigger than it was supposed to be. Those are obvious risks. And you know, there's also kind of macro risk, right? That a central bank does something that people weren't expecting. But the kind of risk that I manage, and incidentally, everybody at Goldman Sachs is taught they have to manage, is reputational risk.
Okay, so I want to talk about 2018. I think my favorite page of your book. You put on makeup at the office for the first time. What I really want to ask about is, like, tell me about the day. Like, what do you remember in full about that day in 2018?
Well, it was the day of the Knight Bagehot Fellowship dinner, which you've probably been to. Knight Bagehot Fellowship is a fellowship for mid-career financial journalists at Columbia University. I'm a alumni of that program and also on the board of Knight Bagehot Fellowship. It's really a nice gathering. I usually look forward to the dinner, but sometime early that afternoon, I literally had this overwhelming feeling and desire that I needed to wear makeup to the event that evening. And once I had that thought, I couldn't get it out of my mind. And I bolted out the door and walked a third of a mile to the closest Sephora and bought a bunch of makeup, which I put on at the end of the day. And I went to that dinner with some makeup on for the first time.
You put on the makeup, you end up kind of negotiating with yourself. And you say to yourself that you basically have this barrel of femininity, and you think, like, should I just keep the lid on? You know, should I just keep the lid on? What would you have risked if you had done that?
I think that would have been impossible, but if I did that, I would have been miserable.
I was wondering when I read your book how it felt to kind of risk your male privilege. You were risking your male privilege in a male-dominated industry.
I'm certain I had male privilege, and I'm certain through the years I exercised male privilege, but I wasn't really consciously aware of it. And to be perfectly honest, it's not something that really matters to me.
When it's time for you to choose a name, you pick one that means she who intoxicates.
Yep.
Which blew me away when I read it, because right before, I mean months before, you stopped drinking. You stopped drinking. Why did you quit?
Well, I had a series of progressively bad bottoms. My last bottom, which was in January of 2018, I holed myself up in an apartment. I only left to get alcohol. I drank around the clock, and I made an attempt on my life. So if I continued drinking, I'm convinced that I would have killed myself. After that episode, I made a decision that I wanted to live. And I knew if I wanted to live, I had to stop drinking.
Look, I mean, we have a professional relationship, so part of me feels like it's hard to say this, but it's also hard not to say it. You know, I'm glad you made that decision. A lot of people who are miserable, they don't get out of their misery.
Yeah.
You know, they stay there.
So the reality is there are a lot of drug addicts and alcoholics in the world, and the vast majority of them do not get sober and do not get clean. And they die alcoholic and addict deaths. That's the reality. So those of us who have made it to recovery, don't take it for granted, number one, and two, realize that it was a gift. And it's a gift that has to be nourished all the time, because if you take it for granted, you're going to wind up right back on